It just goes to show that there is a very narrow line about whether there is a sort of a negative issue tied to fighting this president when it comes to Fed independence, or whether it is the appropriate thing. And it is unclear about how it's perceived. It's clear where he weighted on this.
Congressman Hill joining us in about 50 minutes' time. Do not miss that conversation. Who remembers the family photo of the G7 in the south of Italy in the summer? And Anne-Marie was down there and she said, how many of these people are going to be left in 6 months? We'll count. Up next on the programme, Eric Nelson of Wells Fargo.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jay.
Good evening to all of you. Today 7th of January 2025. Welcome once again to this live analysis. Start करते हैं. मैं level थोड़ा से बता दे रहा हूँ. Not available on live stream continuously, so just describe the level. ऑयल को देखोगे कल की लेवल है, ऊपर एक रेजिस्टेंस जरूर था यहाँ पर, कल याद होगा आप लोगों को. मार्केट ने काफ़ी वॉलेटिलिटी करी तो वो लेवल अब हमारे काम का नहीं है. ऊपर कोई रेजिस्टेंस नया बना नहीं है. एफईजी जरूर है, एक करंट लेवल पे एक एफईजी है यहाँ पर, एंड उसके अलावा ऊपर एक एफईजी आपको यहाँ मिलेगा 6400. कल एक सपोर्ट था, मैंने आप लोगों को बताया था 6286. बहुत ही अच्छा सपोर्ट है, वहाँ पर एक बाइंग आएगी. फाइट काफ़ी अच्छी हुई देखोगे तो. मॉर्निंग पे एग्जैक्टली सपोर्ट के अराउंड ही ओपन हुआ था, थोड़ा आया, ऐसा लग रहा था एक बार ब्रेक कर देगा, लेकिन रोक होल्ड कर गया प्राइस. सो फिलहाल अभी एफईजी है. एफईजी से अगर थोड़ा बहुत बाइंग सेलिंग आती है तो वेल एंड गुड. कोई नया रेजिस्टेंस बनेगा तो वी विल सी दैट. ओवरऑल व्यू बुलिश. नीचे ब्रेक हो गया अगर 6270 के नीचे तो फिर ब्रेकडाउन रीटेस्ट पे सेल वापस. बाकी नेचुरल गैस को देखोगे, इसमें भी एक बीच में कल रेजिस्टेंस एरिया था, याद होगा आप लोगों को. यहाँ पर थोड़ी बहुत सेलिंग आई, फिर बीच से मार्केट उड़ा के ऊपर चला गया. वॉलेटिलिटी हल्का सा ऊपर ओपन हुआ था, एक रेजिस्टेंस था, वहां से सेलिंग आई. अब यहाँ से सेलिंग 3 बार आ चुकी है, क्योंकि सेलिंग भी नहीं है एक्चुअली. सपोर्ट था, सपोर्ट लेने की कोशिश करी, ब्रेकडाउन रीटेस्ट 1 बार 2 बार 3 बार रीटेस्ट कर चुका है. तो ये रीटेस्ट लेवल है, कर चुका है, कंप्लीट हो गया रीटेस्ट ऊपर के. वहीं से एक सेलिंग देखने के लिए मिली नीचे. ये कल वाला रेजिस्टेंस जो परसों रेजिस्टेंस बना था, परसों ब्रेकआउट पे रीटेस्ट नहीं किया था, डायरेक्टली गया था, तो उसी रीटेस्ट पे यहाँ से एक बाइंग का प्लान रख सकते हैं वापस. याद रखना ये रीटेस्ट जोन है. बाकी एक सपोर्ट फिर नीचे आपका 287 जहाँ परसों बाइंग आई थी क्लोजिंग के वक्त. और ऊपर एक मेजर रेजिस्टेंस 339 है, और बीच में कोई रेजिस्टेंस नहीं है. एफईजी है, ये एफईजी है, ये मैंने बना दिया है. याद रखना है नेचुरल गैस में ऊपर रीटेस्ट हो चुके हैं, ध्यान रखना. अगर ऊपर गया वापस 323, नॉट गुड फॉर सेलिंग एट दैट टाइम. डेटा की बात करें तो 6:30 8 PM और 8:30 डेटा रहेंगे, ठीक है. ये रीटेस्ट से थोड़ा बहुत बाइंग का यहाँ से प्लान कर सकते हैं. एफईजी तक का ही टारगेट रहेगा, इससे बड़ा टारगेट अभी नहीं है. थोड़ा वॉल्यूम डाउन है तो थोड़ा संभल के.
Tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely.
To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Two-day winning streak on the S&P 500, leaving behind that 5-day losing streak to close out and begin 2025. Equities right now on the S&P 500 up by 0.1%. On the Nasdaq, up by 0.1% also. On the Russell, the small caps doing okay, up by 0.2%. Lots to talk about in the bond market, particularly at the longer end of the curve, and we can start from 30s and work our way in. The 30-year yield is up a single basis point in the US at 4.86, so close to levels we haven't seen since late 23. In the UK, close to levels we haven't seen since the late 1990s, starting to look a little bit painful in British markets.
Especially when it's not accompanied by the growth that a lot of people are expecting in the United States. And it really produces this quagmire that, frankly, both the Bank of England and the ECB are facing, which is inflation is proving to be sticky, even at a time where they need to generate some growth and, frankly, might limit how much they can cut rates.
Sterling doing better this morning. Cable, the pound, doing better against the US dollar. In the last 24 hours, everything was doing better against the US dollar. Really, that was initiated by that report coming out of the Washington Post, suggesting that the incoming aides of President-elect Donald Trump were thinking about or proposing ideas that would water down a universal tariff. President-elect Donald Trump pushing back pretty quickly. But those moves hold, Lisa, and you made this point, euro-dollar at 104, which I think speaks to a lot of things, and one of them is positioning and how loaded the boat was to the one side going into that release.
I think that's the more important takeaway, because as we were talking about yesterday, we're going to get a lot of this whipsaw. A headline that says this, and then another tweet that says, or a truth posting that says it's not true. The point here is that there is a lot of hope that we can unlock a little dollar weakness and a little strength elsewhere. You see that also in some of the equity indexes over in Europe, the sort of hope that maybe all the pessimism has been priced in and just how little it will take to get some flows into the region.
Not much needs to go right to trigger a big move in the opposite direction when positioning is so lopsided like it has been building over the last month or so. That's euro-dollar 104.08. Under surveillance this morning, one of our top stories, Nvidia CEO Jensen Huang unveiling new products during his keynote presentation at the CES trade show in Las Vegas. The lineup includes graphics cards for gaming PCs built on the company's Blackwell chips and software to help companies develop autonomous driving and robotics AI.
My favorite part of this is the future that he put out there of 1 billion robots and 10 million factories that are automated, and just the idea of our humanoid but not quite human future that also includes $1.5 billion of self-driving cars and trucks. The idea of where this application will go and the hope that it will happen soon, with him even name-dropping some specific car companies who soon quickly got a boost in their equity shares. A question here of whether he can come through with this and whether Nvidia is just showing why Nvidia will be the biggest winner of this transformation and not that broadening out.
Well, they have the software component, they have the chip component, and now it feels like they're going to be pervasive everywhere. And it goes back to what Julian Emmanuel said at the start of the program, which is basically this is an inflection point this year for AI and adoption, and how we see it really circulate across consumers and everything consumers use.
And we've got the conversation that matters coming up on Bloomberg TV. Do not miss this. 11:30 Eastern Time on Bloomberg Television. Bloomberg's Ed Ludlow will be sitting down with Jensen Huang live from CES in Las Vegas. Must watch TV a little bit later this morning. Elsewhere, the US blacklisting Tencent and CATL for alleged links to the Chinese military. Both companies pushing back, saying they have no ties with the military. The move threatening to disrupt the global EV market, with Tesla and other major automakers dependent on batteries made by CATL. Tencent came out and said this must be a mistake. We have no relationship whatsoever.
The issue is the fact that if you are a Chinese company, what U.S. officials will tell you is they have an obligation sometimes, if there's a national security concern, the CCP comes to you and says, we need to know about this. They have an obligation then to share that information with the CCP. I will say the incoming Secretary of State, Marco Rubio, talked about CATL in August. The fact that this is he was talking about this could potentially be a vital supplier to the PLA, and he wanted it to be put on this blacklist. I think you're going to see a lot of this. This list designates from Trump 1.0. The question I have is why the Biden administration waited for the last 2 weeks on their way out to decide to put these two names on it.
Yeah, especially after all the hacking news. I mean, let's just talk about how much, hundreds of government officials have been hacked into, people using now text and Signal to try to avoid CCP oversight in the United States. So there's a real question here about whether this is truly a tit for tat with China retaliating, or whether this is something more, where there's suddenly is this broader recognition and an increasing decoupling of tech in the United States and in China.
Lisa, I'm glad you brought that up. We talked about yesterday how we all read this very detailed report from the Wall Street Journal over the weekend. The first line of that talks about Chinese hackers gaining the ability to shut down dozens of U.S. ports, power grids, and other infrastructure targets. Jake Sullivan told telecommunication technology executives at a secret meeting in the White House in the fall of 2023. So more than a year ago.
Kind of shocking. You think about the arc of policy coming out of this administration towards China. You have to go back a couple of years and remember that at one point they were considering taking tariffs off China because of the inflation fight. which is kind of amazing given that everything that's happened reportedly since then over the past few years.
Right, because they were looking at any lever they can pull to try to bring inflation down, because this was the biggest issue Joe Biden had domestically. And one of them was going to be potentially, and this they oohed and ahed, it was a big Treasury versus national security concern debate for months. In the end, Joe Biden said, no, we're going to keep those tariffs on. But you're right, it was something they were looking at doing for months.
Tencent getting hammered off the back of all of this. Meta elsewhere electing 3 new directors to the board, including Ultimate Fighting Championship CEO Dana White. White has been a vocal supporter of President-elect Donald Trump, speaking at the Republican National Convention and Trump's election night event.
This is just another one of the big tech companies that are adding more conservative members to their boards. This does come after Mark Zuckerberg does have a relationship with Dana White going back, so it's not completely out of the blue. You should note that. At the same time, it kind of speaks to the point you're making earlier, which is companies are adapting and adjusting to this new political regime, and they're doing so at a very quick pace.
They're adapting to the fact that the election showed this is a center-right country at the end of the day. And it's not just Dana White, which when I view him, I just remember Trump being at the RNC talking about the fact that he decided to leave his vacation early to come here personally and introduce Trump. Not Melania Trump, Dana White introduced Trump at the RNC. So when you think of him, you do think of the Trump world. But also, Nick Clegg is out. You guys talked about this last week.
Yep.
Joel Kaplan, deep Republican ties, is now the man that has to deal with policy.
Watch this space. It's not the first, not the last. The winds of change. We're going to see a whole lot more of this through 2025 and maybe even beyond. Let's turn to Canada. Prime Minister Justin Trudeau resigning as head of the Liberal Party after more than 9 years in power.
I have always been driven by my love for Canada, and Canadians deserve a real choice in the next election. And it has become obvious to me with the internal battles that I cannot be the one to carry the Liberal standard into the next election.
And given where the polls are right now, 20 points behind the Conservatives, that choice might turn out to be a big change. And there has been a major change. Go back to the G7 photo in the south of Italy 6, 7, 8 months ago. Anne-Marie, you were down there. How much that's changed in the last 6 months, half a year?
We talked about it. I was reporting live from Bari that this was a lame duck lineup of leaders, except for one, Giorgia Meloni, who basically greeted everyone. It felt like they were all going there to kiss the ring in southern Italy of this new leader of Europe, this Principess of Europe. Yeah, Emmanuel Macron's there, but he has been dealt a huge blow domestically. She's really the only one left in this list of leaders.
We've seen reports that Governor Carney may be interested in throwing his hat into the ring. Of course, Governor Carney is the chairman of Bloomberg Inc. We should recognise that. I would say this, though, for anyone looking to throw their hat into the ring here, you're 20 points behind the Conservative. Why would you want to get in now? Wouldn't you just wait, have the election, watch them fail, and then jump in?
This sort of goes to the question of how much the U.S. is a template, showing what you should do and what you shouldn't do. And maybe Justin Trudeau is trying to get out early to avoid a Kamala Harris-Biden kind of situation where you get out at the very end and you don't leave as much time to a potential candidate. But you're right. How big of a gap can you possibly close when you do have momentum on such a level on the Conservative side?
Eric Nelson of Wells Fargo joins us now to talk about potential market implications. Eric, welcome to the programme. There has been a clear and obvious shift against incumbents and in many cases towards Conservative leaders. Eric, what do you think the market consequences of all of that are going to be?
Yeah, John, who would have guessed that Italy would be the bastion of political stability in the G7? That was certainly not expected, but yeah, obviously a lot of forces domestically in all these countries, whether it's immigration, inflation, driving that. I think it really depends on the country, right? You look at Germany, I think there's some positive forces and sort of catalysts that could come out of the election in February, right? Potential changes to the debt brake. Germany has been a beleaguered economy for several years now, underperforming most in Europe. So I think there actually could be some positive catalysts there. You look at a place like France, maybe a little bit less so. There's still a lot of consternation and it could be messy if there's another election this summer. Canada, though, this is all about tariffs, in my opinion. Domestic policy in Canada is not really moving the currency markets all that much. Question is, how fast does Poilievre come into power? How fast can he get into these tariff negotiations? Fortunately, though, I'll say, Trudeau, I'd say sent some positive signals after his visit to Mar-a-Lago at the end of last year. I think Canada, on the whole, can avoid the worst of the tariff sort of issues and implementation, but it's going to be a rough ride for the next few months here.
Eric, I just want to underscore something you said. Essentially, it doesn't matter who comes, who goes, the leadership of any of these countries. What matters is tariffs, in terms of just where the currency is, and that has been the reason behind the loonie strengthening over the past couple of days, as well as the euro. Is that correct?
In the case of Canada, absolutely. Again, I don't see any real material change in domestic economic policy, maybe some slight fiscal tightening from the Conservatives in Canada if they come into power. I think Germany is a different story. Tariffs matter hugely, but so too does domestic policy, right? We know the German economy has lagged for a long time. They need debt brake reform. They need to unlock some of that fiscal spending. I think Merz is the kind of candidate that can deliver that. The question is, does he have the backing, right? Does he have that supermajority in the Bundestag to really deliver that? And that's what we'll have to find out at the end of February.
There's also this sort of question around Europe, which is how do you pair tariffs with the idea that inflation is sticky and might limit how much the ECB can cut rates? How do you sort of juggle those two ideas?
I think tariffs themselves are probably not inflationary to the extent they're going to move the needle on ECB policy. If anything, they're probably demand negative. We know Germany in particular, very manufacturing export dependent. But if you look even pre-tariffs, just the last few weeks, some of these inflation prints we've been getting out of Europe have been a little bit hotter, right? You look at the just this morning, the ECB inflation expectations figures, pretty strong. And German inflation numbers yesterday also on the hot side. So we're coming into this with a little bit of actually fresh momentum in European inflation. That's going to make the ECB's job more difficult. And one reason why we think that sort of front-end, short-end rates in Europe and Germany have some room to recover here alongside the euro.
Eric, what did you make of the whiplash we saw yesterday with the Washington Post story talking about how this might be a more narrow, targeted approach on critical imports into the United States, and then Donald Trump walking that completely back? When you see that episode, really on one of the first big trading days when people are back from the holidays, what did you learn from that potentially you're going to be looking out for the rest of 2025?
We saw this just time and time again in 2017 and 18. And I think my takeaway is there's some kernel of truth to the story. I think there probably is an initiative being worked on by the likes of Besant, Lutnick on this sort of initiative. I don't know that it's the only initiative, right? There's still the U.S.-China piece, which I think is really its own track for tariffs that wasn't really mentioned as part of this story. I suspect that is something that's being worked on in parallel. There's a lot of Section 232, Section 301. I think it's going to be a multifaceted approach on tariffs this year. I think Trump's denial is not necessarily that surprising, right? You don't want to necessarily signal, hey, actually, all that tough talk I had on the election campaign, it was really just bluster, right? You don't want to send that message. So I think there is a kernel of truth to this. I do think that, our baseline is that we're not going to get 20% tariffs on all countries, on all goods, right? I don't see that happening. I think what it really reveals, and you were talking about this earlier, is positioning, right? You just needed one headline to get a little bit of relief in this dollar strength trade. I think it's going to be a very back and forth year for the dollar. We're still bulls on the dollar, but I realize short term we could see a little bit more consolidation and some dollar weakness the next few weeks.
If we could just build on that kernel of truth and coming back to Canada where John started the conversation, if it was to be critical imports, what would that mean for Canada?
Well, Canada is a big exporter of iron and steel to the U.S. So if this is going to be via Section 232, sort of a national security route for tariffs, yeah, Canada is going to be certainly in the crosshairs. It's not, at the end of the day, energy is really what Canada tends to export to the U.S. primarily, right? So as long as that's not included, Canada is going to avoid the worst of this. There's also some sort of off-ramps, some side letters in the USMCA agreement that actually allow for some delay in tariff implementation between the U.S. and Canada. So that's also sort of working in Canada's favor here and potentially helping to at least delay or at least maybe ideally allay some of the biggest concerns from U.S. U.S. putting tariffs on Canada.
Eric, good to see you. Great to catch up. Eric Nelson there of Wells Fargo on the latest and the changing face of the G7 in the past 6 months or so. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. It's Danny Berger. Hey, Danny.
Hey, John. Sticking with President-elect Donald Trump, he is looking to keep the special counsel's report against him from becoming public. Trump's lawyers are arguing that the report should not be released, citing Jack Smith's political motivation and desire to undermine the transition. Smith had dropped his case against Trump after the election, citing long-standing DOJ policy against prosecuting sitting presidents. Getty Images and Shutterstock have announced that they will combine in an equals transaction merger. The combined company will have an enterprise value of about $3.7 billion. Once the merger is finished, the company will be named Getty Images Holdings and continue to trade under the ticker GETY. Shares of both companies, as you can see, are much higher in the pre-market. Home prices in the UK have dropped for the first time in 9 months. Average prices fell 0.2% in December to just over $370,000 US. They had climbed to a record high last summer. The drop in prices is attributed to stuttering economic growth and high mortgage rates, which are expected to continue to pressure the housing market. And that's your brief, John.
Danny, thank you. More from Danny in about 30 minutes. Up next, the Fed's fight against inflation.
I think the bigger risk is reacceleration, not only of inflation, but of the economy, too. All of this is just suggesting that the acceleration story is going to be the bigger issue.
Apollo's Torsten Slok, up next.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together. And that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
Or sorry.
My voice and my conversation, my poetry, you know.
In case you missed it, on Bloomberg Open Interest.
We'd love to hear from you. We'd love to hear what you think about our shows here on Bloomberg Television. Do you think we're doing well? Do you think we need to change some things?
Do you like Matt Miller?
Should I wear a wig on a regular basis?
Please write that in. I'm scared.
The first monthly loss for the S&P in 7 months, 30 minutes until the start of trading. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld. Don't miss Open.
नेचुरल गैस का चार्ट भी लगा दिया सर। ये क्रूड ऑयल का ही चार्ट ट्रेड चल रहा है और ये नेचुरल गैस का देयर इज़ नो अदर रनिंग ट्रेड। मैंने पहले बता दिया मैं लाइव स्ट्रीम पे कंटिन्यूसली बोल नहीं पाऊंगा। ओके, आई कांट स्पीक कंटिन्यूसली सो बिकॉज ऑफ द हेल्थ कंडीशन। बीच बीच में अपडेट देता रहूँगा जहाँ पर पॉसिबल है। फिर से रिपीट कर देता हूँ, गोल्ड सिल्वर नेचुरल गैस क्रूड ऑयल 5 PM ऑलरेडी हो चुका है। 6:30 न्यूयॉर्क सेशन की ओपनिंग, 8 PM यूएस मार्केट ओपनिंग, 8:30 एक डेटा है गोल्ड और सिल्वर के लिए। नेचुरल गैस कल काफ़ी थोड़ी वॉलेटिलिटी हुई थी, एक रेजिस्टेंस एरिया था यहाँ पर, याद होगा, थोड़ी बहुत सेलिंग आई, फिर सडनली मार्केट ऊपर चला गया। एग्जैक्टली ऊपर एक रीटेस्ट जोन और था कल वाला, याद होगा, वहीं पर ओपन हुआ था, वहाँ से एक सेलिंग आई। ये रीटेस्ट ऐसे मल्टीपल टाइम हो चुका है, ध्यान रखना, 3 बार रीटेस्ट कर चुका है, बार बार रीटेस्ट नहीं करेगा अगर वापस आया तो उस लेवल तक ऊपर है। फिर एक मेजर रेजिस्टेंस 339 340 पे मिलेगा। बाकी ये मैं कल बताया था, वही नीचे वाला सपोर्ट रेजिस्टेंस था, सीधा गैप अप ओपन हुआ था कल, तो उसी पे रीटेस्ट कर रहा है फिलहाल के लिए। बाकी इसका टारगेट ये एफ तक ही है, वापस नीचे आया तो वापस बाई कर लेना, लेट एंट्री मत करना। अगर एफ के ऊपर निकला तो फिर थोड़ा और ऊपर जा सकता है। बाकी अगर नीचे आया तो फिर 288 एक थोड़ा सा वीक सपोर्ट और रहेगा नीचे डाउन साइड पे। क्रूड ऑयल को देखोगे कल के ही लेवल है, इसमें भी कल एक रेजिस्टेंस एरिया था यहाँ पर, याद होगा आप लोगों को। मार्केट काफ़ी ज़्यादा वॉलेटाइल हुआ था, ऊपर भी गया नीचे भी आया, फिर सीधे नीचे ही आ गया था वॉलेटिलिटी की वजह से। वो लेवल रिमूव कर दिया, वो काम का नहीं है, मल्टीपल टाइम ब्रेकआउट ब्रेकडाउन हो चुका है। नीचे एक सपोर्ट बताया था 6283-84 पे, वहीं पर मार्केट ओपन हुआ था, वहीं पर मार्केट ने एक सपोर्ट लिया, वहीं से एक बाइंग चल रही है। ऊपर कोई रेजिस्टेंस नहीं है, पीछे और कोई लेवल दिख नहीं रहा है। एफ जरूर बने हुए हैं, तो इन एफ से अगर ट्राई करना चाह रहे हो तो एफ से बाइंग सेलिंग ट्राई कर सकते हो। कोई नया रेजिस्टेंस बनेगा अपर साइड पे तो देखेंगे। नीचे बाकी ये सपोर्ट भी अब वीक हो जाना चाहिए 6285, इस अगर नीचे आया तो फिर ब्रेकडाउन के चांसेस बढ़ेंगे। बाकी गोल्ड और सिल्वर में डेटा है, उसका ध्यान रखना। गोल्ड में ऊपर एक रेजिस्टेंस है 265655 के अराउंड, नीचे सपोर्ट 2634 और 2609। एंड सिल्वर में आई थिंक नेचुरल गैस में, ठीक है, सिल्वर में भी ऊपर एक रेजिस्टेंस 30.40 के अराउंड, और नीचे एक सपोर्ट 30 के आसपास है, फिर एक नीचे मेजर सपोर्ट 29.46। बाकी मुझे लग रहा है मेजरली वही न्यूज़ के बाद जो डेटा इंपॉर्टेंट है आज का, उसके बाद ही इम्पैक्ट करेगा। जॉब ओपनिंग का डेटा काफ़ी इंपॉर्टेंट रहता है। अगर नेचुरल गैस एफ के ऊपर निकल गया तो फिर थोड़ा सा बड़ा टारगेट रखना, नहीं तो मोस्ट प्रोबेबली एफ पर एक अच्छी तरह से रुकना चाहिए। बाकी जिन लोगों ने लाइक नहीं किया, लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। तबीयत कैसी है? ऐसी ऐसा तबीयत, हेल्थ इज़ नॉट गुड। रोड में एफ पर ही ट्रेड कर सकते हो, अभी नीचे वो सपोर्ट तो ऑलरेडी ले चुका है। एफ से ब्रेकआउट रिटेस्ट या फिर रेजिस्टेंस पे सेलिंग का प्लान कर सकते हो, ऊपर कोई और रेजिस्टेंस है नहीं। एफ है तो उन पर रिजेक्शन मिल सकता है, या फिर ब्रेकआउट रिटेस्ट पे थोड़ा बहुत बाइंग आ सकती है। अगर ये इसके ऊपर गया तो पीछे कोई लेवल नहीं है, ध्यान रखना। इतना पीछे चार्ट को ले जाओगे ना, यहाँ कुछ खास लेवल बने नहीं है। वही एफईजी पर रेजिस्टेंस पे, अगर एफईजी पर रेजिस्टेंस मिलता है तो थोड़ा बहुत सेलिंग, नहीं तो फिर ब्रेकआउट रिटेस्ट पे बाइंग, अदरवाइज और कोई ट्रेड तो नहीं है। यहाँ पर एक डब्ल्यू भी बना है, ये भी ध्यान रखना। इसका एक रीटेस्ट भी पेंडिंग है।
Issues with, again, the number of T-bills outstanding, meaning short-dated debt that needs to be rolled over. We still have QT. There's a lot of conversations about when that potentially will end. And on top of that, if we do have new fiscal deficit spending and a number that's much bigger than what the market is expecting, that certainly raises the probability, at least, that we might have some situation where the markets are saying, wow, that's a lot of treasury issuance. We already have
We just experienced one of the best two-year stretches for markets in history.
All the positive news is priced in.
It's hard for me to be negative U.S. equities.
The U.S. growth situation is in pretty good shape.
I'm looking for a bumpy year, and a lot of those bumps are going to be occurring over the next few months.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now, coming into Monday, looking to build on Friday's gains with equity futures on the S&P 500 higher by 0.4%, on the Nasdaq 100 up by 0.7%. Check out the bond market and have a little look at the long end of the curve. The 30-year yield in America hitting the highest level since 2023, up a single basis point to 4.83. Going into a major week ahead with tons of economic data, concluding with payrolls on Friday. Before we get to payrolls on Friday, though, we need to talk about some debt auctions in America. Carrying just a little bit of weight this week, $119 billion of debt sales, a 3-year today, Bramo a 10-year tomorrow, and a 30-year on Wednesday.
Yeah, brought forward because of Thursday, the holiday in terms, or the day off for Jimmy Carter's funeral. A real question here about what the signal from the yield rise is. Is it the anticipation of $119 billion of debt sales? Is it the anticipation of an agenda from President-elect Donald Trump, who potentially could deepen the deficit? Or is this a signal of just normalization that's positive because we should have a disinverted yield curve?
Well, I think it tees up the perfect conversation we've got to have this morning. Speaker Johnson looking to hit the ground running. One big, powerful bill, and looking to pass that bill by April.
They want to get this one big reconciliation bill out of the gate. There's been lots of ooh and ahhing on this program between Republicans within the House and the Senate, how they would go about enacting President-elect Trump's agenda. Would they do one immigration bill out of the gate, as Senator John Thune wanted to do? Or are they going to do what Jason Smith of House Ways and Means has been pushing, one massive reconciliation bill? President Trump made it very clear yesterday in a post. One powerful bill, immigration, energy, and expanding tax cut. He made a point to talk about no tax on tips.
Basically, all of this is coming down to the question around deficit anxiety. And ultimately, from a market perspective, there is a real anxiety right now about how much momentum they have to actually do cost cutting to offset some of the deficit expansion that a lot of people at this point are just penciling in.
Morgan Stanley's Mike Wilson talking about this morning to kick off the week in his notes, saying that rates are the most important variable to watch, that in early 25 already we're seeing the correlation of equity returns to bond yields decisively negative. We heard from Priya Misra of JP Morgan last week talking about this, reflected on what Max Kettner of HSBC had to say, that rates have decisively moved into what he believes is the danger zone.
There is an alternative. I mean, if you just think about it from an investment perspective, and then you take a look at some of the areas that people say have been the cheapest, they are the most leveraged to rates remaining low. A key question here as we move forward is today is actually a great test. Can you eke out gains at the same time that the 30-year yield's the highest level going back to November 2023, when you have a yield curve that is the most positive from 30-year to 2-year going back to 2022?
Bonds down, yields up this morning by a single basis point on a 30-year, up by close to 2 on 10s, 461 on a 10-year yield. Coming up this hour, we'll catch up with Lori Calvasina of RBC on her favourite sectors for the year ahead. Terry Haynes of Pangea Policy as Johnson pursues Trump's agenda. And Jane Foley of Rabobank as the dollar pulls back from 2-year highs. We begin this hour with stocks rising after snapping a 5-day losing streak on Friday, getting a boost from big tech. Lori Calvasina of RBC keeping a close eye on the sector, writing, "We remain market weight, S&P 500 tech, our favourite S&P 500 sectors heading into 25, are financials and energy, along with communication services." Laurie joins us now for more. Laurie, good to see you.
Good to see you too.
Good morning. Let's talk about the year ahead, and not just the sectors. Let's talk about policy. Have we got a better idea of what policy and how it will be pursued will look like down in Washington, D.C.?
I don't think we have it yet. I think that we're optimistic we're going to get some clarity soon. And, you know, chatting with Anne-Marie earlier about the one big powerful bill, I instantly thought back to my European meetings in December, right before the holidays, when I was kind of doing the death march across the continent. And, you know, in every single meeting, people wanted to talk about taxes and tariffs and what exactly is Trump going to do and when are we going to know? And, you know, I had to sit there and tell them, well, I think we got to get past the inauguration first. But if you go back to 2018 or actually 2017, what I remember about that tax bill, I'd moved firms and I was trying to put out a forecast and I kept having to change my earnings estimate because the tax rate kept changing. I think like literally up until like the week they passed the bill, and it was driving me absolutely mad. So I kept coming back to that anecdote. But the reality is markets did price in a lot of the good stuff ahead of time anyway. So I think just the promise of getting some clarity sooner rather than later, and frankly, just ripping off the Band-Aid, right, and getting a lot of this stuff done all at once, I think that's good for markets. I think one of my core beliefs about politics and markets, whatever it is, you have to go through some temporary repricings, and those can be painful for the markets. In some instances, those can be painful for certain sectors. Sometimes they're not. Sometimes they're good. But whatever it is, it tends to be rather short term. The market reprices, and then you move on.
Something we talked about last week coming into this week, and you mentioned 2017. Do you believe we're coming into something that looks like 2017 or something that looks like 2018 or something very different?
I think it's a combination. You know, I think there's some rhyming and some echoing that's going on. But what I do remember about 2017, again, was that we didn't even know what the tax rate was going to be for corporations, and we managed to price it in ahead of time anyway. And, you know, if you look back at sort of that big move we had over the summer when the market started to sniff out the Trump victory into the November highs, you know, I think markets were kind of baking in a lot of the good stuff, right? And maybe a lot of the challenging stuff still needs to be filtered in. And in the prior, you know, administration, right, Trump version 1 was kind of the good stuff in 2017 and the challenging stuff in 2018. And I think that's all been kind of pulled forward. But there was sequencing, and maybe we're just not going to do that same sequencing. We're just going to do it all at once, and the market can have a better picture of how it all fits together. And then we can move on to whatever's next. But I do think, you know, yeah, there's some rhyming, but I just do think the timeline is a bit different in here.
My head's kind of spinning. It always is when I talk about potential policy, especially at a time of incredible volatility and some contradictory messages. I wonder how much policy is going to drive the returns outlook versus the bottoms-up estimates that you're looking at in terms of earnings from companies that have seen a really good period but seem to be facing a bit more of a challenge.
I always say when we're in these periods, my head's twisted into a pretzel, and I definitely felt like that a little bit at the end of the fourth quarter. But I think you're right. I think it's all about the transmission mechanism to earnings. And what are some of those other transmission mechanisms, right? One is the tax rate, right? And even though it seems, maybe kind of artificial, right, investors will still cue off what the actual earnings are. Another transmission mechanism, right, is going to be the read through to the vibes. Corporate sentiment, investor sentiment, looking at things like the Michigan consumer survey that's coming out later this week. So I think those things all show up in the earnings at the end of the day. But I do think, kind of going back to that interest rate conversation earlier, I think that's another transmission mechanism that matters a great deal. And I kind of agree with the danger zone comment. I mean, I don't think we're quite there yet, but I think 5% is a problem for this equity market if we get there.
This is where I wanted to go. This question of how much policy and some of the more stimulative aspects are going to be the driver versus this. Strong dollar, higher yields. Yeah. The strong dollar already reducing some of the international presence of companies. How much is this being accounted for, and how much do you think that this market is really at the precipice of a bigger decline if we do reach that danger zone?
So if you just want to take the dollar, for example, it's been something curious happening recently, which is we've only kind of recently started to see downward revisions to bottom-up consensus estimates. And normally when you're in this big period of dollar appreciation, you would have seen that a bit earlier. And it's starting to show up in my data now. So I think we're going to have to work through that. I think that's temporary. I don't think that derails the market as a whole. But I do think if we see the 5% on the 10-year Treasury yield, what I'm seeing in my earnings yield gap modeling right now is that if we hit that 5% number, we're going to flip the earnings yield gap into a range that's typically followed by equity market declines on a 12-month forward basis. So we can sort of hang out in 4.6, 4.8, but if we hit that 5% and you don't see a big improvement in the earnings yield, it's going to be signaling a problem. And I think the other problem with 5% is, look, I'm not a technician. I'm not a rate strategist. I just look at the charts, right? And if we break through that 5%, I think I'm going to have a lot of equity investors saying, are we in a structurally rising rate environment, which will be a tremendously different thing than, any of us have really seen in our careers. We're sort of chopping around right now, but most of my career we've been in the structurally declining environment, and I think that's where the muscle memory is.
We've got to talk about tariffs as well. This breaking from the Washington Post just now. I'll share the lead paragraph with you. President-elect Donald Trump's aides are exploring tariff plans that would be applied to every country but only cover critical imports. This according to 3 people familiar with the matter.
So what this says to me is that this is going to be a more narrow-looking approach when it comes to the tariff regime. And further down in the story, they talk about things that are critical to national or economic security. So Lori, when you see stories like that, you start to get some color around what this tariffs could mean. And yesterday in Trump's tweet about the one powerful bill, he said all will be made up with tariffs. Yeah. Is that enough to pay for this?
I don't know. And look, I think they're trying to do this right through the reconciliation process. So, and I'm a little fuzzy on how all that works. But I think that sort of reduces, right, what they can ultimately do in terms of tax cuts, because they've got to make everything balance out. So, I think on the one hand, the markets will cheer a narrower approach to tariffs, more targeted. There's been a real concern over the last 6 weeks or so that the market has not been baking in a broad-based kind of tariff approach. On the other hand, are you really going to get, anything much more than a renewal of existing tax cuts, right? Is it keeping tax rates low, or is it getting a bunch of new cuts? How are you going to get a bunch of new cuts if you don't have a lot of new revenue coming in?
When you look at how potentially tariffs might impact earnings, what sectors do you think would be the best in terms of making sure that they're the ones that are less vulnerable to potentially some of the retaliation we could see in the tariff space?
It's going to depend on what's on that list at the end of the day. But if you look back at 2018, the 2 sectors that really got smoked were industrials and materials. And so I've actually been sort of debating the industrials. There's a lot of enthusiasm on industrials in the States, not so much in Europe and Canada. And, I think when I've talked to some of the domestically based investors, they've assumed that this whole reshoring is going to benefit especially small and mid-cap industrials. And I'm like, well, let's just, hold up. We're trading at 3 standard deviations on valuations. And we're also looking at a sector that was really at the epicenter of these tariff issues the last time around. Defensives did best last time, right? It was things like healthcare, consumer staples, utilities, REITs. REITs and utilities came up a lot in my European meetings because they just don't seem affected either way.
Well, speaking of Europe, headlines like these will open the door to have conversations about whether this allows people to think about international equities just a little bit more. The fear ahead of these headlines was a universal tariff as high as 20% on everything that America was importing. Lisa, when you see headlines like this and then look at foreign exchange, just a bit more euro strength, just a bit more strength in the Mexican peso, it's marginal stuff, but it starts a conversation.
Well, it starts a conversation about what the purpose of tariffs will be. Will it be to sort of jawbone or give some sort of increasing momentum to the American exceptionalism story, or will it be very targeted for either national security reasons? These are key issues like critical supplies like steel, iron, aluminum, copper, syringes, needles, batteries, rare minerals. There's a real question here about if these are targeted to national security and specific needs, they won't have as big of an effect on Europe because strategically it would make sense that they would not necessarily be as included in some of these.
Two things also come to mind. How much pushback will there actually be from Democrats? Because this has been their whole approach as well, especially when you think about going after China. It needs to be narrow, needs to be specific. Also, is this because the Trump incoming administration is concerned about higher inflation? So they want to take a more targeted, slow-going approach when it comes to tariffs.
We should stress that no decision has ultimately been made. This is the latest reporting from the Washington Post. Laurie, it's good to see you, to catch up on a whole range of things going into the next year and beyond. Laurie Calvert, senior there of RBC. If you are just joining us, this from the Washington Post just minutes ago. President-elect Donald Trump's aides are exploring tariff plans that would be applied to every country, so universal tariff, but only cover critical imports. This according to three people familiar with the matter. More on that a little bit later. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. Staying in D.C., Congress is set to meet today to certify President-elect Donald Trump's election win. President Biden invited a group of new Democratic lawmakers to the White House last night, urging them to commit a peaceful transfer of power. As Trump prepares to return to the White House in 2 weeks, expectations are high that he will give swift clemency for the 1,000-plus people convicted and hundreds more with pending cases related to January 6, 2021's insurrection. Meanwhile, in Canada, Prime Minister Justin Trudeau is said to be preparing his announcement to resign. The Globe and Mail newspaper says the announcement could come as early as today. It would trigger a race for the party leadership, with the winner becoming PM. Trudeau has been under pressure from lawmakers in his party to quit for months. Scrutiny grew last month after his finance minister, Chrystia Freeland, quit. People familiar say that Italy is in talks with Elon Musk's SpaceX for a $1.6 billion deal, providing encrypted telecoms for the government over the next 5 years. The negotiations appeared to move forward after the Prime Minister, Giorgia Meloni, met with Donald Trump at Mar-a-Lago. Some Italian officials, though, are concerned about the deal's impact on local carriers. It has, though, been approved by Italy's Intelligence Services and Defense Ministry. And that's your brief, John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, one big, beautiful bill.
President Trump is going to prefer, as he likes to say, one big, beautiful bill. And there's a lot of merit to that because we can put it all together, one big up or down vote, which can save the country, quite literally. We're targeting a vote in the House, it may be in the first week of April.
That conversation up next, live from New York City this morning. Good morning.
Sea cargo is responsible for 3% of global greenhouse gas emissions annually, and ports are a major contributor. As Mexico's first carbon-neutral port, ICTSI subsidiary Contecon Manzanillo is setting the standard for progress. By deploying electrified cranes and tractors, recycling and reusing resources, and offsetting emissions by allocating resources to preserve critical ecosystems. This demonstrates how ports can be drivers of positive change and sustainable growth.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations to come.
Foreign exchange waking up to some headlines already Monday morning. Check it out. Euro-dollar session highs approaching 104 all over again, 103.89. That's some euro strength, and that's rare. over the past month or so. Check out dollar peso. Some Mexican peso strength as well in the mix. Dollar Mex near session lows. We're negative about 0.5%. So once again, a stronger peso, a weaker dollar. All of this building in the last 10 minutes or so. Off the back of this headline from the Washington Post, President-elect Donald Trump's aides are exploring tariff plans that would be applied to every country but only cover critical imports. This according to 3 people familiar with the matter. Now, no final decision has been made, but certainly some early murmurings that maybe some of the campaign promises might be, I stress might be, watered down.
There was a lot of preparation for an opening salvo that would be potentially pretty big and potentially pretty damaging should it go through in terms of huge tariffs on the likes of Mexico, on Europe, and of course on China. The fact that the opening salvo is targeted is definitely sending a signal that's being heard in foreign exchange.
A warm welcome to 2025, because this move can be undone just like that by a single post from the incoming president. So stay tuned. Under surveillance this morning, one big, beautiful bill.
We're 15 days out from the inauguration of President Donald J. Trump for his second term, and we want to make sure that we're jump-starting the agenda now over the next 2 weeks so that he's prepared and ready on day one. President Trump is going to prefer, as he likes to say, one big, beautiful bill. And there's a lot of merit to that because we can put it all together, one big up or down vote, which can save the country, quite literally. Reconciliation is the way to get it done. Why? Because you avoid a 60-vote threshold in the Senate. We're targeting a vote in the House, it may be in the first week of April.
So here's the latest this morning. House Speaker Mike Johnson laying out an aggressive plan to pursue President-elect Donald Trump's agenda. House Republicans aiming to pack his priorities into a single bill and pass it by April. President-elect Donald Trump posting this: Republicans must unite and quickly deliver these historic victories for the American people. Get smart, get tough, and send the bill to my desk to sign as soon as possible. Terry Haynes of Pangea Policy joins us now for more. Terry, on this bill, how big is it going to be and how quickly can they pass it?
The short answer, John, is I have no idea, and it's going to take a really long time to figure that out. Markets, I know, are slavering for clarity. I wrote a lot about that yesterday, but I would urge people not to engage in premature clarity on this, generally speaking. Speaker Johnson is doing exactly what he has to do. The market signal is from Washington is we're serious. We're going to work on this as hard and as quickly as possible. That's all very good. The political signal is that the House always overcooks everything. So what you want to do is kind of overreach, and then you get pulled back in by the Senate a little bit. Number one. Number two, what Johnson's doing is engaging in the care and feeding of the other branch of government here, the executive branch. Trump just helped him become speaker again with a minimum of fuss. It behooves him for political and policy reasons, both to try to get as much as possible, as quickly as possible, and also agree with Trump right now. The reality is that Johnson doesn't have everybody in the House on the one big beautiful bill strategy, and more importantly, he doesn't have the Senate at all. So we're a long way away from determining what's actually going to happen.
Terry, over the weekend, Senator Thune, Senator Lindsey Graham, we're still all talking about one bill coming out almost immediately on immigration and then doing taxes. So are you saying that markets need to be prepared for potentially going back to 2 reconciliation paths?
Yeah, I am. I'm fundamentally what I'm saying is that the path here is not at all decided, and it's not all going to be decided for quite a long time. I've tried to summarize the politics and the market signals in my last answer. Here, what I would say is that they've got a lot of barriers to jump over before they get to the size of the one big beautiful bill. You've got debt ceiling, debt limit that they need to decide upon. Trump has to provide a budget. You've got a situation where you've got to figure out then the size of the deficit. And markets, frankly, are going to have a role to play here, as you all were talking about earlier, and Bloomberg is reporting the way that the way markets are reacting to increased deficits and the like, particularly in the bond side, may result in pulling back some of the more extreme wishes of Johnson and the like.
I want to put two of these stories together. One, what Trump came out in black and white and said about this one powerful bill. He said it'll all be made up with tariffs. And then this morning, we get a story from the Washington Post talking about tariffs that look to be more narrow in nature. How are they going to pay for all of this if they're more narrow in nature, focused on national and economic security concerns?
Well, the answer is they don't know. And, what I can tell you is that another thing for markets here is that, 2017 is not like 2025 for Washington or for anybody else. This is obvious on one level, but it affects the size of additional deficit. It affects like how many pay-fors they're going to have and what they are, and all those decisions are months away. So the idea, Johnson, I think, is exactly right in trying to be as clear for markets and politically as possible. But at the same time, all these hurdles and markets' reaction to how these folks get over these hurdles is going to determine a lot of the size of the tax cuts and exactly what they decide to do. The last thing I would say about this is that Trump is going to ramp up defense and defense industrial base spending and supports, and that's going to have a piece to play here too.
I am wondering, just to build on what Anne-Marie was talking about, your take on this headline from the Washington Post about universal tariff plans with one key change, the key change being that it only goes after certain key imports, including things like steel, iron, aluminum, copper, syringes, as well as batteries and rare earth minerals. Do you think that this is a sign that this administration is going to take a more targeted approach with potentially national security in consideration more than, say, 100% tariffs on everybody unless they come and kiss the ring?
I think it's another sign of that, Lisa. My view of this all along, watching these folks closely and what they do and what they say, has been that, markets have veered back and forth between saying this is all negotiation versus, the tariffs will be all about application. The answer is it's not going to be one or the other. It's going to be a mix of both. It's going to depend on, kind of which products, and it's going to depend on which countries. And I think you can vector it out from there.
Terry, good to hear from you, sir. Busy morning already. Terry Haynes there of Pangea Policy. Check out euro dollar, a move of more than 1 full percentage point now. Back through 104 on the euro. Could be, possibly, the biggest one-day move for the euro going back to the summer of last year. Off the back of this headline from the Washington Post, the consideration at least of watering things down a touch.
Yeah, watering things down and going after key supplies, most of which come from China. And let's be very clear, this is not the type of imports. The U.S. isn't importing a dramatic amount of syringes from Germany. This isn't a question of that. This is coming from China, so it's going after a very targeted group, basically alleviating some of the concerns that Europe had.
One thing that's very clear to me this morning, whether or not it's the Washington Post reporting or what Terry Haynes just said, the markets will have a voice in the policy that this incoming administration dictates, whether it's not those concerns about tariffs or whether or not it's how big they can really squeeze into this one or two packages of reconciliation and how willing they are to add to the fiscal deficit.
This is why so many people have come on the show going into 2025 saying brace for volatility. Everything we're talking about right now can be undone with a single post from the incoming president of the United States. And we should stress repeatedly, every time we reference this story from the Washington Post, that no final decision has been made. It speaks to considerations taking place within the Trump administration as they go into power over the next several weeks. And Lisa, things can change very quickly in the next several seconds when the president wakes up.
It's the point that Stuart Kaiser has made that you've referenced earlier. Are we heading into 2017, which was a low volatility, big risk asset gain? Or are we heading into 2018, which was high volatility, low returns?
More on this story in just a moment. Up next on the program, Leland Miller of the China Beige from New York. This is Bloomberg. Snapped a 5-day winning streak, or rather a 5-day losing streak on the S&P in Friday's session, and we look to add some weight to it this morning. On the S&P, we're up by 0.6%. On the Nasdaq 100, up by 1 full percentage point. On the Russell, up by 0.7. Some moves in the bond market to talk about. On a 30-year yield, up by a single basis point or so. A 30-year yield now the highest, going all the way back to late 23. We're through 480. Just a range of commentary coming from the south side on all of this, including this from Mizuho's Jordan Rochester. investor this morning. US data surprises may have finally stopped falling after strong claims in ISM manufacturing last week. Combine that with Trump's fiscal plans, it's why 5% is more likely than 4% on US 10s. Right now, the 10-year just south of 460, 459. We've got to talk about trade and foreign exchange. This headline coming from the Washington Post just moments ago, that President-elect Donald Trump's aides are exploring tariff plans that would be applied to every country but only cover critical imports. This according to 3 people familiar with the matter. Off the back of this, look at this move in foreign exchange. Up by 1% on euro dollar, 104. Some strength for the Mexican peso, likewise for the Chinese currency. Big headline 30 minutes ago.
It's a big headline, and you rightly point out the volatility that this introduces. If this headline is what actually is going to come to pass, then it is slightly dollar negative, but really a positive for the rest of the world, particularly Europe and Mexico. If this is just some of the noise that we can expect to hear, it really speaks to the question of how much volatility some of these headlines are going to really introduce.
And it's true and smart and prudent to talk about the fact that this could just be noise. These conversations are happening in Palm Beach right now, and they will continue to happen. And President-elect is just that, President-elect. He will take office in 2 weeks' time, and then potentially we'll see exactly what the policies will be. But what this is signaling to the market is that those ideas of blanket tariffs that ring around the United States, potentially that's out the window, and this will be a more targeted approach.
Let's see, and let's see what the incoming president's got to say. As far as this market is concerned, inauguration took place in early November. Equities are up. Bond yields are a little bit higher at the long end, and the dollar's a touch weaker on the session so far. Under surveillance this morning, the Globe and Mail reporting Canadian Prime Minister Justin Trudeau is likely to step down this week. The resignation expected to happen before a key National Caucus meeting on Wednesday. This coming after months of pressure from his own Liberal Party to resign. His party 20 points behind Conservatives in the nation.
Yeah, this is sort of not only widely expected, but basically the question has been who takes over and how soon will he resign. Of course, some of the caveats in the non-source story says that he hasn't completely decided. There is a bigger takeaway here, and this is a shift to a more conservative approach globally. This comes with the threat of, yes, Donald Trump, but it also comes with something that's happened structurally. And I think about what's going on in Canada with the Liberal Party really underwater politically, but I also think about what's happening in Austria. I think about what's happening in Australia, and I wonder how much they're prepared for that.
It doesn't really matter if Justin Trudeau has made up his mind. He's hanging on by a thread. 20 Liberal members of Parliament have publicly come out and said, this is enough, you need to step aside. Even more of them when you start taking into consideration what they're saying behind closed doors. And I go to this one member who said, simply put, time is of the essence, adding that it's not tenable for you to remain as leader. Why? Because they're concerned about the economic threat coming from the United States, and they need to be prepared for that, not hanging around with this lame duck prime minister.
You know, when you see CEOs get fired at the stock rallies, how embarrassing is it for Justin Trudeau that he's talking about a conversation's happening about him resigning and the currency's rallying off the back of that? What does that tell you? That's like the CEO story on steroids. That's shocking.
I would argue that the embarrassment's been going on for quite a while with some of the stories and some of the internal dissent, even from his own party, nonetheless, the finance minister. But yes, there is a real question here. How quickly can they get certainty? And will he allow that process to start sooner rather than later?
Speaks to what investors think is good for the country right now, that's for sure. Let's turn to Italy. Italian Prime Minister Giorgia Meloni meeting with President-elect Donald Trump at Mar-a-Lago over the weekend. A person familiar with the matter telling Bloomberg the two discussed a wide range of topics, including tariffs and the arrest of an Italian journalist in Iran.
So these were the two main topics on this list. And it wasn't just President-elect Trump that was there. Treasury Secretary Scott Bessent was there. Incoming Secretary of State Marco Rubio, his national security advisor, was there. So you can see, based off the people in the room, what was likely going to be discussed with Giorgia Meloni. I will say, for Giorgia Meloni, this was politically a very smart move. President-elect Trump is likely going to bash a lot of European leaders he invited to inauguration who decided not to come. She got ahead of that. At the same time, she's able to also stay away from the inauguration and likely show Ursula von der Leyen and other members in Brussels that she could be the main voice and conduit to this incoming administration.
For a long, long time, we had US presidents talking about, I don't know who to call. When I call Europe, who do I call? I think now when you call Europe, you call Giorgia Meloni. That's the face of stability in Europe, and there isn't much stability elsewhere, that's for sure.
How do you think Germany feels about that? That the face of Europe and the face of stability is the Italian prime minister at a time when it's unclear who is exactly going to be the ruling party.
Well, exactly. Who's going to be the face of Germany? What does the future look like in France, let alone what is going on in the United Kingdom? One thing is for certain, Giorgia Meloni is sticking around. And it was so apparent, we talked about this a few weeks ago, at that G7 meeting. She was the standout, the only one that was likely going to be left amongst all those leaders.
So Joe Biden is still the president, just to reiterate that. And his latest decision has attracted some controversy. Shares of Nippon Steel sliding after President Biden blocked the company's planned takeover of US Steel. The two companies describing the decision as political, saying in a joint statement there was no evidence of a national security threat and they intend to challenge the order. This came from Richard Haas, posted on X over the weekend. The decision to block Nippon Steel and the purchase of US Steel is bad economics and foreign policy, both. It threatens jobs here, encourages protectionism elsewhere and undermines what has been a defining alliance-first approach to the world. It's a stain on Biden's legacy.
It also politicizes CFIUS, which many in the markets have trusted for this is going to be serious when it comes to deals that are being done and actually protecting the U.S. from national security concerns. We do know that Nippon Steel, according to local press in Japan, will have a press conference tomorrow. And the Wall Street Journal, based on what Richard Haas was saying and also based on some of the conversations I've had, gets to the point this morning about that push and pull between Biden's domestic advisors concerned about those union jobs in Pennsylvania versus those like Secretary of State Antony Blinken and Jake Sullivan, his national security advisor, on the fact that actually you might be damaging relationships when it comes to Japan. If you're a Japanese company, how are you thinking about potentially investing right now into the United States?
On the way out the door. And that list of people, very long. Let's turn to China. The country's central bank reaffirming its support for the yuan, setting a stronger daily reference rate and planning to sell more bills in Hong Kong to help stabilise the currency. Investors remaining cautious due to China's sluggish economy and the threat of higher US tariffs. Leland Miller of China Beigebook joins us now for more. Leland, Happy New Year and welcome to the programme, sir. Last week, Lisa and I were talking about whether China would look to embrace the weakness of the currency to offset the threat of tariffs. Are you seeing signs that maybe point to the opposite?
No, I think it's too early to tell. I mean, I think if China has a plan to use the currency to push back on tariffs, it's going to wait until tariffs are in play before it does that. There's weakness in large part because the dollar is super strong right now. Everyone looks at Trump's plans for 2025. They see a stronger dollar there, too. So right now, this is mostly a strong dollar story. Of course, the yuan, they're going to be moving it around based on what they think they need to do. But this is actually an expectation of what Trump policy will be. That will move it, not try to get in the right place before Trump gets in office.
And just to sort of broaden out, Leland, how much are the Chinese authorities preparing for what Trump is going to do with the idea of a bazooka versus other measures that we're already seeing with cybersecurity issues popping up all throughout the government as well as telecom companies in the U.S.?
Look, markets love the idea of bazooka because it makes problems go away. The Chinese are not looking at a bazooka unless things absolutely fall apart. And one of the things that we've been stressing over the last several years of China Beigebook data is, yes, you've got a very weak economy. Yes, the Chinese economy has got plenty of problems, but that it's not a collapsing. It's not in dire straits. So in a most extreme, China tariff scenario, you could certainly see the Chinese leadership wanting to go bigger in a way they haven't for a long time. But I don't think they're anticipating doing that. I don't think that that's likely to happen in the near term. And so at this point, a lot of what we're looking at right now is the Chinese economic leadership getting ready to react to what they see. But bazookas stretching it a bit.
Leland, just to sort of pull this together, is it fair to say that Chinese authorities are not as interested in propping up the economy? Yes, maybe putting a floor under how far GDP can fall, but not necessarily propping it up, as they are countering in an offensive way some of what the U.S. may be trying to do.
I think that's exactly right. And that's what markets, again, continually get wrong on this. Back in the old days, we know that Beijing loved to see high levels of growth. They said, look at our leadership. We're great because we're making you rich and we're delivering high levels of GDP. That is not the way the Chinese economy runs anymore, and it's not the way that Xi Jinping thinks. What they want to do, if they have more economic problems, is counter that with some stimulus that will stabilize the economy, put a floor on the economy. But they're not reaching for higher growth. They are not reaching for the old stimulus playbook. What they want to do is make sure that the economy is not doing too poorly. It doesn't have a doom confidence loop where everything is sort of spiraling downwards off itself. And they can focus on what they really care about, which are national security priorities, not high levels of growth.
Speaking of national security, Leland, I know you've written a ton about the tariff approach the incoming administration is going to take on China. Well, this morning, the Washington Post is saying this is going to be only covering critical imports. You talked about the two approaches, which seem to be much higher and broad-based than just critical imports. What do you make of this latest reporting, and what is it telling you about what the incoming Trump administration may levy on China?
Well, this is sausage being made. So you've got two issues. You've got the China tariffs, and separately you've got a discussion of global tariffs. Global tariffs were never going to be levied. Here's one rate, and that's it. You're going to always have exemptions. If it was a 10% global tariff, you have to have a certain number of exemptions. If you have a 20% global tariff, you'd have to have enormous exemptions. So, what the approach is that it's reflected in the Washington Post is that they're saying, okay, well, instead of starting with a base tariff rate and saying we're going to just chop out exemptions here and exemptions here, we're going to talk about a handful of sectors that are going to get this global tariff rate, and then we're going to add on to that as we think we can get away with. But a lot of this is simply the approach, and a lot of this is what happens when the transition becomes the administration, and you've got all these economic officials who weren't counseling the president before saying, no, wait a second, we've got a different approach on this. So I think that this is actually still a work in progress.
How much of this is national security versus actually deal making?
Well, there are certain things that are deal making. When you look at what the tariffs threatened on Mexico and Canada, for instance, these are sort of a threat. Take care of the fentanyl problem, take care of illegal immigration, or else.
इस natural gas target हो चुका है, target done in natural gas book करना है, book कर लो, trail करना है, trail कर लो. अगर FEG के ऊपर sustain किया तो फिर थोड़ा target बड़ा रख लेना, नहीं तो target is done. Natural gas में हो चुका है, target ध्यान रखना. 9 point मिल चुके हैं. क्रूड ऑयल वहीं का वहीं है, साइडवेज ही पड़ा हुआ है, कुछ खास मोमेंटम नहीं है. 6:30 न्यूयॉर्क सेशन की ओपनिंग है, लेट्स सी कुछ मोमेंटम करता है तो उसके बाद. बाकी अगर ये थोड़ा सस्टेन कर गया इस लेवल के ऊपर तो फिर और ऊपर जाएगा, नहीं तो टारगेट इज डन. फिर से रिपीट कर रहा हूँ, नेचुरल गैस हो चुका है टारगेट. इसमें चाहो तो बुक भी कर सकते हो, ठीक है. जो रुकना चाहे तो वही ट्रेल करना, नहीं तो कर लो ऑलरेडी. अगर ये जो ट्रेल करना चाहता है ध्यान रख लेना, अगर 311 के ऊपर ब्रेकआउट एक तरह से रिटेस्ट जैसा कुछ करता है तो थोड़ा और ऊपर जाएगा, नहीं तो फिर यहाँ से रिजेक्शन मिलने के चांसेस हैं. और अब की बार नीचे आया तो यहाँ से बाय मत करना, थोड़ा और नीचे आने का वेट करना, लाइक यहाँ से, ठीक है. कि क्रूड ऑयल भी रुका हुआ है, कुछ खास नहीं मूव हो रहा है. बहुत रिजेक्शन जरूर मिलेगा इस एफईजी से नेचुरल गैस को.
Exports, they're under extreme pressure right now and will be even.
भी करते रहो guys, don't forget to like the stream.
One of the people who still think that China is going to push that button, get that bazooka, restructure the economy towards domestic consumption, and all will be well. But obviously, China Beige Book is not in that camp.
Those people do exist, Leland, beyond China Beige Book. They're not going away. Leland, appreciate the clarity. Thank you, sir. Leland Miller there of China Beige Book. The latest on over in Asia. Let's give you an update on stories elsewhere this morning. Here's your Bloomberg brief with Danny Berger. Hey, Danny.
Hey, John. We begin with that breaking news from earlier in the hour. A new report from the Washington Post suggests that President-elect Donald Trump is exploring a universal tariffs, but they would only cover critical imports. 3 people familiar with the matter told the Post that Trump's aides are still discussing the plan on imposing duties on every country. It would be a paring back of the most sweeping plans from Trump's 2024 presidential election. In a rare Sunday ceremony, President Joe Biden signed the Social Security Fairness Act to increase Social Security benefits for over 2.5 million retirees. The bill changes the formula that had been used to reduce benefits for certain beneficiaries, like those on government retirement plans, including police officers, firefighters, and teachers. The law is expected to boost Social Security payments by an average of $360 per month. And in South Korea, investigators have asked the police to execute a warrant to arrest President Yoon. The court-issued warrant is set to expire by the end of today. Investigators' initial attempt to arrest Yoon last week was unsuccessful and led to a standoff with his security team and thousands of supporters. It's still unclear whether or if a second arrest attempt may take place. That's your brief. John.
Danny, thank you. More from Danny in about 30 minutes. Up next on the programme, the dollar rally taking a breather.
It's not just about better growth in the U.S. It's also about the U.S. asserting itself geopolitically and strategically. Of course, this is good for the dollar. People want to be in strong countries, not strong economic countries, but strong political countries as well.
That conversation up next. Live from New York, you're watching Bloomberg TV. Snapped a 5-day losing streak on Friday's session, looking to add to those gains this morning, up by 0.7% on the S&P. Some dollar weakness out there. Euro dollar 104 session highs are up by 1 full percentage point. Under surveillance this morning, the dollar rally taking a breather.
It's not just about better growth in the U.S. It's also about the U.S. asserting itself geopolitically and strategically. Of course, this is good for the dollar. People want to be in strong countries, not strong economic countries, but strong political countries as well. I don't think that the U.S. is trying to effectively dissolve the European Union or destroy Europe. It's maybe to weaken Europe, if only to strengthen it down the road by having Europe make that choice.
So here's the latest this morning. The dollar rally taking a breather after climbing to multi-year highs. Jane Foley of Rabobank expecting further strength in the future, writing the anticipation of pro-growth inflationary policies in the US had started to boost the greenback weeks before the election result was announced. We maintain a target of euro dollar at parity for Q2, that we realise the risk that this target could be achieved a whole lot earlier. Jane joins us now for more. Jane, welcome to the programme. I'd love, first of all, your reaction to the story that came from the Washington Post about 45 minutes ago, and I'll share the lead paragraph with you. The President-elect Donald Trump's incoming aides are exploring tariff plans that would be applied to every country, so universal tariff, but, and here's the key but, only to cover critical imports. This according to 3 people familiar with the matter. We've yet to hear, of course, from the incoming president himself on the record, and no doubt we'll hear from him later on today at some point on X or elsewhere on Truth Social. Jane, your reaction to that headline and how dependent your call is for euro dollar to get down to parity on what happens with tariffs?
Well, I mean, there's a couple of different ways to answer that question. I mean, the first thing and most obvious thing is that we don't know what is meant by critical imports. Is this food? Is this pharmaceutical goods, etc., and maybe a whole lot more. So it adds in a way to the uncertainties that we have. We've all been uncertain about the tariffs, how many or how much of the tariffs would go through. You know, how much of this was a negotiation ploy, which countries would be affected first. All of these uncertainties have been out there for quite some time, and this just puts perhaps a different slant on some of those uncertainties. But you know, we still have the basic uncertainties about when is this going to happen, how soon is it going to happen, how much of these tariffs are going to be, and I imagine a lot of those uncertainties are going to be in place to some degree or another, you know, for some months. But although, you know, tariffs are seen as a strong dollar policy and an instrumental part of that because of the inflation that they would bring to the US, we've also got to look at euro dollar, the other side of the coin, that the euro in isolation. And I would say that this is, or the story of parity is in part because of the weakness of the euro. And I've been saying, you know, for a long time, through large parts of last year, that the resilience of the euro, certainly through the first half of last year, was, I think, one of the biggest unsung stories of FX in 2024. Now, the euro buckled in the last quarter. It gave away, excuse me, some ground. And that, I think, is because the market recognized that the ECB had turned a hell of a lot dovish, and it took away the protection that the euro had and really opened it to the issues of the structural issues that, for instance, Germany has, France's budget issues, and actually the deep ingrained political problems that Italy has, and that's been demonstrated perhaps over the weekend by the collapse of the coalition talks in Austria, which do have parallels with what's going on in Germany and France too.
Jane, what I'm hearing from you is that to get to parity, it's actually more about European weakness than the dollar strength. When do you think we can actually see euro dollar hit parity?
Well, I mean, to be honest, I think it's a story of both halves. I think we just need to look at the euro story as well as that story of dollar strength, which, is a fairly universal story. But the euro story is very important. Now, our official call is in the second quarter of this year, so anytime between March and June. But look at the way that the euro or euro dollar has performed over the Christmas break, over the last quarter. In fact, if we look over the last quarter, the euro hasn't been the worst performer. Various other G10 currencies have underperformed the euro, but the fact that we are so close to parity perhaps draws our attention to the weakness of the euro and the strength of the dollar versus the euro. Now, I do think that it could happen, certainly by around March. But I think for that to happen, we would have to be sure that inflation is or has become a lot more benign in the Eurozone. And we do, of course, have key CPI data this week for the Eurozone. If that is the case, that the market will retain this view that the ECB has turned a lot more dovish. And I think that can really continue to expose the euro to Europe's political and Germany's structural issues.
Which raises this question, Jane. Let's say natural gas prices go up, making the whole disinflation story more complicated for the ECB. Is that good or bad for the euro?
Well, if the market has already priced in an awful lot of easing for the ECB. So from that point of view, you could already argue that there's enough ammunition perhaps for some pullbacks in euro, and certainly we're seeing a little bit of that today. If there was more inflation there, the market would have to take out some of that pricing in of rate cuts in the ECB, and that could strengthen the euro. And that's why we're not actually calling a move below parity, at least not in this moment, because we've heard from Lagarde, they're nearly there in terms of the battle against inflation in Europe, but just not quite. And there are still those resilient uncertainties about inflation that we need to get through first. And only, I think, if that happens, can we start to talk, very seriously about a sustained move below parity.
Jane, how much control does the European continent have over its own destiny at the moment?
Well, at the moment, we're lacking strong leadership in many parts of Europe. So, it's certainly reduced. I mean, clearly, tariffs is a big threat to European trade. And therefore, we have strong leadership in the US in the form of Trump and his tariffs, very weak leadership in Germany, very weak leadership in France. And this weekend, no real leadership in Austria too, and that's a concern. For instance, the far right in Austria is pro-Russia. We've got the Ukraine war, of course, on the doorstep in Europe at a time where Trump is putting extra question marks about NATO, where Europe is on the back foot, trying to catch up in terms of spending on defence at times where its budgets are very stressed. So this is a time when Europe really could do with strong leadership, and it doesn't really have it. So it is a risk factor, and I think it's a risk factor for confidence in the euro project and therefore the euro.
Jane, appreciate your time, as always. Jane Foley there of Rabobank. Out of the City of London, euro dollar 104.20. Talked a lot about this over the last month or so, how little needs to go right to engineer big moves in a currency. And when we talk about how little needs to go right, just a little story out of the Washington Post suggesting that maybe, with a big maybe, some of these tariff efforts get watered down.
Yeah, basically get ready for the next couple of months, because this probably is a preview.
104.20 on euro dollar. Up next in the second hour of Bloomberg Surveillance, we'll catch up with Dan Greenhouse of Solace Alternative Asset Management, Henrietta Trey's of Veda Partners, the former World Bank President David Malpass, and Jim Bianco of Bianco Research.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
On the fixed income side, we still see a lot of challenges.
We've come into this year with no bond bulls.
My friends, the bond vigilantes are acting up again.
There's a big divergence right now between disappointing economic data coming in and the 10-year Treasury yield moving higher.
I think we're actually going to see a year where the data plays an even bigger role.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance starts right now. Check out the equity market, looking for 2 days of gains on the S&P 500, higher by 0.75% on the S&P. On the Nasdaq 100, up by a little bit more than that, up by 1 full percentage point. The headline of the bond market earlier on in the session came from the long end of the yield curve. The 30-year yield briefly, the highest since 2023. Yield since then declining just a touch. We're down by a single basis point on a 10-year maturity. The big moves in the last 60 minutes or so, right here in foreign exchange. The dollar is weaker. You are seeing a stronger euro, a stronger Mexican peso, a stronger Chinese currency as well, off the back of this headline from the Washington Post that President-elect Donald Trump's aides are exploring tariff plans that would be applied to every country but only cover critical imports.
The hope being baked into the foreign exchange market is that this means a more tempered and targeted approach from the Trump administration. When you take a step back, the bigger takeaway to me is just how much of a move we saw on this headline about what even is being considered, not even necessarily that's going into proposal before we even get to January 20th.
Well, as Jonathan said earlier, though, the market has pretty much priced in the day after the election, or even actually weeks before the election, a Trump administration. And I think what the market is picking up on the fact that this might not be the universal tariffs and the ring around the wall of the United States that he was promising. And if it is more narrow, then that is great for other countries. But as Leland Miller said, this is the sausage making in real time. And we just don't know yet exactly what their incoming president is going to decide on.
No final decision has been made. I don't know what critical imports are. Critical imports to who? That's kind of important at this point. That might be rather subjective to the incoming administration, so I'll leave that one there. But put it all together, this morning is pretty bullish. You've got them talking about one big bill passing by April for Republicans down in Washington, D.C. At the same time, you've got a report from the Washington Post that maybe the universal tariff effort will be diluted. Is it any wonder that equities are up again this morning by the amount they are?
Bullish for equities. And I think that this is sort of the key tension right now. All of that is very bullish for equities, especially because of the implicit message from this super bill, this very big, beautiful bill that would get passed, is deficit expansion. And this question about how much debt would have to get issued ahead of a week where we have $119 billion of issuance, including 30-year notes on Wednesday. A real question here about how much a check the bond market will be on this sort of everything is fantastic move that we've gotten in equity markets until the end of last year.
Terry Haynes says 2025, the bond market has a voice, and they may be the ones that are going to decide the size of the deficit. And Terry Haynes, even though Donald Trump is saying in black and white it's going to be one powerful bill, he's saying potentially it might end up being 2 reconciliation bills. Again, the sausage is being made in real time. We definitely have some markers in the sand, but right now, we still don't know for sure.
Off the back of those headlines from the Washington Post, bond yields down at the front end just a little bit. 2-year yield down by 3 basis points and a dollar weaker against pretty much everything in G10. Big lineup this hour. Coming up, we'll catch up with Dan Greenhouse of Solace Alternative Asset Management as stocks look to build on Friday's gains. Henrietta Trays of Vader Partners on President-elect Donald Trump's expensive agenda, and former World Bank President David Malpass on how Congress can fix what he calls the fake debt limit. We begin this hour with stocks rising to start the first full trading week of the new year. Investors piling into tech stocks over the last 12 months. Dan Greenhouse of Solace weighing in, saying Nvidia and AI are still the dominant story, given the size of those companies, and the single biggest risk is the same as it was in 2024. Some disappointment or demand slowdown for this story. Dan joins us now for more. Dan, Happy New Year.
And Happy New Year to you,
sir. Good morning. Good to see you.
Good to be seen.
Is this more important than maybe what's going to happen down in Washington, D.C.?
Nvidia? Yeah, I think so. I mean, listen, this is not to dismiss other risks, particularly on the rates front, the tariff story, another coronavirus pandemic. I mean, there's always things about which we should worry. I just think given how much the broader equity markets are being driven by that AI story, not just in the chip names, Nvidia, Broadcom, et cetera, but in the derivative plays, the industrial names that are building it out, the HVAC names, the rack companies. It permeates so many different parts of the market. I think if there was some material slowdown there, it outweighs the other risks.
Do you just assume that underlying growth with all that going on is going to be okay? Things are going to be okay?
Well, that's obviously separate from the economy. And yes, I think the GDP seems to be doing fine. I think we're talking about somewhere around 2.5% for the fourth quarter, somewhere around 2.5% for the year 2025. Whether it's 2.7 or 2.3, I think is largely irrelevant to the market. But from an economic standpoint, at least right now, what derails that, I'm not quite sure.
So basically, you're watching Hwang Jensen, and you're feeling pretty good, and you don't really care about bond yields.
No, it's not that I don't care about bond yields, but I think I didn't say that.
Well, I guess I'm wondering. I mean, the big sort of sticking point here is good economy, everything's fine, and then there's this real anxiety creeping into the bond market. Okay, everything's fine because of fiscal expansion ongoing, as well as this idea that maybe inflation's not going to be killed by rates where they are. At what point does that become the fly in the ointment for you?
So the inflation's not going to be killed by rates where they are. Listen, inflation has normalized. Is it at 2%? No. As an economist, am I disappointed in that? Sure, although I'm not an economist. But if I were, would I be disappointed in that? Yes. But as an investor, which I am, whether it's 2 or 3% is largely irrelevant to me. Obviously, that matters in the context of policy making and how that impacts the market. But from a broad market standpoint, 3% inflation is not particularly deleterious. And as we've seen over the last 2 years, the equity market, largely speaking, doesn't care. With respect to yields, listen, break-evens are basically unchanged. I don't think there's any, at least from an evidentiary standpoint, I don't think there is any explosion of inflation concerns. I think certainly the risk is that we don't get back, the consensus now agrees that we don't get back to 2% relatively quickly. But I would add, and the point I was building up towards, is the Fed told me that 2 years ago. They said 2 years ago that inflation was not going to get back to 2% until 2026. Now it's 2027. And they were not willing to do the work on rates to get it back there sooner. And so as an investor, I'm left with inflation normalizing, not as quickly as thought, and a Fed that's not stepping on the brake as quickly as they think they need to. And that's positive for risk assets. And I think that stays in place for now.
That's positive for risk assets. When you overlay that, though, with policy prescription from Washington, D.C., that by all accounts will probably increase the deficit by anywhere from $1 to $5 trillion and even upwards of that. At what point do you start to worry about real yields, about when you strip out inflation expectations, this idea that bond vigilantes are back having a voice at the table and they're not happy?
I don't think you meant to do this, but I take issue with it. The extension of the tax cuts will not increase the deficit. It's going to increase the debt over the 10-year period. It's going to cost $5 trillion in the out year. But I think most assumptions take into account that the tax cuts are going to be extended here in the short term. That said, 7% deficit to GDP ratio is just astronomically high, unacceptably high, and to use a scientific word, gross. But that's getting done. The tax cuts are getting done. It's not like the bond market's going to be surprised when we pass that reconciliation bill, either the first or second later this year. And we know the Penn Wharton, we know all the private estimates are somewhere in the $3 to $5 trillion range. I don't think that's a surprise to market, I guess, is the point that I'm making. With respect to yields, we've clearly seen risk assets struggle when the 10-year gets up into the 4.75 to 5% range. We're obviously not quite there, although equities are already wobbling. If we were to move higher, again, I think that's probably going to elicit some type of response. But the push-pull in markets is going to be, you're going to see thereafter, perhaps, probably, yields start to come back down from that level for whatever reason. There are numerous ones we can discuss. And that'll eventually, as long as the economy is doing fine and earnings are doing fine, which I think is your baseline, a resumption of that upward move.
How are you thinking about tariffs when last night President-elect Trump said that one powerful bill is going to be paid for mostly by tariffs? And this morning, the Washington Post says, well, it's going to be narrow, targeted tariffs on critical imports.
John, I think, put it perfectly at the start. We're watching the sausage get made. And I don't think any of us know, I'm not even sure the administration knows, what the final set of tariffs are going to look like on who. John made the most important point. What's a critical material? One person's critical material is another person's industrial input. So I don't know how to model or how to think about this because I don't know on whom, by how much, for how long. And alternatively, I don't know who is already circumventing the supply chain. We put tariffs on China. What good does that do me if I ship my goods to Vietnam and then ship it out of there? And we've seen this where our imported goods from China is lower today than it was 5 years ago. But look at our imports from Vietnam, Malaysia, Indonesia, et cetera, they're all higher. So this is a series of whack-a-moles here. That said, one big, beautiful bill, he can say that. I think, as you know, Congress probably is going to disagree with that.
But when you put all of this together, what is your base case for what actually does get done in 2025?
On tariffs?
On tariffs, on the corporate tax rate, on immigration policy?
I don't see any. Okay. My personal opinion, I don't see any way the corporate tax rate is lowered any further. I would be shocked if it's lowered by any amount, 1 percentage point. I don't think there's stomach there on the Hill, and you know better than me, but I don't think there's stomach on the Hill for the no tax on tips, et cetera, et cetera. I just don't think there's room in the budget for them to do that, and I don't think they will. Obviously, the TCJA is going to be extended. Those tax cuts will be extended, but I don't think any new tax cuts will be applied. On the immigration front, I'm less concerned about this from a market standpoint than some other people. Housing, obviously, and industries, leisure, hospitality, et cetera, that disproportionately rely on imported, undocumented, or illegal immigration are going to be hurt. But I don't know that it's the broad inflation disaster that some people are making it out to be. So that's my working view of things. I think, listen, from an investor standpoint, we're looking at companies that are doing quite well, that have clean balance sheets, that have good thematic stories, et cetera, et cetera. The stuff that we're talking about is all super important for the broader market and the risk landscape in general. But from an individual company standpoint, most companies are immune. Most companies are immune. Not all, but most companies are immune.
When you find those companies that you like, you're more comfortable taking equity risk or credit risk? Where do you find the bigger opportunity set right now? In fixed income or in equity markets?
Probably in equity. And you've asked me that question intermittently over the last year, and I've said credit at points. I think right now, the problem with the credit market is not the problem is not the right word, but the issue that you have in the credit market right now is the lower rated credits where you might get a much more attractive yield, 13, 14%, have experienced a tremendous rally over the last couple of months. And so the yield on the CCC index now, and I've said this 100 times, it bears repeating, CCCs are just a group of companies. They're not really an index, but CCCs are yielding somewhere around 10% right now, 400 basis points lower than a couple of months ago. And so a lot of that attractiveness has come out of the market, and as you saw in the equity market with the big rally. So I think if you're going to get paid, you're taking effectively equity-like risk in some of those lower rated credits, in which case you might as well get the potential of equity-like returns by taking that equity risk in the equity market. And so on balance, I think we're seeing probably more opportunities in the equity market right now. But that's not to say there's nothing to do in credit. I just think on balance, you're probably getting paid more in the equity market.
Equities up this morning by 0.7%. Dan, it's good to see you.
Always my pleasure, guys.
Thank you, sir. Dan Greenhouse there of Solace Alternative Asset Management. I want to bring you this headline, widely expected. It comes from Nippon Steel and US Steel filing lawsuits on their deal and calling it deal interference.
And what they're talking about is the interference from the President of the United States, Joe Biden, and the debate that really took place in the West Wing on whether or not to talk about domestic political concerns versus is this real a national security concern, given the fact that Japan is an ally. So we have that now as a lawsuit, and then tomorrow we should also be hearing from Nippon Steel.
We talked about this last week, closing a chapter on all of this. We're not closing a chapter on anything, can we?
No, and it sounds like the Japanese government is going to back Nippon Steel with respect to their lawsuit against the U.S. and saying that essentially this really undermines the alliance between the two. So get ready for a lot more of the same.
It's not going away. Let's get you the latest elsewhere with your Bloomberg Brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. A new report last hour from the Washington Post suggests that President-elect Donald Trump is exploring a universal tariff, but one that would only cover critical imports. 3 people familiar with the matter told the Post that Trump's aides are still discussing the plans to impose the duties on every country. It would, though, be a paring back of the most sweeping plans from Trump's 2024 presidential campaign, where he called for tariffs as high as 10 or 20% on everything imported to the U.S. United Airlines expects to begin using SpaceX's Starlink for in-flight Wi-Fi in the spring. That's an earlier than expected rollout. United said in a statement on Sunday that only members of the carrier's loyalty program will get the service for free. It marks a departure from the original plan, which would offer all passengers the service free of charge. And the U.S. are United Cup champions once again after Coco Gauff and Taylor Fritz took down their opponents from Poland in the tennis tournament. Gauff took down world number 2 Iga Swiatek in straight sets despite winning just 3 of her previous 13 matchups against her, with number 4 ranked Fritz beating his opponent in a tiebreaker in the men's singles. And that's your brief. John.
Danny, thank you. More from Danny in about 30 minutes. Up next on the program, Donald Trump's expensive agenda.
I am still shocked that I don't think that the market fully has embraced how much deficit spending I think we're about to do.
That conversation up next. Live from New York City this morning. Good morning.
Sea cargo is responsible for 3% of global greenhouse gas emissions annually, and ports are a major contributor. As Mexico's first carbon-neutral port, ICTSI subsidiary Contecon Manzanillo is setting the standard for progress. By deploying electrified cranes and tractors, recycling and reusing resources, and offsetting emissions by allocating resources to preserve critical ecosystems. This demonstrates how ports can be drivers of positive change and sustainable growth.
Equity futures right now on the S&P 500 up by 0.7%. We've got some big moves to talk about in foreign exchange. Euro dollar back at 104. 104.16, up by 1 full percentage point. I get it. Not much needs to go right in Europe to engineer a big rally, given the sell-off that we've seen. But this came from the Washington Post a little bit earlier this morning that President-elect Donald Trump's aides are exploring tariff plans that would be applied to every country but only cover critical imports. Now, I've got more questions than answers right now, but certainly the move speaks for itself, Lisa. It's a sell-off in the US dollar.
And you say this has to do with not much has to go right for the Eurozone, but you also see a similar sized move in the Mexican peso. So to your point, this is broad-based and showing the volatility and sort of the expectations baked in about tariffs and what we'd have to see to ignite a whole lot of volatility in some of these basic currency pairs.
Just waiting for that headline, that post from the incoming president, when he finally gets to read this later on this morning, and an aide just sort of pushes the story over and says, what do you think?
Yeah, he'll say critical infrastructure is absolutely everything under the sun because basically everything that you import is critical to us. So, good morning.
Or when we get the hearings from Jameson Greer and Howard Lutnick, when they start talking again about broad-based tariffs, this is as Leland Millen put it, sausage being made. You are going to see the debate, as we saw during Trump 1.0, played out very much so in public.
Looking forward to another 4 years of this. This is the latest this morning before we even get started. Inauguration, January 20th. Under surveillance this morning, Donald Trump's expensive agenda.
I am still shocked that I don't think that the market fully has embraced how much deficit spending I think we're about to do. I think that we're going to have $6 to $7 trillion in deficit finance spending come out of this Congress.
So here's the latest this morning. President-elect Donald Trump sharing that the Republican-controlled Congress is working on one powerful bill that will bring our country back, adding the bill will focus on the border, energy and tax cuts. Henrietta Trays of Veda Partners warming to prepare for a giant deficit number, writing, we expect federal spending to rise at least on pace with inflation. The main takeaway is that total deficit increases incurred by legislation passed in 25 could easily exceed $5 trillion. Henrietta joins us now for more. Now, Henrietta, as you know, 5 sounds like a big number, but for many, that's just a baseline. You extend TCJA and you're talking about 4 to 5 trillion. So upwards of what? How big could that number be?
Yeah, I mean, to get to your point from the earlier conversation, this is absolutely deficit increasing spending. The reason the tax cuts expired at all is because in 2017, $1.5 trillion was the deficit authorization. That was used and thoroughly exhausted, and now we have to do it again. So this is 100% adding to the deficit beyond what is the existing baseline. So extending the TCJA is $4.6 trillion. That does not take into account the fact that they do not have the votes to maintain the SALT cap at $10,000. That's your single largest revenue raiser at $1.2 trillion. And if you have to raise that to $20K, which would eliminate the marriage penalty as they describe it, or even further beyond that to get those 18 SALT caucus members, you're going to make the bill even more costly. Then I think you're also going to run into issues with repealing the Inflation Reduction Act. Those energy tax credits disproportionately go to red states and job creation in red states, and Republicans are going to have a hard time voting for those as well. So there's really no pay-fors. The tariffs, of course, will not be voted on by Congress, and so they will not be included in the score that we get for the tax bill. This is going to be a massively deficit increasing number that we see just from this one reconciliation bill, before we even take into account the military spending of at least $200 billion and more besides.
Henrietta, we haven't even got to the point that President-elect Trump also gave a shout out to extending the tax cuts and talking about one campaign promise that even Democrats welcomed, which is no tax on tips. Do you actually think that gets done?
No, definitely not, because of the problems that it incurs for Social Security and Medicare, spending from which the payroll tax and other taxes goes towards funding. So
but hold on, why is he then putting it in black and white if there's no appetite on Capitol Hill?
Because I think he's not in Congress yet. He's saying a lot of things that are going to be really difficult to get through, such as reducing the corporate rate to 15%, which is a non-starter as well. When I talk to Republican staff, they say, we don't really have any interest in reducing the corporate tax rate. And that's very much what you hear behind the scenes on no taxes on tips. It just doesn't have support on Capitol Hill. It's really a giveaway to Nevada is the way a lot of members think about it. And of course, those are only 2 senators.
So, Henrietta, who is the voice that we should be paying attention to? Is it the Trump tweets? Is it Speaker Johnson? Or is it incoming Senate Majority Leader John Thune?
I think that you should definitely focus on the House and Senate members, as the president does not have the authority to write tax legislation. So it's Jason Smith in the House Ways and Means Committee, Mike Crapo at Senate Finance. Those are the 2 senators, 2 members who are going to be working on writing the details of this bill. But more importantly, think about the members who are up in 2026. That is, of course, every single House member, but then some really key senators like Tom Tillis in North Carolina, Susan Collins in Maine. Those are going to be your linchpin deciders, especially when it comes to any spending cuts that they might want to see. Those members are going to be the ones who say, hold the phone, we're not ready to take those cuts yet.
How powerful, Henrietta, are the members going to be sitting behind their Bloomberg terminals trading 10-year notes?
I think that is definitely the least powerful member in the room. Not a lot of senators or congressmen are necessarily focused on what the market does. I know there's a perception that Trump cares very deeply about what the market does on a day-to-day basis, but look at what really happens. Lawmakers are going to write the legislation that they see fit, and the deficit spending continues to rise every single year. We're talking now about roughly $5 trillion in spending just in 2025 alone on a combination of this tax bill, keeping the government open, hiking the debt ceiling by another $1.5 trillion, et cetera. It's not going to factor in. They will be increasing the deficit.
Henrietta, there's a larger question here, though. If that member doesn't necessarily have the same clout, how much the deficit increases just by virtue of how much yields have risen? Yields have risen some 70 basis points last year. On the 10-year, they're continuing to rise into 2025. At what point does that become a limiting feature in terms of what they can do just simply because that rate alone expands the deficit?
I just don't see it really having an impact in D.C. It's definitely a conversation in boardrooms in New York and on Wall Street. But when you go to D.C., they talk about the near and present danger of the expiring tax cuts, about the potential for default, about the need to keep the government open. There's not a break on federal spending when there's a to-do list. And this is the 1 year that Republicans have majority control over all 3 chambers, and they have a massive to-do list. They have to get it all done this year. And what will happen is what usually happens. As we get closer to a midterm election cycle, everybody starts to clutch their pearls again. So we'll have a conversation around reducing federal spending, reining in the debt, talking about interest in 2026. The DOGE, or the Department of Government Efficiency provisions, are expected on July 4th, 2026. That's 4 months before the midterm elections. There's no scenario where we cut the deficit by trillions of dollars 4 months before a midterm. It's just not realistic to anticipate politically. So you'll hear the conversation start in 2026, but in the immediate term, 2025 is all about spending.
Henrietta, appreciate your time, as always. Henrietta Trays there, Aveda Partners, on the latest. Are we 50 basis points away from a different conversation? 100 basis points away from a different conversation? How much higher do bond yields need to be?
Honestly, she was saying that's not really the focus in Washington, D.C. At a certain point, though, it has to become, because it adds to the deficit and reduces how much they can spend. And frankly, it comes under this question of the debt ceiling and a whole host of other issues. But it's a good question. At what point do the debt vigilantes get the main seat at the table?
David Malpass, the former World Bank president, joining us shortly with this to say recently in a Wall Street Journal op-ed, saying the outgoing government is leaving a tailor-made debt crisis for Mr. Trump. That conversation just around the corner. If you are just joining us, equities near session highs of 0.75% on the S&P 500. Bond yields a little bit lower. The dollar weaker. Euro stronger. Euro dollar 104. That currency pair positive by 0.9%. Equities close to session highs, up by 0.7% on the S&P 500. On the Nasdaq 100, up by 1 full percentage point, with 2 hours away from the opening bell. With your morning movers, here's Manus Cranny. Good morning, Manus.
Jonathan, good morning. It was the Mag 7 that had a revivalist movement on Friday, up 2.5%. Kick it off with Boeing this morning. Barclays has decided to go overweight. So this is the first time they've turned bullish on this stock since 2019. They've upgraded the stock price to $210, so a considerable uplift from here. The original target price was $190. Why? Why turn positive for the first time since 2019? They shored up the balance sheet, and it is no longer an overhang. Sustained positive momentum for production and deliveries, and this is critical to the story of Boeing. What are they going to reset the max production to? Where do we get to in 2025? Stock is bid this morning. Nvidia, I talked about the Mag 7, we're up 2.67% this morning. Add on your 4.5% bump that you had on Friday. That gives you nearly 7% in the space of 2 days. Honhai, our Foxconn, has seen a 15% jump in their revenue. So that's emboldened the story. Microsoft coming out and saying, we're going to spend $80 billion in the fiscal year coming. Last year in the fiscal year, they spent $50 billion. So that mega capex story remains. And it is emboldened again at Microsoft. $80 billion for the fiscal year. I'll leave you with a snapshot of GM. The deliveries in China jumped by 40% quarter on quarter, 600,000 units there. In China, in the complete year 2024, they sold 1.8 million vehicles. 50% of those sales in China were in the EV space, and half of their annual sales were in that. Just a fact for the day. Here in the United States of America, Toyota sold nearly 1 million EVs, hybrids and EVs last year. This company sold 114,000, and they don't have a hybrid. Go figure.
Manus Cranny, thank you, sir. Stock up nicely in the pre-market by 2.5%. Lots of news to get through. Under surveillance this morning, Secretary of State Antony Blinken hoping to broker a ceasefire deal in Gaza before the end of the Biden administration. Blinken telling reporters, quote, "We very much want to bring this over the finish line in the next 2 weeks." Elsewhere, New York City drivers now paying up to $9 to enter the busiest part of Manhattan. Today marking the first regular weekday under the country's first congestion pricing program. President-elect Donald Trump and Governor Phil Murphy of New Jersey still vowing to fight the toll. Our very own co-host from Queens with some strong feelings on the matter.
Well, Trump has called it a regressive tax. What I have heard officials talk about really for years that are on the outer boroughs, and as they say that their constituents that have to go into Manhattan that have no choice but to take their car, this is going to hurt them the most. The MTA is desperate. It needs money. But many say, is this really the best way to fund it, especially when more people have a lot of anxiety these days about getting on the subway due to safety concerns?
There's a little bit of what comes first, the chicken or the egg, right? You can say it spends too much money, it's badly managed in terms of the MTA and the subway system. But if they need more money to make it safer, to make it a better option, to make it faster for people to be able to go in, then how are they going to do that at a time when the federal government isn't going to do that? So ultimately, that is the question, how you do that, how you sort of thread this needle. Good luck.
Can I address a myth that is going around Europe? There is a story that they believe.
Yes.
The story that Europeans believe is that Americans don't really pay taxes. And they come to places like New York and they see the infrastructure and they're like, they need to start paying taxes to invest in the infrastructure, to make things safer, make things run better. We pay taxes, lots and lots of taxes. Believe me, it's how they spend the money and how much money is being wasted that I think speaks to what's happening right now with the incoming administration and Elon Musk. Do we really need to give them more money? Or do they need to spend the money they're getting more efficiently?
Again, and I would agree with that. Can you do both at a time where they need signal repairs? I mean, this weekend you saw all the subways shut down on certain lines because they had to repair signals that last were put in place in 1967. So here's the question. At what point do you incentivize the political will to be more efficient by actually charging money to people that suddenly care about where that money is going? I mean, this is a larger question about how politics is run, and I am not the person to have it. But I will say it is an important one to be had.
But, John, to your point, if you're a New Yorker, you're paying federal tax, you're paying state tax, and you're paying an extra city tax. I also lived in London, where I paid a ton of tax, similar to actually what you end up paying when you put it all together in New York, yet you saw your money put to work. Never felt unsafe taking the underground. Never felt unsafe really walking around the city. Never saw garbage on the streets. Very different in terms of how they use the money and where the tax money's being spent.
This debate's not going away, and we can have it another day. I need to turn to this, the weather. It's freezing outside. A major winter storm making its way across the United States. Millions of people bracing for a mix of snow, freezing rain and sleet as the day begins, with more than 60 million people under winter alerts nationwide. Alex De Silva of AccuWeather joins us now with the latest. Alex, is it as bad as people feared?
Yeah, it certainly is, and it's a very widespread storm we're dealing with right now, stretching anywhere from the center of the country all the way to the East Coast. We've seen reports 6 to 12, even 18 inches of snow back across Kansas and Missouri, with up to 3/4 of an inch of freezing rain. Down trees, power lines across Missouri, Kansas, and into Kentucky as well. But where's the snow now? It's heading towards the big cities. Right now, Baltimore, Washington, D.C., right around 4, 5, 6 inches of snow right now, and a couple more inches will be on the way throughout the day today, as well as some freezing rain down here. What we got to watch out, Richmond, Roanoke, they could pick up maybe 1/10 to 1/4 of an inch of freezing rain in some of these areas as well.
Alex, I've got a New York bias. When do I need to call in sick? Thursday? Friday?
Yeah, well, New York City, we're keeping a close eye out for. I think the snow probably gets there sometime this afternoon, late morning into the afternoon. Doesn't look like a whole lot, maybe a coating to 1/2 an inch, maybe up to an inch, but I think most of the heavier snow will be off to their south.
Got it. Alex, thank you. Appreciate the update. We'll get an update from Alex tomorrow as well, I hope. Alex De Silva of AccuWeather.
So 1 inch? You could call it out with the flu?
Yeah, you know, that's a very British thing to do. 1 inch of snow, it's just like...
It's also what they do in Washington, D.C.
Maybe they don't know how to handle it there, but I would hope that we could do better than that.
In Washington, D.C., this is actually a huge problem. They don't have the infrastructure set up to clean the streets. Everyone freaks out when it snows, although someone did send me a message today saying the news is not actually matching what I'm visually seeing outside my window this morning.
We slated the subway system in New York City a little bit earlier. Can I just say, when it snows in Manhattan, it's pretty impressive how quickly things go around and... clean up pretty fast.
Wait, hold on a second. This is impressive. Saying something nice about the subway.
Not the subway. I just mean
street clearing.
Street clearing. Okay, well, you know, both. It's the fastest way to get around when it snows, just say.
Let's turn to politics. President-elect Donald Trump calling for the debt limit to be abolished before he returns to the White House on January 20th. The former World Bank President David Malpass, writing in a Wall Street Journal op-ed, President-elect Trump was right last week when he raised a red flag over the debt limit. The outgoing government is leaving a tailor-made debt crisis for Mr. Trump that complicates his work to implement his mandate, cut taxes quickly and rebuild US strength. David joins us now for more. David, welcome to the show, sir. It's always good to catch up with you. I just want to address that one line in the op-ed, a tailor-made debt crisis. Can you just explain that a little bit more?
That's right. This has been coming on for a year, for 2 years. They kind of planned it so that the new president, the next president, would have the problem. So Congress spent all the money. And so it's tailor-made for a crisis, because if you don't raise the debt ceiling, you have a default on the national debt. What I've wanted them to consider is rewriting the debt limit so that it actually works. You've got to stop the spending before it happens rather than after you've already spent it.
David, we heard over the weekend from Mike Johnson, House Speaker, that there's going to be one big, beautiful bill, and it's going to probably come in April, and it will be put through by reconciliation to get all of Donald Trump's agendas in place. We were speaking with Henrietta Trays. She said this could expand the deficit by some $5 trillion. Do you think there is the will to start to revise the debt ceiling debate and some of these other issues to structurally reduce the deficit under the Trump administration?
I think there's a strong will to reduce spending. One of the things going on is Biden is leaving the cupboard bare as he leaves office. That means they've spent up as much as they can on the current fiscal year. They're in the process of obligating. Every day that goes by, they're obligating huge amounts of money that can't be gotten back through the rescission process. So if you make a grant and you obligate the funds, you can't get them back. And then another way that the cupboard is bare, and it's showing up in the bond market, is they've kept the issuance of debt short term. So one of the biggest decisions facing the new administration will be what maturity to issue at, and does the Federal Reserve buy back all the long-term debt? You know, the Fed is this giant hedge fund. It's owning all of the long maturity, or a big chunk of the long maturity bonds. So I think over the last 3 months, they've lost maybe $650 billion just on having a bad bond trade. Yields have gone up. So they're the big holder of long-term yields. So the consumer feels okay, but the government itself is losing massive amounts of money until they find a way to slow down the spending machine.
Do you think, just to sort of build on that, David, that the reason why we've seen that rise in longer-term yields is because of the deficit? Is this truly the bond vigilantes coming back to the table?
There's some of that. The market looks ahead and says, do you have a mechanism to actually control yourself? And so the bond yields are having multiple problems. One is the Fed's models are really broken. So the Fed is basically saying, if you have more growth in the economy, we assume it will be inflationary, and so we will have higher interest rates. So it's a broken models problem. But then second, as I mentioned, the duration of the government was held down. The Fed was buying, the Treasury issued some long-term treasuries, but then the Fed bought them back. And so this is a major problem because you have to get over the hump. You can do that through confidence, and that means, are you able to repeatably, over and over again, cut spending? Do you have a mechanism to actually control what Washington spends? That's yet to be seen, but I think they can do it.
David, I don't really see any restraint right now with the incoming Trump administration. President Trump talked about yesterday one powerful bill, border security, energy policies, renewing Trump-era tax cuts, except making them better to include no tax on tips. And we're talking about a president who spent $8 trillion or added $8 trillion to the deficit during Trump 1.0. So where do you see the appetite of Trump to want to cut spending?
It's going to be a combination of increasing growth and production within the economy and making the existing spending more efficient. So if you get more from it and you have fewer people but fewer obligated funds, that's going to be the trick. I want to really put emphasis on this idea of markets being forward-looking and looking at the output of the economy. If you can change the energy system, that means both the production but also the transmission of energy. That's going to have a big downward effect on inflation. The Fed doesn't have that in its models. Each of the Fed's models are broken. One is on how you set interest rates. One is how you use the balance sheet. They've used it very harmfully in terms of the lost money. And then third is their regulatory policy. The Fed has this massive control over lending to small businesses, and that hasn't been going well, but that can be repaired and fixed. You get more output, less inflation, and you can bring interest rates and bond yields down.
Something you've talked about a few times, David. We'll have this conversation again in the near future, I'm sure. David Malpass there, the former World Bank president. In the bond market, bond yields a little bit lower at the front end of the curve. We're down 3 basis points on a 2-year, 4.25. With an update on stories elsewhere, with your Bloomberg brief, here's Danny Berger. Hey, Danny.
Hey, John. President Joe Biden said that he's determined to peacefully hand over power later this month. Writing in a Washington Post op-ed published last night, Biden said he's, quote, determined to do everything I can to respect the peaceful transfer of power and restore the traditions we have long respected in America. Adding, I've invited the incoming president to the White House on the morning of January 20th, and I will be present for his inauguration in the afternoon. Meanwhile, shares of U.S. Steel are higher in the pre-market, nearly 5%. According to a statement from Nippon Steel and U.S. Steel, the two jointly filed lawsuits to remedy the interference with Nippon acquisition of the U.S. company. The companies say that they are confident that they have, quote, strong cases and will rightfully close the transaction. The New England Patriots have fired head coach Jared Mayo on Sunday after they went 4-13 in his first season as an NFL head coach. The move came soon after their season-ending victory over the visiting Buffalo Bills, which ended up costing them the top pick in this year's draft. The 38-year-old Mayo played linebacker for the Pats from 2008 to 2015. His one-year stint as head coach ties for the shortest in franchise history. And that's your brief, John.
Danny, thank you. Appreciate it. Up next on the program, the Fed's data dependence.
I think we're actually going to see a year where the data plays an even bigger role. And we already know that can create a lot of unnecessary volatility because it's hard to measure $30 trillion economy in real time with a lot of accuracy.
That conversation up next. We'll catch up with Jim Bianco of Bianco Research, live from New York. You're watching Bloomberg TV. Another leg higher for stocks. On the equity benchmark, the S&P 500 up now by 0.8%. We're down by about 2 basis points on a 10-year, 457.74. Under surveillance this morning, the Fed's data dependence.
I think we're actually going to see a year where the data plays an even bigger role. And we already know that that can create a lot of unnecessary volatility because it's hard to measure a $30 trillion economy in real time with a lot of accuracy. Part of the Fed's job is to help turn the lights on and at least chart a path. I don't think things are as calm in the labor market as the Fed kind of in their latest projection seems to view it.
Well, here's the latest this morning. Both San Francisco Fed President Mary Daly and Governor Adriana Kugler speaking over the weekend, saying the central bank must reach its 2% inflation target. We've got a full slate of Fed speak on tap this week. We'll hear from Barkin, Waller, Harker, Schmidt and Bowman and get minutes from the Fed's December meeting. Jim Bianco of Bianco Research joins us now for more. Jim, welcome to the programme and Happy New Year, sir. As you think about the risks for 2025, how do you see things? Is the bigger risk an employment stumble or the bigger risk a reacceleration in inflation?
Oh, I think the bigger risk is reacceleration, not only of inflation, but of the economy, too. We've been seeing the economy. Economists like a term called potential growth, which is not measurable, but what do they think the economy would grow if we're not stimulating it or slowing it down? And that's about 2.5%. 8 of the last 10 quarters, the economy has grown at least at that level, and it's looking like it might do it again in the fourth quarter once we get those numbers at the end of the month. Add into that the inflation rate is not getting to 2%. There is an argument to be made that it is stalling it around, the high twos if you measure it by CPI, because we're at the same levels on year-over-year CPI that we were 7 months ago. And all of this is just suggesting that the acceleration story is going to be the bigger issue. Now, yeah, there's always concern that the labor market could have problems. But right now, most of the data, whether you're looking at claims or unemployment or payrolls, is not really reflecting that concern, at least not yet.
How much, Jim, does this matter to Jensen Huang? Can Jensen Huang keep on delivering a stock market that gains a little bit even on the margins, even with rates going higher, even with this concern that maybe the Fed was mistaken by cutting rates?
Well, first of all, everybody should care about Jensen Huang because he is the most important person in 2025 to everybody's returns, no matter what market you are investing in right now, because Nvidia is the driver of everything. As far as he's concerned, it should matter at the margin because it will cost his customers with the ability to buy his products, not necessarily his ability to deliver those products. And that's what we have to be careful of. The AI expansion is going to be unbelievably expensive. The energy needs are going to be very expensive. The power companies that are going to have to power it are going to need to borrow a lot of money. And so it's going to matter whether or not the economy does accelerate and they have to pay higher interest costs in order to finance this AI boom.
I guess the larger question here, Jim, is tech outperformance the only thing that can rescue a market with yields where they are, given how much they climbed last year and how much they continue to climb early this?
Yeah, except if you look at the stock market, what's interesting is that the S&P Friday's close was within 1 point of the close the day after the election. So the S&P hasn't really done a whole lot, since election, other than the initial surge on the day after the election. It's at the same level that it was back then. And why is that? Because I think interest rates are getting in the way and that we are at levels that are problematic for the stock market. And if we continue to see any kind of growth or any kind of reason to keep these rates up, it's going to continue to get in the way of the story of, higher stock prices in 2025.
Jim, Speaker Johnson is basically saying we could get this deal done in Washington, one big, beautiful bill, by May. Would the Fed then wait on the sidelines, potentially see what those policies look like in May?
I hope they don't. Chairman Powell has talked about this concept of fiscal dominance. And, to put it in very simple terms, It's their problem. It's not mine. My problem is employment. My problem is inflation, being Chairman Powell. And I will set policy based on those. If there's a deficit or if there's going to be a bigger deficit or a smaller deficit, we just had an election. It's their problem to deal with. It's not the Fed's problem to try and accommodate, higher levels of spending or larger deficits.
But if that is the picture that potentially emerges, does that mean that risk appetite can get worse?
It can. I mean, the thing you have to keep in mind is if you go back to 2019, we used to use the phrase, Tina, there is an alternative. There is an alternative now. There's 5 and 6% yields in the bond market right now. There's a 4.5% effectively risk-free money market rate. So you've got alternatives to the market. Now, I know nobody thinks that those are alternatives because we're all stuck on momentum and that the stock market's at 220% years. So therefore, it must mean we're going to have another 20% year in 25 and probably another one in 26. But actually, the alternatives do exist, and that is going to become, a big hurdle for the market to get over.
Jim, heard a lot of numbers forecasts on a 10-year yield. I mentioned Jordan Rochester and the team over at Mizuho looking for 5. 5 is more likely than 4 on 10s in the US. Academy's Peter Cheer also said he's looking for 4.75. Nothing about this administration, despite Doge, points to it being fiscally conservative. What kind of numbers, Jim, are you thinking about?
Well, I think that we're going to probably see him take out the October 23 high. That was when we hit 5.02 on the 10-year note. So I'm thinking 5.5. In other words, a higher high than we saw last in 2023 now, 15 months ago. And that will continue the trend that we've seen since 2020, that we're in a secular rise in interest rates. It didn't end 15 months ago. So, I still think we'll probably take out that 5%. And at this point, that's 40 basis points away, maybe 50 basis points away. That's not that far away when you think about the scope of you got an entire year to potentially reach that target.
Close to 460 this morning. Jim, appreciate your time. Jim Bianco there of Bianco Research, looking for yields to breach 5%, Bramo, in the next several months through this year.
The level that a lot of people here have said is the danger zone, including Lori Calvasino, in terms of equity returns. You just wonder whether there'll be a response, whether there'll be, as Dan Greenhouse was talking about, the buying mechanism that comes in at 5, or whether people start to get a little bit more concerned.
And is it 5% of the 10-year yield that matters more than Doge? Terry Haynes this morning, bond market may decide the size of the deficit. How much is that going to regulate the same way, Jonathan, you talked about stocks regulating Trump in 1.0?
Lisa mentioned Dan Greenhouse, though. Dan Greenhouse was very quick to say that the biggest risk this year came from Nvidia. And what you heard there from Jim Bianco, the most important man for the year ahead, not the President of the United States, not Chairman Powell, but Jensen Huang.
Yeah, the rock star who comes in with his leather black jacket. Is that what we hear from Dan? Every time he comes on.
7% of the S&P, and it's like 50% of investor sentiment. We've said that a few times.
Well, especially because this has been the story that has kept and powered this equity rally. It has been the AI transformation. Can it continue to? And does that end up being the haven trade at a time where yields might continue to climb or stay where they are?
I don't want to be all doom and gloom about Nvidia, but these companies that are tethered to their chips being made in Taiwan, have they really realized what is going on in terms of espionage of China in the United States? And just this morning, Taiwan talking about a Chinese ship breaking a subsea cable. Is anyone in Wall Street going to wake up to the fact that there is actually geopolitical concerns brewing out in the open when it comes to Taiwan and China?
That story from the Journal over the weekend, pretty concerning, right?
Oh, it actually kept me up at night.
Yeah.
It actually kept me up. I want to know what people are doing about it.
Pretty shocking. Coming up in the third hour of Bloomberg Surveillance, we'll catch up with Liz Young-Thomas of SoFi, the former New York Fed President Bill Dudley, and Michael Capon of Morgan Stanley, alongside Greg Peters of PGIM Fixed Income from New York. This is Bloomberg.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations to come.
We just experienced one of the best 2-year stretches for markets in history.
All the positive news is priced in.
It's hard for me to be negative U.S. equities.
The U.S. growth situation is in pretty good shape.
I'm looking for a bumpy year, and a lot of those bumps are going to be occurring over the next few months.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
The first full trading week of 2025 looks absolutely stacked, and we're hitting the ground running. Buying stocks up 0.75% on the S&P 500, on the Nasdaq up by more than 1 full percentage point. This week, jam-packed, full of economic data and debt sales, and it includes payrolls Friday. The estimate for Friday, 160K. The previous number, of course, 227. Before we get to that, we need to talk about 119 billion US dollars of debt sales across a 3-year, 10-year, and 30-year maturity. It's a busy week ahead.
Starting at 1 p.m. today with $58 billion of 3-year notes and finishing on Wednesday ahead of the Thursday day off for equity traders. Bonds are still going to be traded for part of the day on Thursday. But the idea here is how much demand is there at a time when we've seen bond yields creep up dramatically? And this has come from the real yield sector, not necessarily inflation expectations. Is this deficit concerns, or is this just something that's normal? That basically we're getting back to a renormalized yield curve.
Shaping up potentially to be a really important 24 hours. On the debt front, to your point, the amount of supply that we'll get through this week and maybe beyond, we've got Speaker Johnson talking about one big bill being passed by April, perhaps even by May. Now we need to talk about tariffs as well, a more complete picture on the effort from the incoming administration. And we go back to what we talked about through most of this morning. From the Washington Post, President-elect Donald Trump's aides are exploring tariff plans that would be applied to every country, so a universal tariff, but only cover critical imports. This according to 3 people familiar with the matter.
So when you think about critical imports, you think about things that are detrimental to national security and economic security concerns. We need more details, but as Leland Miller has said, this is the sausage being made in real time. My question then would be to the president-elect, what's the pay first? Because he put out a tweet last night saying there will be this one powerful bill, border, energy, reviving the Trump-era tax cuts, including expanding them, like no tax on tips. And all will be made up with tariffs. Well, how is that going to happen if they're not blanket tariffs and they're actually only targeted and narrow?
Get ready for your head to spin with all the potential proposals and the whipsawing from all of the headlines. And this really goes to the crucial point that you brought up earlier today. Stuart Kaiser made it last week. Is this 2017, which was low volatility, big promises, big expectations baked into risk assets, or is it 2018, which was high volatility with all of the potential implications coming in and sort of seesawing, leading to actually a negative return on the S&P 500? That's really going to be the key and one of the big takeaways from some of the big moves that we've seen in the FX market on some of these headlines.
There is, of course, potential to be whipsawed by all of this. We've mentioned this a few times already this morning. The incoming president only needs to post on Truth Social or on X and just turn this market in the other direction. But I think this morning's an important stress test. We always say this. You can learn something from the data, the information, or the way the market responds to it. I think what you've learned this morning is that headlines around trade and tariffs are more important to the likes of the Europeans, to the Canadians, to the Mexicans, to the Chinese than they are maybe to domestic American markets.
Which has been one of the big takeaways that a lot of people have said. Basically, the U.S. catches a cold, everyone else catches the flu, especially when it comes to tariffs that people thought just simply put a moat around the U.S. and reinforced its exceptionalism.
And when it comes to tariffs, they could be immediate. Donald Trump on January 21st, or I guess on January 20th, after he's inaugurated, could go to the White House and talk about tariffs and have executive orders on tariffs. When it comes to the big, beautiful bill, that is going to take months of debate and negotiation. And one viewer actually texted me when the Washington Post article came out and said the main issue is that Trump wants tariffs, but he also wants stocks to go up. At some level, you can't have both.
The stocks went up on Friday. They're up again this morning. And I would say some of that came from how smoothly things went down in Washington on Friday morning. We were looking for a mess. We didn't really get one. Speaker Johnson sailing through pretty smoothly.
Yeah, basically, he had one vote. A couple of holdouts said, actually, let's just pause, take a break, came back, got passed through. Just remember what happened. Kevin McCarthy 15 times he was rejected before he got that House speakership.
I think they've learned the lesson from that mess. Equity futures right now on the S&P near session highs up by 0.8%. Coming up this hour, we'll catch up with Liz Young-Thomas of SoFi as stocks recover after a shaky start to 2025. The former New York Fed President Bill Dudley on what he calls the FOMC's communication problem, and Michael Gapin of Morgan Stanley as we count you down to the December payrolls report. We begin this hour with futures positive after snapping a 5-day losing streak to close out last week. Liz Young-Thomas of SoFi writing 2025 can be positive for business, albeit less room for runaway stock returns at these valuation levels and high earnings expectations. Reevaluate the opportunities for buying. There's plenty out there, not at all-time highs. Liz joins us now for more. Liz, good morning and Happy New Year. Let's talk about those opportunities elsewhere. Where are they?
Sure. Well, when you, when you look at the earnings picture for 2025, there are some pretty big reversals that are expected, and I think investors need to pay attention to that. We get so obsessed with this tech trade and focusing on whether or not we should be in a handful of tech names or all of tech or certain parts of tech. But the second best sector in the S&P for earnings growth is actually expected to be healthcare this year. And then you look at things like materials, industrials that are going to see these big reversals from what their results were last year. So I think there are opportunities out there that are not trading at all-time highs.
How much are these opportunities torpedoed if yields don't necessarily come down?
Well, so the question about yields, we know that this 4.5% level on the 10-year has been really critical to the equity markets at large. You start getting to that 4.5% level, markets at large, indices at large start to struggle. When you're looking at the growth trade, so just a straightforward growth trade, that's what's going to get hit first and hardest, largely because a lot of those multiples have expanded so much over the last 2 years, but also because when you just think about the discount rate, this is rational for markets. As yields rise, the discount rate rises, which means that what you're willing to pay for a stock today is lower than what it would be if that discount rate was lower. So yields should put pressure on some of those growth names. That being said, I think investors are going to start looking for opportunities, growth opportunities in different places. And some of those places might be pharma and biotech. Healthcare really lagged the index last year. There's a lot of bad news priced in, bad expectations priced into healthcare right now. I think they're priced for a good opportunity in 25 if investors need other growth options.
Liz, when you talk to investors, how receptive are they to this message? Or basically, you've either had big tech that have continued to outperform, or people are getting a little bit nervous that everything has just gotten a little bit elevated and want to hide out in T-bills. I mean, how much are people willing to sort of look into the nuance at a time where some people are worried about peak sentiment?
Well, I think peak sentiment probably happened post-election, and we baked in a lot of this optimism, but without policy clarity. So now we've gotten to a more rational level. We've had this little pullback. We ended the year on a bumpy note. We sort of started the year on a bumpy note because we know that we need more clarity. We need more answers in order to actually trade those stocks for the long term. So how much are people looking into the nuance? I don't think so much yet, because we're in this waiting game between now and inauguration, now and when the cabinet goes in place, now and when we have actual clarity on some of these big policies. Also, when you look at a market that is so driven by momentum, people aren't looking at the nuances. We're looking at the momentum trade. We're looking at where sentiment is driving things. And a lot of times in those environments, you have this FOMO attitude, and that does ignore a lot of the nuances. So I think as time goes on, and if tech continues to come under some pressure, and if there is, perhaps a slowdown in earnings growth, a slowdown in the optimism, which doesn't necessarily mean a pullback, but just a slowdown in the optimism, investors will start to look outside and have to be more nuanced about it. I think profit margins and earnings are going to be a really critical factor in investing this year.
Liz, when you talk about policy clarity, have you gotten any clarity over the past 48 hours from Washington and Mar-a-Lago when it comes to the one big, beautiful bill and hopefully getting it done by May?
We've gotten a little, but as you guys mentioned earlier in the show, the market doesn't seem all that upset by it at this point. I don't think, first of all, it's a surprise to say that we're going to see more tariffs this year. I think we know that, but we still don't know exactly when that's going to happen, how much it's going to happen, and all the different places where it might actually impact markets. So again, it sort of just reinforces we're still in this waiting game. Things are proposals right now. They're not signed in. They're not affecting stocks at this point. Now, of course, as they become more and more realistic, the stock market will price that in ahead of time. But I think the message of today is that, okay, we know there's going to be more tariffs coming. Maybe the message is a little bit different than what we thought 2 weeks ago, but it's still tariffs and we're still not sure. So we have to wait a little bit longer.
Well, if it's still tariffs, regardless, even if they're more narrow, is it now time for companies to potentially raise prices?
I don't think that companies are going to get away with raising prices as much as they have over the last few years because consumers now realize that inflation has come down. It was easier to pass through those costs and those price increases when inflation was rising, wage growth was rising. Now we've got cooling wage growth, we've got CPI and PCE numbers that most people understand are at least at a lower level than they were, certainly not deflationary, but at a lower level than they were. So it's more difficult to justify a pricing pass-through, even with a tariff change.
Liz, can you help us with the week ahead? We have $119 billion of debt auctions. We have the key labor report that comes out on Friday with the expectation of 160,000 jobs printed in December. And then we have the potential for truth postings or any other utterances around the Trump camp. Of those three, which are most important for you?
I'm focused on the jobs report. We also have JOLTS this week. So when you look at just what the market had been focused on through most of 2024, it was jobs. We had turned our focus to the jobs market because it seemed as if inflation had been largely defeated. Now we've got this environment where jobs are still very important. Inflation has again become very important. So this week, the story is going to be about jobs. I don't expect there to be any big surprises yet. I think what everybody is watching for is to make sure that we're still expanding the labor market. But one of the tenets of our 2025 outlook is that we have low churn in the labor market right now. And what I mean by that is low hiring, low quits, which means people just aren't moving around quite as much. So this idea of adding a ton of jobs every month, I don't think is something that investors are really looking for. What we're looking for is just no real deterioration in the labor market, because right now, as the Fed has mentioned, the labor market is still resilient and it's pretty well balanced. So what we need is for the labor market to stay stable while the rest of some of these bumps in the road figure themselves out.
We will get a lot of labour market data this week, including JOLTS data tomorrow. Liz, appreciate your time. It's good to see you. Liz Young-Thomas there of SoFi. Looking at the FX market, can't look away from it. 5 weeks of dollar strength, 5 weeks of euro weakness. That's the longest run of euro weakness going back to February of last year. That is not how we start this week. We bounce. Euro dollar up by more than 1%. Euro dollar 104. That Washington Post story really kicking around the US dollar this morning.
Yeah, pointing to the idea of maybe a more targeted approach on tariffs and maybe the sense that Europe would be spared at least even the really significant headlines that some people were worried about with the opening salvos of tariff talk.
Equity's doing better as well this morning. Equity futures up across the board with an update on stories elsewhere. With your Bloomberg Brief, let's cross over to Danny Berger. Hey, Danny.
Hey, John. Some details from that report from the Washington Post. It suggests that President-elect Donald Trump is exploring a universal tariff, but would only cover critical imports. 3 people familiar with the matter told the Post that Trump's aides are still discussing the plan to impose the duties on every country. It would, though, be a paring back of the most sweeping plans from Trump's 2024 presidential campaign, where you'll recall he called for tariffs as high as 10 to 20% on everything imported to the U.S. Prime Minister Justin Trudeau is said to be preparing to announce his resignation. The Globe and Mail newspaper said the announcement could come as early as today. It would trigger a race for the party leadership, the winner becoming prime minister. Trudeau has been under pressure from his lawmakers and his party to quit for months. Scrutiny grew last month after his finance minister, Chrystia Freeland, quit. And at the Golden Globes, The Brutalist and Emilia Perez were the night's big winners after taking home Best Picture awards for drama and comedy. The Brutalist star Adrian Brody also winning Best Actor for his performance in the movie, and Brazilian actress Fernanda Torres winning Best Actress for her role in I'm Still Here. In the TV awards, FX's and John's favorite, Shogun, cleaned up, winning Best Lead and Supporting Actor, Best Actress, and Best Series. And that's your brief, John.
Danny, thank you. Shogun deserved to win it all. And I apologise to regular viewers of Bloomberg Surveillance who might have wanted to watch Shogun and had the ending ruined by Bramo. a number of months ago.
Really? That's what this came down to?
I'm not sure they're viewers
Congratulations
anymore.
to them for a record showing at last night's awards
I'm not
ceremony.
sure they're viewers anymore.
Okay, that's
I
great.
think they abandoned
Really?
us after you
I
ruined
can
the show
abandon
for
us
them.
too. Okay, good.
Up next, the morning calls, plus former New York Fed President Bill Dudley on the Fed's communication problem. That's next. You're watching Bloomberg TV.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Payrolls on Friday. The estimate in our survey, 160. This from Andrew Honhorst of Citi. Just publishing 120,000. That's what they're looking for, 120. And the unemployment rate rising to 4.4% in our projections for December should remind markets that the labour market has not stabilised and is continuing to soften. Goes on to say risks are balanced to an even softer reading than that. This, I think, plays into what we heard from Priya Misra of JP Morgan just last week on this programme. If you missed that, this was the line that stood out. Risks are asymmetric into payrolls this week. Slightly weaker report, and March cut will be back on the table. And we mentioned this, Lisa, back on the table pretty quickly.
Basically, the idea here is if we get a downside surprise, it's going to have a bigger reaction in the bond market, a rally, a bid into the market as people reassess just how aggressive the Fed might have to be.
Got a rally right now in the equity market, up by 0.75% on the S&P 500. A rally here across the board to kick off the first full trading week of 2025. Let's get you some morning calls. First up, TD Cowen raising its price target on American Airlines to a street high 25, citing improved pricing and a return of business travel. That stock is up by 4.5% in early trading. Your second call from Barclays, upgrading Boeing to overweight, seeing new momentum for production and deliveries. That stock is up another 1.8%. And finally, Stifel raising its price target on Tesla to 492, citing full self-driving and cybercab initiatives as catalysts. That stock is up by more than 2%. Let's turn to the Federal Reserve. Traders looking ahead to the Fed minutes this week and a rate decision at the end of the month. The former New York Fed President, Bill Dudley, calling for the central bank to improve its communication, writing, the better the quality of the Fed's communication, the more accurately market participants can assess how policy is likely to change. This tightens the linkage between monetary policy actions and financial conditions, which increases the speed and precision of monetary policy transmission. Bill joins us now for more. Bill, welcome to the show, sir, and a very happy new year to you. Where do you think the Fed is struggling to communicate right now? On what issue specifically?
I think the summary of economic projections last month was confusing to people because there was a pretty big upward revision to the inflation estimates for 2025. Yet it was hard for Powell to explain the sources of that. He noted that the participants don't operate from a common set of assumptions. Some were assuming effects of Trump tariff and deportation policies, some weren't, and some didn't say whether they were or weren't. So each of the projections has a different set of assumptions embedded in it, which makes it very hard to anticipate what the Fed thinks is going to happen and how they're going to react to it.
Bill, is the issue for the Fed right now communication or just not necessarily understanding which direction this economy is going to go in?
Both. I think the problem is they're having trouble communicating how they're likely to react to the Trump policies. Obviously, if tariffs are broad-based, that is one effect. If they're much more targeted, as the Washington Post report suggests, that has a different implication. So there's a lot of uncertainty about what Trump policies are going to be. And of course, the Fed is, uncertain about how the economy itself is going to perform. A key issue for the Fed in terms of the economy is the labor market going to continue to weaken or not? Powell has been very clear that he thinks the labor market is still weakening, and he doesn't want it to weaken any further. So that's why Friday's payroll employment report is so important.
When you talk about a reaction function, this has been one of the big quagmires for people. What is sort of the scenario analysis that the Fed is doing and how they're going to respond to it? Do you think that they have that scenario analysis, or do you think that increasingly by default it is becoming an increasingly data point dependent Federal Reserve?
Well, there's definitely scenario analysis that takes place before each meeting. The staff prepare.
Hey guys, फिलहाल देखोगे क्रूड ऑयल अपने एफईजी से माफ करना नेचुरल गैस एफईजी से आया था 6:30 हो चुका है 8 PM होने वाला है यूएस मार्केट इज गोइंग टू ओपन लेट्स सी किसी ने अगर नेचुरल गैस में सेल किया था एफईजी से तो थोड़ा प्रॉफिट बुक कर लेना मुझे लग रहा है थोड़ा और नीचे आना चाहिए इसको 298 297 इस लाइन के आसपास आना चाहिए। बाकी क्रूड ऑयल को देखोगे तो बिल्कुल ही क्या कहें लाइक कुछ ज़्यादा ही साइडवे चला गया 430 से। अभी यूएस मार्केट ओपन होने दो फिर देखते हैं कुछ मूव होता है, बिकॉज देखो यहाँ पर एफईजी है, इसके अलावा कुछ है नहीं, इसलिए थोड़ा बहुत रुक रहा है, ऊपर नीचे हो रहा है। देयर इज नो सिग्निफिकेंट रेजिस्टेंस। बाकी ये एफईजी भी देखोगे एक बार ब्रेकआउट हुआ है, ब्रेकडाउन सभी कुछ कर चुका है, इसको अब अवॉइड रिमूव कर दो, इसकी ज़रूरत नहीं है, अब इसकी वैल्यू इतनी नहीं रख सकते। एफईजी को अब रिमूव कर देना, ये काफ़ी बार ब्रेकआउट ब्रेकडाउन कर चुका है, तो अब इसकी वैल्यू वी कांट कंसिडर इट।
Engage into this political discussion. And I think they're worried that that will politicize the Fed. So they're trying to think about it without talking about it at the same time.
Is your main concern right now with the Fed communications, or would you do anything differently?
न्यूज़ देखोगे ऐसी कोई सच मेजर न्यूज़ तो नहीं है फिलहाल के लिए। यूएस मार्केट ओपन होता है तो भी करते रहो गाइस। थोड़ा सा कंटिन्यूसली लाइव पे मैं बोल नहीं पा रहा हूँ हेल्थ इशू की वजह से, इसलिए थोड़ा सा लेवल बना दिए, बीच बीच में रिपीट कर रहा हूँ जब भी मेजर लेवल पे प्राइस आ रहा है। नेचुरल गैस देखो जब तक इस एफईजी के ऊपर जाएगा नहीं, थोड़ा सा बेरिश साइड पे समझना, अगर ये निकल गया 311 के ऊपर ब्रेकआउट रीटेस्ट करता हुआ, तब ये थोड़ा ज़्यादा ही बुलिश हो सकता है। बाकी तब तक इस रेंज पे एक्सपेक्ट कर सकते हो मार्केट रहना चाहिए। बाकी 296 के नीचे थोड़ा सा और बेरिश टिल 288। बाकी क्रूड ऑयल तो बुलिश ही है, कल का ही सपोर्ट था, वहाँ से बाइंग आई, एफईजी पे थोड़ा रुका हुआ है, लेट्स सी क्या करता है, वापस कुछ नया रेजिस्टेंस बनाता है या फिर लाइक थोड़ा और ऊपर जाए या फिर नीचे सपोर्ट एरिया पे आए। बाकी सपोर्ट भी एग्जॉस्ट है नीचे, काफ़ी बार यहाँ पर सपोर्ट लेके ऊपर गया, तो नीचे आया तो ये भी ब्रेक डाउन ही हो जाएगा। 830 का डेटा भी इंपॉर्टेंट है फॉर गोल्ड एंड सिल्वर, रिमेंबर। गोल्ड और सिल्वर के चार्ट को भी देख लेते हैं एक बार फटाफट से। ठीक है, गोल्ड और सिल्वर के लेवल बताए थे वही सेम लेवल है, नथिंग चेंज्ड। डेटा 830 का, लेट्स सी क्या इम्पैक्ट होता है। बाकी वैसे बेस मेटल इज टू बुलिश, सिर्फ गोल्ड सिल्वर नहीं, कॉपर जिंक को भी देखोगे जो कल न्यूज आई थी उसकी वजह से थोड़ा बहुत सेल ऑफ जरूर आ गया था, बट दैट न्यूज इज पॉजिटिव फॉर गोल्ड एंड सिल्वर, इसलिए कंटिन्यूसली अपसाइड ही जा रहे हैं। हाँ एक बार ले ही लिया ना इसने। सिल्वर कल का ये लास्ट मेजर रेजिस्टेंस लेवल है, यूएस मार्केट से अगर रिजेक्शन मिलता है तो सेलिंग अच्छी आनी चाहिए, नहीं तो फिर ब्रेकआउट 30.44 के ऊपर। वो क्रूड थोड़ा संभल के, फिर अगर सेल करके रखा हुआ है ना, यूएस मार्केट ओपन होने वाला है तो ज़्यादा रिस्क नहीं उठाना। इन्वेंट्री आज नहीं, आज तो ट्यूसडे है, इन्वेंट्री वेनेसडे और थर्सडे को आती है। क्रूड ऑयल की इन्वेंट्री वेनेसडे को है कल 9 बजे, एंड नेचुरल गैस की इन्वेंट्री वैसे थर्सडे को आती है, ये भी कल ही है। 9 तारीख को यूएस में बंद है ना शायद, कुछ है उस दिन। जिमी कार्टर जो अभी उनके एक प्रेसिडेंट की डेथ हो गई थी, उसकी वजह से शायद इन लोगों ने बंद किया हुआ है, तो कल ही है इन्वेंट्री सारी। जो रेजिस्टेंस था वहां रुक रहा है आज, कल तो रुका नहीं, आज रुक रहा है वहां पे। कल जब एक्सपेक्टेड था तब तो रुका नहीं। सेलिंग आ जानी चाहिए थी इसमें, लॉजिकली तो सेलिंग आ जानी चाहिए थी क्रूड में। जितने देर रुकेगा उतना ही देर फिर ब्रेकआउट के लिए जाने की कोशिश करेगा। ऊपर भी एक एफईजी है, बट यहाँ पर भी वो जो बीच वाला एफईजी था वो तो होल्ड किया नहीं अभी लग रहा है। किसने का सेल किया हुआ है ना क्रूड ऑयल यहाँ पर, थोड़ा संभल गया। मैं फिर रिपीट कर रहा हूँ, अभी यूएस मार्केट पे पता नहीं क्या होने वाला है। कुछ ज़्यादा ही कंसोलिडेशन। 1 आवर टाइम फ्रेम की कैंडल देखोगे ना, काफ़ी अच्छी फाइट चल रही है। द कैंडल कंप्लीट डोजी कैंडल, इट मींस फाइटिंग है काफ़ी ज़्यादा। एटलीस्ट ये ब्लू कलर की लाइन तक ही आ जाए, आना ही है इसको नीचे, नहीं तो फिर ऊपर एफईजी पे जाके गिरे। बीच में क्यों अटका हुआ है पता नहीं। एक बार न्यूज़ भी देख लेते हैं अभी कुछ लेटेस्ट। मार्क कैनरी सेज ही इज कंसिडरिंग रनिंग टू सक्सीड जस्टिन ट्रूडो। कल इन लोगों ने आई थिंक रेजिग्नेशन दे दिया था शायद कनाडा के प्रेसिडेंट से। हु इज ही? मार्क कैनरी मार्क कार्ने, सॉरी, whatever his name is.
There is when you want it with Bloomberg News Now. I'm Karen Moscow. We begin with some breaking economic news. The U.S. trade deficit widened in November, reflecting the biggest jump in imports since March 2022 as companies accelerated shipments ahead of a possible dock workers strike and in anticipation of potential tariffs by the Trump administration. The gap in goods and services trade grew 6.2% from the prior month to $78.2 billion. The value of imports increased 3.4% from a month earlier. Exports rose 2.7%. And paychecks to buy Paycor for $22.50 a share in cash. Now to our other top stories this morning. Jimmy Carter's state funeral moves to Washington today after observances in his native Georgia. The 39th president's remains will leave the Carter Presidential Center this morning and fly to Washington aboard Special Air Mission 39. The Carter family and former president will arrive at Joint Base Andrews with a motorcade following to the U.S. Navy Memorial, and then it's on to the Capitol. Carter is the only U.S. Naval Academy graduate to become president. Members of Congress will honor Carter in the Capitol Rotunda this afternoon. The Pentagon has added Chinese gaming giant Tencent Holdings and EV battery supplier CATL to its blacklist, and Treasury Secretary Janet Yellen has raised concerns about Chinese state-sponsored hacking of the department's computers with China's vice premier. This weeks before President Biden leaves office. Bloomberg's Jody Schneider reports the outgoing administration wants to show it's been tough on China as it hands the reins to Donald Trump.
This is kind of an interesting narrative that we're seeing from the Biden administration, going into the Trump administration, which, of course, is expected to be very tough, certainly verbally, on China.
And that's Bloomberg's Jody Schneider. President-elect Donald Trump is pushing to block the release of special counsel Jack Smith's final report on his handling of classified documents. Trump's lawyers are asking a federal judge in Florida to issue an emergency order preventing Attorney General Merrick Garland from disclosing the final report, which they say accuses Trump of engaging in an unprecedented criminal effort. Meanwhile, the New York Times is reporting that Trump is expected to hold a news conference this morning at Mar-a-Lago. Donald Trump Jr. has arrived in Greenland today in a surprise visit to the Arctic territory. This comes just weeks after his father rekindled the idea of buying the island from Denmark. Former Bank of England and Bank of Canada Governor Mark Carney says he's considering a run to be Canada's next prime minister now that Justin Trudeau is stepping down. Bloomberg's Mark Perrier notes Carney has never run for political office before.
Carney, obviously well known on Bay Street, well known to Wall Street, well known in financial circles. But can he appeal to a wider Canadian voter audience? That will be the question.
And Bloomberg's Mark Perrier reports Carney will have little time to prepare before Canada's next general election in October. Carney is currently chair of Bloomberg's board of directors. Jean-Marie Le Pen, the founder of France's National Front, who ran for president 5 times and lived to see his anti-immigration rhetoric go mainstream, has died. He was 96 years old. China said 95 people have been killed and another 130 injured by an earthquake that struck its far western region of Tibet. The earthquake knocked some houses down, and aftershocks of up to 4.4 magnitude have been reported. Nvidia CEO Jensen Huang has announced a range of new chips, software, and services as the company looks to maintain its lead in artificial intelligence. Interest in Nvidia's products has exploded as companies rush to use more AI computing gear. Huang spoke at the opening of the Consumer Electronics Show in Las Vegas.
Well, the amount of computation that we need, of course, is incredible. And we would like, in fact,
Hello. यूएस मार्केट ओपन होने वाला है, उसका वेट कर सकते हो वैसे गोल्ड और सिल्वर में. 830 का डेटा भी इंपॉर्टेंट है. सिल्वर रेजिस्टेंस पर ही है, गोल्ड ब्रेकआउट पे जा चुका है. 15 मिनट टाइम फ्रेम.
It's driving enormous demand for NVIDIA computing. It's driving enormous demand for this incredible chip we call Blackwell.
And you can catch our interview with NVIDIA CEO Jensen Huang in a special edition of Bloomberg Technology at 11:30 a.m. Eastern Time on Bloomberg Radio and Television. And Facebook and Instagram owner Meta said that it's scrapping its third-party fact-checking program and replacing it with a community notes program written by users. It's similar to the model used by Elon Musk's social media platform X. Futures this morning, they are higher now. S&P futures up about 0.2%, so are Dow futures. NASDAQ futures, little change. 10-year Treasury yield, 4.63%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
Infighting for his resignation.
Elon Musk puts Britain's PM on the defensive.
Nvidia's stock surges as it unveils new video game chips.
And we look at the impact of Biden's oil and gas drilling ban. It's Tuesday, January 7th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm David Spencer in London.
And I'm Jonah Green in New York.
This country deserves a real choice in the next election, and it has become clear to me that if I'm having to fight internal battles, I cannot be the best option in that election.
Canada's Justin Trudeau announcing, as expected, that he's stepping down as Prime Minister. In a subdued statement outside his home in Ottawa, he's also announced that Parliament will be suspended until March 24th as Canada prepares for an election that must be held by October. Trudeau's former Finance Minister Chrystia Freeland, who quit the government last month, and former central banker Mark Carney were among those being touted as replacements. A powerful earthquake has hit close to one of Tibet's most sacred cities, with the epicenter around 50 miles north of Mount Everest. Dozens of people have been killed, and tremors were also felt in Nepal, Bhutan, and northern India. Louisiana has reported the first bird flu-related death in the United States. The patient, who was over 65 with underlying health conditions, was hospitalized with the H5N1 virus in mid-December. Rudy Giuliani has been found in contempt of court for failing to provide information to two Georgia election workers who he accused of trying to help steal the 2020 election for Joe Biden. The missing information could determine which of his assets can be turned over to pay off their $148 million defamation judgment. Over the last few weeks, Elon Musk has been wading into European and particularly British politics. His recent criticism of Prime Minister Keir Starmer has been about when he was Britain's top prosecutor, with Musk claiming that Starmer had failed to prosecute gangs who sexually abused girls when he was in the role.
Musk's criticism has placed the scandal from over a decade ago back in the spotlight and put the PM on the defensive. Elizabeth Piper is our UK political editor. So, Liz, we in the US have become quite familiar with Musk as a potent political force. What's been his effect on British politics?
Well, he's enabled some of the opposition parties to really intensify their criticism of Starmer, who, since winning the election in July, has had a bit of a rocky ride.
What are Musk's main critiques here?
It does seem to be his main interest at the moment is immigration and multiculturalism. I don't want to put words into his mouth. I haven't interviewed him.
Yeah.
But he does seem to feel that Britain has failed in multiculturalism by not calling out instances such as the sexual abuse scandal, which dates back actually to 1997, when men, mostly of a South Asian background, were found guilty of systematically grooming and then raping young girls in parts of northern England.
On the question of Elon Musk, look,
Starmer has been trying not to engage directly with Elon Musk at all. But on Monday, it was clear he was incredibly angry that Musk had brought into doubt his time as the Director of Public Prosecutions, which basically is Britain's top prosecutor, and he was that between 2008 and 2013, which overlapped with some of these cases. And he used a press conference when he was meant to be talking about the health service to actually address this criticism head on.
those that are spreading lies and misinformation as far and as wide as possible, they're not interested in victims. They're interested in themselves.
It was very interesting to see a man who is normally quite placid. He was visibly angry and frustrated that it had come to this point. And if there's one thing the British Prime Minister is very proud of and continually references is his time as the Director of Public Prosecutions.
Here it is.
our brand new GeForce.
Nvidia CEO Jensen Huang kicking off the Consumer Electronics Show in Las Vegas with a raft of new product announcements. The chipmaker's stock had already hit a fresh all-time high even before Huang spoke. So what did he unveil? Max Cherney is in Las Vegas for CES and has all the details.
Nvidia announced a series of new video game graphics chips that will increase the performance significantly, and the new graphics chips will improve the visual quality of the images once video game developers start to implement it. Nvidia announced a sort of enterprise AI system that will allow developers to simulate the real world when they're teaching robots and autonomous cars how to move around the world and interact with the world more effectively. The idea being, if NVIDIA can successfully simulate the real world experience for these robots and autonomous cars, it would avoid the researchers and companies who are working on these problems from driving millions and millions of real world miles and potentially damaging or breaking expensive robots.
What else can we expect from CES this week, Max?
Well, as usual, bigger televisions. It's kind of a little bit of a joke at this point, but every TV maker like Samsung and LG, they all show off the latest and greatest TVs. And CES has become probably the largest auto show in the United States at this point. And so every major automaker will show off some new prototypes or capabilities in existing vehicles and so on.
And if you're interested in AI and what the future might hold for us humans as the robots get smarter, do check out an earlier episode of our Econ World podcast. We'll put a link to that show in the description of today's pod.
President Joe Biden is banning new offshore oil and gas development along most U.S. coastlines. The move is mostly symbolic as it covers areas where drillers don't have significant prospects, including the Atlantic and Pacific Oceans. However, it could block any moves by the Trump administration to expand offshore drilling. Reporter Nicola Groom has been looking into the impact of the ban.
This will affect 625 million acres of ocean and will effectively ban offshore drilling on the entire East Coast and the West Coast, in addition to a couple of other areas as well. These are not areas where offshore drilling is happening right now, and they're not really areas with high potential for oil production, and they're not areas that the industry is actively seeking to lease or drill on currently. But it does mean that these areas will be off limits in the future.
And so what might Trump do, or what can he do?
Well, he came out quickly after the announcement was made and called it ridiculous and said he would, quote unquote, unban it immediately. But it's not going to be that easy for him to do that. The law that gives presidents the authority to withdraw areas from offshore drilling is a 70-year-old law, and it was tested a few years ago, actually, by President Trump himself. Former President Barack Obama had withdrawn some areas right before the end of his presidency, and Trump tried to reverse that when he came into office. And a federal judge in 2019 said no, that the same law that gives presidents the authority to withdraw portions of the ocean from offshore drilling does not expressly give them the authority to reverse those decisions by their predecessors. So it would likely take an act of Congress to reverse this decision by Biden. So it's unclear whether Trump himself could do very much.
And for today's recommended read, we're looking at housing in Hong Kong and the tiny and cramped properties people are living in due to sky-high prices, where 4 families might share a single toilet and kitchen. A link to the story and an incredible set of photos is in today's pod description.
For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favorite podcast player. We'll be back tomorrow with our daily headline show.
Something that we thought we would see from Tesla back in 2020. Oh yeah, they had talked about bringing this cybercab or a autonomous vehicle taxi service to fruition by 2020 as their marker. We are now 4-5 years removed from that. And so the larger question is the number of states that have the decisions to cut some of the red tape and ultimately move forward with any of the use cases and an expanded period of testing in order to greenlight this for Tesla, as well as for some of the other autonomous vehicle services out there. Looking at you, Waymo, looking at what potentially Cruise Automation as a spinoff of GM could look like, we will see. But all of those things considered, Tesla is not going to be the only player if you do see some of that red tape start to get cut in an accelerated fashion here, which is certainly what Elon Musk may have the ear of President-elect Trump once he gets into office as well on that.
Some of those execution risks, which has been surrounding the stuff.
Yeah. Also, let's talk a little Meta here on the day. Meta ending its fact-checking program on Facebook. The CEO, Mark Zuckerberg, saying the company is going back to its roots around free expression. Listen in.
The recent elections also feel like a cultural tipping point towards once again prioritizing speech. So we're going to get back to our roots and focus on reducing mistakes, simplifying our policies, and restoring free expression on our platforms.
This comes as Meta adds new members to its board, including UFC CEO Dana White. Zuckerberg writing in a Facebook post that White has built the UFC into one of the most valuable, fastest growing, and most popular sports enterprises in the world. Other new board members include Exor CEO John Elkann and former Microsoft executive Charlie Songhurst. There you are seeing some of the profiles on your screen right now. I think more notably here with some of the new picks, the larger tenor that we're seeing is not even just what Mark Zuckerberg was talking about within that video in a cultural shift that, at least from his perspective, does elucidate an opportunity for them to back off some of the more strict content policies, but more so how he would like to have some of those same profiles who've been vocal supporters of the incoming president by his side and potentially locking arms as they're also trying to make sure that they stay in good favor with the incoming administration.
Yeah, you know, it's an interesting move. You have Dana White joining the board, obviously very close ties to Trump, like you were just laying out there. Also, Meta ending its fact-checking program. The reason why this is significant, obviously, some of the criticism that we've heard from President-elect Trump over the last several years towards Meta, towards Facebook specifically, towards Instagram, and Meta coming out saying that now they believe that they've gone, quote unquote, too far. So this certainly is a huge shift here, just in terms of what this means, how much of a play it is into this next administration. I think that's certainly is going to be one of the talks here surrounding this stock and surrounding some of the strategy here going forward. We know many tech executives have done their best here, or have at least made an effort to reach out to Trump to try to get in his good graces here, just considering how combative and how critical he was of some of those larger players within the tech sector during his first administration. But again, Dana White, just one of the names being added to the board here for Meta as we enter this year. They also added Charlie Songhurst, which you mentioned there, an investor of the former Microsoft executive. He already advises Meta actually on some of those AI products. So maybe that highlights a further push here into AI, something that's long been expected here on the street. And then John Elkann, which is an interesting pick here, Exor EV CEO. That's a holding company that has a family company that has stakes here in European businesses, including Ferrari here is one of those names. So again, adding 3 members to the board, bringing the total here to 13 directors, including CEO Mark Zuckerberg.
Yeah, this is not proactive at all from these companies here. And I think our own columnist, Rick Newman, had written about this and calling it essentially a kiss the ring moment for some of the major executives that are lining up to try and make sure that in reactive fashion to the outcome of the election, they are not out of the good graces of incoming President Trump, and that they don't see the same type of vitriol directed towards their company. Now, shareholders out there that are watching some of these moves, they're probably as well breathing a bit of a sigh of relief, hoping that their executives are making the right moves either to position the companies to be benefits of some of the incoming administration's prioritizations, whether that be on anything from energy all the way into social media. One thing or another you do not want to see is the president direct his attention towards you and it impact any ability to manufacture, secure supplies, or any of the the larger international partnerships that you've worked so hard to drum up? You don't want to see any of that rattled, and so the best way to do that is perhaps at least have a seat at the table with the incoming president.
All right, we got to leave it there, but keep it right here on Yahoo Finance. We are just getting started. We've got the opening bell for you in just a few minutes. We'll be right back.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
And here we have the opening bell on Wall Street. Let's do a check of the markets as we kick off a brand new trading day here, the first full week, I guess we could say, of January.
It's
here.
not even full.
Not even
full. We'll be off on Thursday.
You are right, yes, because of Carter's funeral. So I guess we'll have to wait till next week for that first full week of trading here, the exchanges here. But let's take a look at the major averages. You got all three of the major averages opening the day in the green. Some of the outperformance being driven by those larger cap tech names. You've got Nvidia at all-time highs here. You've got the NASDAQ in the green, up just about 0.4% as it calibrates there. The S&P also moving to the upside, the Dow moving to the upside there. Lots of questions about what it's going to take to keep this momentum moving to the upside. Who better to ask? Let's get over to Jared Blicker as a closer look at some of this movement that we're seeing at the open. Jared.
Thank you, Shauna. It looks like small caps are leading right now, although, it looks like small caps are leading for the second day in a row. I'm just going to show you the Russell 2000 here, and we'll look at 3 days into the year, and we can see up about 2% here, and we can even go back a little bit farther and look at the 1 month, because Russell 2000 was under a lot of pressure and saw a steeper sell-off than the majors than we had when we did get that Fed report last month, and that kind of surprisingly hawkish tone from Fed Chair Jerome Powell. So that's in the back seat here. But we also want to focus on the bond market. Now, 10-year yields are right near recent highs. I'm going to show you a 1-year chart so you can see the price action. Here we are, and it looks like we are actually at the highs right now. 4.63%. And we haven't seen these highs since basically last April, last May. And the important thing is, if we were to head north and go above 4.75%, that is another risk impediment. And so that's something we want to keep an eye on. We've also been watching the US dollar, which is a very similar story. Now, it is backed off of its highs. It did that yesterday, and it's just kind of treading water, not doing much today, but we will keep an eye on that. And let's take a look at what's going on in sector land, because we've had semiconductors assert themselves since yesterday. We did have Nvidia at a record high. We'll check out that in a second. But here we have energy. Energy is in the lead, second only to, or excuse me, real estate is second to it, and then we have tech. But as you can see, everything in the green here. By the way, crude oil just coming off a string of runs. We'll take a look at that in a second if we have the time. But here is the NASDAQ, and you can see Nvidia now. This should be another record high. It closed at the first record high in a while yesterday, and definitely the first of the new year. And you can see it's been it has a long history of just consolidating and kind of moving to the next level and consolidating, although we didn't get much traction off of this rise in particular. So we'll have to see if this breakout leads to any place, or what Nvidia has done before. Sometimes when it makes a new high, it just goes back down and ends up being a bull trap. So that's something we'll keep an eye on as well. And checking out our leaders for the day, we see New York FANG. That's kind of the Mag 7 with a twist. That's in the lead. I was looking at IPOs there, solar, and then stocks. I want to take a look at semiconductors because these are breaking to the upside. Now, you can't necessarily see it right here, but there is a trend line. If you were to draw this right here, you can see this has some excitement with various traders. However, I think we really need to see a break of this horizontal level right there, that potential resistance level. I'd like to see this at 250 or more, and then it's kind of a no, it's probably fait accompli that it would be able to exceed those old highs. But semiconductors were a missing part of the rally late last year. They were kind of lagging, and so if we get that AI excitement again, you got to think that we could indeed be in store for another run, and we'll have to see what other stocks and what other sectors can tag along. Got to pivot to Bitcoin right now because we are seeing Bitcoin. It has been holding 100,000. It got up to 101, and indeed 100,824.27. So we've just seen Bitcoin kind of consolidate here, as we saw with the majors. We saw a potential head and shoulders top forming, but it didn't happen, and instead we're accelerating to the upside. S&P 500 closing in on its record high. We'll have to see if Bitcoin can kind of pull the similar story there. Want to end in futures land where we have WTI crude not doing a whole lot today, but there's a longer term picture that I want to get to. So we're going to pull this up. It's actually up 1% right now, but crude oil is another instrument that has been trying to break out of a longer term negative trend line. It is not there quite yet. It's kind of right at the Rubicon, but if it were to accelerate above $75, that is going to change the game. I mean, we've seen this dollar, the US dollar gaining strength, and we talk about the dollar wrecking ball. When prices rise in the oil land, and especially in gas land, we feel that not only domestically, but it's felt abroad as well. So that's something we'll keep an eye on, and I'll send it back to you guys.
Jared, thanks so much. Appreciate the setup for today's trading activity. It's time now for today's strategy session. Bond yields have been on a steady rise this year, with the 10-year holding above 4.6%. So how high do yields have to go before investors begin to worry about stock performance? Joining us now is George Goncalves, who is the MUFG head of U.S. macro strategy. George, great to have you here with us. So
good to be on.
Absolutely. So when do we begin to see selling with bond yields, bonds yielding more than the S&P's earning yield?
Look, I think that the earlier segment with Jared and a lot of the points he made are really spot on. That 4.75 level on the 10-year would be both psychological as well as an early warning signal that rates are going in the opposite direction than where the Fed wanted them to go. Let's remember that the Fed cut 100 basis points in a matter of 3 or 4 months, and rates went up 100 basis points, completely at odds and not really helping out the interest rate sensitive sectors of the economy. Housing was really looking for that sort of boost. Commercial real estate was looking for lower rates to help out their cause. And also, look, the small caps have had a hard time, and a lot of it has been on the back of this rise in rates. And so the rates channel will matter if we break above 4.75.
George, is that going to put a halt into this broader market participation story that we have long been waiting for? And I've started to see glimmers of hope about here, but they do fade quickly.
Yeah, no, that's also a great point too. I mean, to kind of see a broadening out of the rally across different sectors in the equity space would make it feel like it's got more potential and more legs and become more sustainable. And so this is why that rate channel is super critical. I also think that the dollar will also be super important too. And then which industries are going to really be impacted first, depending on what sort of executive orders or sort of new policies that come out of Washington. And so, there's a lot still at play. I mean, we kind of, just joke around that this is the first week of the year, as we all know, and it's the first big macro week. But let's be honest, January 20th and onwards is going to be the start of 2025 in many regards, right? So I feel like we're in this kind of holding pattern still. As long as we don't break that 475, the dollar kind of stays here, then maybe we can kind of just trade sideways. But I don't see we accelerate one way or the other until we get more clarity.
What are the sectors to lean into when you see a holding pattern like this?
Look, I think being defensive makes sense. Look, utilities have had a good correlation with rates. Let's say rates don't break above 475. That would be, I guess, a way to kind of hold things out. I also think that the banks in general are benefit from the environment that lies ahead. Both from rates are going to stay higher than they would have been, all else equal, as well as there's hope for deregulation and just further lending and growth in that area. So I think the banks in utilities.
George, when it comes to some of those earnings growth expectations, technology obviously really front and center here when you take a look at the fact that the expectations here are for the earnings growth to reach just 18%. And I say just 18% because that's in comparison to the 34% growth that we saw last year. How big of a risk do you see this posing or potentially being here to the broader market?
Yeah, look, having such a concentrated market as like we've had has both helped and potentially hurt us going forward, right? Because now we have this concentration risk around earnings potential, and and we have lofty valuations. Let's not deny that fact, right? And so I do think it does kind of goes back to your earlier point. If we don't see the broadening out of the rally, and we have this concentration risk, it does set you up for at least some sort of temporary pullbacks. And I think that's the risk for 2025. That a lot of euphoria post-election. A lot of euphoria that we're going to see this kind of momentum continue both in the economy and markets. But what if a lot of that's priced in?
If we see growth deceleration, how would that then pass through to some of the right sizing of valuations?
Yeah, so I think it's going to be at the broader, larger indices, right? And I think that's where you're going to see most of the adjustment, be it the NASDAQ or the S&P. So that's really where you're going to see it first, front and center. But I do think that we are at a point where if interest rates were to come back down, that will give you some sort of relief. But yeah, there's a lot of factors up in the air, and I think that people have to have an open mind at this point, and look to try to diversify a little bit and not just be so concentrated.
All right, George, thanks so much.
Thank you.
Time now for our chart of the day. We want to send it over to Catalyst co-host Madison Mills, who has a closer look at broader tech versus chips. Maddie.
That's exactly right, Sean. I wanted to take a look at the underperformance that we have seen in the chip sector heading into Jensen Day at CES here, right? You can take a look here. Actually, as early as last week, the SOX index crossing a particularly bearish signal when it comes to technicals, but trading below its 50-day moving average over the past couple of months here, since you can see that low back in August. And yes, large cap tech has continued to outpace the broader SOX index, but we do see this tiny little tick up at the edge of your screen here. So will we break out of this technical pattern when it comes to semiconductors? That is going to be the key question to launch and look at today, especially after the slew of catalysts that the semiconductor index has had just this week alone. Of course, you had those Foxconn earnings indicating that AI demand is stronger than ever. That led to that initial lift on Nvidia heading into Jensen's speech. But we also had that big note from Citibank talking about 10 chip names to watch in 2025. And a lot of those names also rallied. And those are some of those smaller chips names that are going to make up the SOX index. It is not just Nvidia, of course. Now, you do, again, see that underperformance over the last 6 months. But I think the last thing that is important to note is something that Jensen talked a lot about, the idea of expanding that total addressable market. Something I thought was really interesting, the announcement of that $249 version of its Jetson computer for AI applications for smaller businesses. If Nvidia does something like that, it's not just a boon for Nvidia. It leads to a broader uptick of AI technologies, which could lead to a lift in some of these semiconductor names more broadly moving forward, guys.
Maddie, thanks so much. Appreciate it. Coming up, everyone, Bitcoin breaking back above the $100,000 mark. We're taking a look at what that means for crypto in the new year, 2025.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Catalyst. I'm Shauna Smith alongside Madison Mills, 30 minutes into the U.S. trading day. Let's get to the three catalysts that we're watching this hour.
First up, JOLTS data crossing the wire now with the latest read on the labor market ahead of Friday's jobs report. What the economic data tells us about volatility ahead.
Plus, Nvidia moving to the upside after CEO Jensen Huang announced a slew of new AI products. We'll tell you what other chip names could benefit from Nvidia's move to the upside.
And 3 stocks to buy under Trump 2.0. We'll get you those tickers right here on Catalysts. Let's take a look at some market headlines to start the hour, sponsored by Tasty Trades. Starting off with the major averages, we are still in the green in the S&P 500, up 0.3%, but really interesting to note, this is so important today, the NASDAQ turning negative because we're seeing Nvidia turning negative, erasing its earlier gains after hitting a record high since the month of November. Now we are seeing the shares of Nvidia down a little over 2%. Of course, we will continue to monitor those moves. I want to flip the board over to Treasuries if we can, because I believe we are seeing a little bit of movement to the upside. The 10-year yield up just about 2 basis points this morning, hitting that 4.6 level could potentially pressure equities more moving forward as well. And finally, I want to take a look at Bitcoin here under a bit of pressure as well, down nearly 1%, just below that key $100,000 level.
We have some breaking job openings and labor turnover data crossing the wires right now. When you take a look at the openings coming in at 8.09 million, that was well above survey expectations, also well above the prior reading that we did get on JOLTS, the job openings data here. Obviously very important here ahead of the huge labor market print that we will be getting at the end of the week. The prior month was also revised to 7.84 million. That was up from 7.74 million. Job openings rate was 4.8% in November. That was versus 4.7% in the prior month. In terms of the number of people quitting their job, actually ticking just a bit lower, it looks like here for the month of November, coming in at 3.06 million. That was versus 3.28 million the prior month there, with the quits rate right around 1.9% versus the reading of 2.1%. But again, when you take a look at the job openings number, they're rising to 8.098 million, exceeding the street's expectations, Maddie.
It's interesting that the quit rate fell back to that 1.9% level, perhaps an indication that folks are holding on to their jobs a little bit longer. It's pointing to this sign of not necessarily weakness in the labor market, but a little bit of cooling that we have been sensing under the hood, especially when you take a look at that broader quits rate, again, coming in at 1.9%, the prior release being 2.1%, and also that layoffs rate ticking up just a touch, coming in at 1.1%. The prior reading was just 1%. So when you take a look at those two data points in tandem, perhaps just a little bit of that softness under the hood in this labor market data, something that we'll continue to monitor. This typically doesn't move the market more broadly, but a lot of individual names moving the market today as well.
Well, this morning's JOLTS release is the first of a slew of economic data prints in the coming days. Our next guest warning that those releases could potentially be catalyst here for market volatility. Joining us now, we want to bring in Jeff Jacobson, head of derivative strategy at 22V Research. He joins us now. Jeff, it's great to have you here. So you say investors should brace for more volatility ahead, especially off the back of some of the economic data prints that we have up on the screen right now. Talk to me about the why factor. What's driving that prediction?
Yes, absolutely. So, we've seen volatility pick up in the market over the last, call it 11 trading days. We've seen realized moves in the market almost around, let's call it 0.75% on a daily, on half the time on a daily basis. So what that's doing is pushing up the realized volatility. At the same time, we've seen the VIX come down from the December highs when we hit the high on the last FOMC report. So you're getting a scenario set up here where implied vol, or the cost of buying protection, has come in, yet at the same time we've seen realized volatility move up. Now this is coming at a time ahead of, to your point, all the key economic data that we will be getting over the next few weeks, whether it's payrolls, the inflation data on CPI. We have another Fed meeting at the end of the month. So, we have plenty of opportunity, if that's the right word, to where we could see heightened volatility. And certainly, if we get the moves in the bond market that would go against, higher yields, which would go against favoring stocks here, there could be a setup where we could see, a decent pullback after this brief rally that we've had over the last few days.
So obviously a ton of economic data ahead to watch, but what do you think are the key catalysts for volatility moving forward from that slew of economic data?
I think it's going to, again, come back to the bond market. We had the 10-year yield up to about 4.65. The highs we hit in the last year and change were 4.7 and 5%. We're at 4.65 now. When we've hit those levels previously, we saw a decided pullback in stocks. That hasn't really been the case here for the S&P. We've seen other parts of the market, obviously the more interest rate sensitive parts, small caps, come in, and the large caps, the S&P, have held up very well. My guess would be that, if we get a move back north of 4.7 or higher on the 10-year, that may be the trigger where we could see that volatility that I was speaking of.
And we just have that, we have it up on your screen just in terms of the pullback that we do see in equities as we do see yields hit those levels here. Jeff, as we talk about then what investors should do at this point, we have a real risk here. We could see yields very soon eclipse that level. What is that top trade then to protect your portfolio?
Yeah, like I said, it's a great setup in the sense that the cost of insurance has come down, like I said, from the December highs. At the same time, where realized volatility is coming up. That's a great opportunity to buy, just straight out SPY puts, in my opinion. You can buy, the trade I suggested in my note was buying the February 7th SPY put, the 582.50 put. It's about 2% below where the market's trading now. And you have a month that will capture all the economic data I mentioned, the Fed meeting, earnings season for pretty much, most of the large cap names, the banks, the industrials. So I don't think you're going to see a real decrease in implied vol because A, realized vol has been moving up, like I said, and B, you have all these upcoming events and catalysts that could trigger, weakness, especially if we start to see yields move much higher. So, I like buying puts outright here, and if we do get a move lower, not only will you be able to monetize those puts, but it'll obviously act as a nice portfolio hedge for if you have large cap exposure, which most people do.
You mentioned that key Fed meeting coming up here, just crossing the wire. Traders are no longer fully pricing in a Fed cut before that July meeting. Jeff, how much volatility might that cause? And if we do see a lot of buying of volatility, does that indicate to you kind of a bearish swing in the market?
Yeah, I think that certainly if you remember, we had, quite a large move in volatility and the market the last Fed meeting, specifically when Powell was speaking. I think you're going to start to see a relative bid to volatility again into that meeting, which is why I like kind of getting ahead of it here and owning vol. And certainly, I think, again, however the bond market will react to the meeting and the events leading up to it will probably dictate, how stocks do from here, especially the large caps that, again, have held up, very well in the face of rising yields.
All right, Jeff, we got to leave it there. Thanks so much for joining us.
Thank you.
The dollar is still under pressure today after President-elect Donald Trump refuted claims that he plans to pare back his tariff plan. Our next guest names policies like tariffs as one of the key downside risks to the economy this year, alongside immigration and taxes. For more on his outlook, we have Tony Roth, Chief Investment Officer at Wilmington Trust. Tony, great to have you. What do you make of the stickiness of the market's reaction to the back and forth on tariff policy, specifically when you take a look at the action on the U.S. dollar?
To be honest, I'm actually surprised that the markets are attributing as much significance to the rumor mill right now in the news cycle on tariffs. I think it's pretty clear from the past action that the former president had in his prior administration and what he's trying to accomplish right now, that he wants to maintain his powder, if you will, his dry powder from a negotiating position, and is not going to be rushing in before he even gets into office with a narrative of lower tariffs for these potential for these trade partners. It's pretty clear that what he's trying to do is improve our economic position through the use of the tariffs by opening other markets. Now, that doesn't necessarily happen overnight, and it could be that we need to endure a little bit of pain with higher taxes, effectively, higher tariffs on imports before we get to probably open some of the other markets. but he's not trying to create a scenario here where we're going to have an ongoing tax, if you will, for a long period of time. So I think we've got to take it all with a grain of salt. And I'm a little surprised, frankly, that the markets are ascribing as much importance to, again, this sort of 24-hour rumor cycle mill on what he's going to be doing with tariffs right now.
So then just in terms of the expectations or what this could then do to the growth trajectory, it sounds like maybe some of those fears, are they a bit overblown?
I think that we have to take seriously the worst case as investors. And we have to look at it and we have to sort of be anchored to that as a possibility, even though we may not be investing for it. So if, in fact, the administration were to move forward with everything that's been talked about, we would see tariffs move as a percentage of imports from 2% to 19%. That would be punitive. That would throw the economy into recession, et cetera. So someplace in between those two points is where we'll end up. And we just have to be patient. We have to stay invested. There are a lot of other factors that we think are going to be positive for the economy in our outlook, like, for example, later regulation, like the potential to open other markets, potential for fiscal stimulus if they're able to do a very long continuing resolution on the debt ceiling, or just push it off for the term of the administration. And so it's very important to stay invested, but then to keep an eye on these issues that could be the shoots, if you will, in the economy to the downside. And we don't have a lot of informational content yet.
Another shoot that you mentioned was valuations, and I wonder if kind of the growth backdrop that you're mentioning being under pressure could potentially get rid of the valuation problem as well.
Well, I think the valuation problem is here to stay, in the sense that at some point we're going to have to see a correction, whether it's a recessionary correction or a non-recessionary correction. We'll see. When I say at some point, I don't necessarily mean a 20% correction in 2025. Would I be surprised to see that happen? No, not at all. But at some point, we're going to need to see valuations normalize. We're in the 99th percentile when we look at a lot of the key metrics. So I don't think the valuation problem is going away. But having said that, when we think about our base case for the year, which is probably around a little bit less than 2% growth in the economy, we don't see a catalyst for a recession. And in that kind of environment, notwithstanding the valuations, we would expect to see probably high single-digit returns for U.S. equities. So it's a tough environment, because if we did have a 20% return this year, it's much more likely to be down to the downside than the upside. So you've got that left-hand skew in the distribution. But at the same time, the more likely scenario is an upside sort of single-digit return in the equity market, which stands to be a lot better than bonds.
Tony, what would cause that investor sentiment shift? I think that's the big question. Outside of the recession factor, obviously that would really drive a shift in investor sentiment right now. But beyond that, is there anything else that investors should have on their radar that maybe could provoke some sort of reaction that we could see play out in the equity market?
Well, I do think that the tariffs, to start, as we can see, are a source of volatility in markets. Whether it's a continuing source, I doubt it. But again, we don't want to exclude that as a possibility. So I think that's probably the number one factor right now. The second factor I would point to, which is very much not our base case scenario, but it's inflation. So I think that when we look at the economy, we definitely see an economy where we see very persistent disinflation. We think that we're going to be at 2% by the end of the year, notwithstanding some of the recent stickiness in core inflation, which we think had a lot more to do with weather and strikes and such at the end of the year. We're pretty confident, actually, that inflation is going to be coming down, and that we're going to see the Fed probably cut more than the Fed has indicated in the dot plots or the market is indicating. But having said that, we could be wrong, and if inflation doesn't come down in that way, that could be a real drag on market sentiment as well. So I think tariffs and inflation are the two biggest things. And then beyond that, smaller things, maybe geopolitical relationship with China, Taiwan, things in that area, if you will. But I don't think that those are really going to be too pronounced. I actually feel that the geopolitical situation has abated to some degree, because I think that we're probably closer to the end of the two conflicts that we have in the Middle East and in Ukraine and Russia.
All right, Tony, always great to get your insight. Thanks so much for taking the time to join us here this morning.
Thanks for having me.
We've got much more coming up on your market action ahead. Stay tuned. You're watching Catalysts.
Oh yeah, you're not gonna forget to cancel those free trials this time. right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Now time for some of today's trending tickers. You can scan the QR code below to track the best and the worst performing stocks of the session. All done with Yahoo Finance's trending tickers page. First up, let's take a look at Nvidia shares actually reversing course this morning. The move lower coming after the stock hit an all-time intraday high. You're now looking at losses of right around 3%, hovering right around the lows of the session here this morning. And this comes after the initial pop, which followed CEO Jensen Huang's keynote speech at CES last night. Here with more, we want to bring in Kunjan Subani. He's an analyst with Bloomberg Intelligence. It's great to have you back here on the program. So we initially saw some excitement play out in the street just in terms of what we heard last night from Jensen Huang and some of the ambitions here and plans for new products from Nvidia going forward. Yet here we are right now this morning with a loss of just about 3%. How should investors, how should our audience be looking at this drop?
Yeah, I mean, to sum up the keynote and the key impact on the stock, the announcement and the launches, both across its hardware and software stack, continues to strengthen its already strong moat when it comes to GPU leadership. Now, most of these announcements are not going to most likely impact the near-term financials. That's why you might be seeing some softness. But what it does create a long-term tailwind, keeps its stickiness intact, and sets it up to dominate in the next wave of AI spending as we transition from training and to a lot more inference, and as we transition AI from data centers beyond into PCs, automotives, and the edge.
I just want to get your take on the market action that we're seeing. Obviously, Shauna mentioned Nvidia under pressure after hitting that record high, but also the SOX index down nearly 0.9% at this point. Do you anticipate what you're hearing at CES to eventually be a lift to the broader semiconductor names?
I mean, CES is important, but if you keep in mind, really, the focus really here is on consumer products and automotive and IoT, right? Most of the excitement in the stocks last year was driven in the data center markets, so not really a data center conference. But we think this does set up for especially the AI into PC, AI into edge. The announcement that we heard and we are going to hear should set up some excitement going into 2025, especially on the AI PC that we believe will start to show signs of a ramp this year.
Krishnan, you're at CES. Just give us a better sense of what the reception was like among your colleagues.
गोल्ड और सिल्वर में देखोगे न्यूज़ थी नेगेटिव फॉर गोल्ड एंड सिल्वर सर्विस पीएमआई का और जॉब ओपनिंग का डेटा था दोनों ही नेगेटिव थे गोल्ड और सिल्वर के लिए पॉजिटिव फॉर डॉलर इंडेक्स सिल्वर तो एग्जैक्टली रेजिस्टेंस पे था गोल्ड ने एक ब्रेकआउट जरूर किया था बट न्यूज़ की वजह से वो भी नीचे ही आ गया है फिलहाल सिल्वर सपोर्ट पे ऑलरेडी एक बार सपोर्ट ले चुका है ये दूसरी बार सपोर्ट ले लिया इसने $30 पे होल्ड करता है तो वेल एंड गुड ऊपर जाना चाहिए ब्रेकआउट के लिए अगर नहीं करता है ब्रेक डाउन करता है $30 के नीचे तो फिर थोड़ा बड़ा गिर सकता है प्राइस ठीक है थोड़ी देर पहले जो न्यूज़ बताई थी उसी का इम्पैक्ट है डेटा इज नेगेटिव फॉर गोल्ड एंड सिल्वर लाइक भी करते रहो गाइस कल से कोशिश करेंगे कल या परसों से थोड़ा कंटिन्यू कर ले कोई क्वेश्चन कोई डाउट है तो कमेंट बॉक्स में पूछ सकते हो बाकी ऊपर सिल्वर में सॉरी माफ करना क्रूड ऑयल में रेजिस्टेंस है एफईजी का वहां से एक सेलिंग का प्लान है बाकी इन्वेंट्री कल दोनों एक साथ ही आएंगे याद रखना क्रूड ऑयल और नेचुरल गैस की क्योंकि परसों यूएस का मार्केट बंद है तो क्रूड ऑयल और नेचुरल गैस की इन्वेंट्री एक साथ देखने के लिए मिल जाएगी आपको कल नेचुरल गैस को भी चेक करोगे तो वही एफईजी पर ही रुका हुआ है देखो इसको थोड़ा सा बुलिश होना है तो एफईजी के ऊपर सस्टेन जरूरी है 312 के ऊपर जाना जरूरी है नहीं तो आई एम एक्सपेक्टिंग कि थोड़ा लोअर एंड तक आए यहाँ तक अगर ये बुलिश नहीं होना चाहता है अगर इस तरह से दिस एफईजी इज़ वेरी इंपॉर्टेंट फॉर मार्केट स्ट्रक्चर लाइक्स हो चुके हैं 100 लाइक्स का टारगेट रखा हुआ है लाइक कर दो सभी लोग Let's see the news for the hour. एक बार देख लेते हैं. पावर ग्रिड पे व्यू इंट्राडे के लिए चाहिए व्यू या फिर लॉन्ग टर्म स्विंग पोजिशनल और इक्विटी में चाहिए या फिर फ्यूचर में या फिर ऑप्शन में, ये भी बता देना.
News when you want it with Bloomberg News Now. I'm Nathan Hager. Tuesday morning trading is underway on Wall Street with stocks once again on the rise. That is the sound of the opening bell from the floor of the New York Stock Exchange. At the open, the S&P 500 is higher by 0.3%, getting close to the 6,000 level. The Dow Jones Industrial Average is also higher by 0.3% at about 42,800, and the Nasdaq Composite opens with a gain close to 0.4%. 10-year Treasury yield is little changed at 4.63%. We continue to watch shares of Nvidia up more than 2% at the open after CEO Jensen Huang's keynote speech last night at CES in Las Vegas, unveiling a range of AI chips for gamers, a desktop PC for developers, and self-driving partnerships with the likes of Uber and Toyota. We get more from Bloomberg's Tom McKenzie.
But they also announced a foundation model in terms of helping developers to start to embed AI into physical property, so robots and cars. And that was a big push by Jensen Huang.
Bloomberg's Tom McKenzie, and that push has Uber shares higher by nearly 3% at the open. Jensen Huang also announced Micron Technology will provide the memory chips for NVIDIA's processors, and Micron shares are higher by 4% at the open. We are expecting a news conference later this morning from President-elect Donald Trump. This would be his second encounter with reporters at Mar-a-Lago since his November win. The New York Times reports he is expected to make an economic development announcement. It comes as Trump pushes to block the release of special counsel Jack Smith's final report on his handling of classified documents. Trump's lawyers filed for an emergency order last night to prevent Attorney General Merrick Garland from disclosing the report. We get more from Bloomberg's Jody Schneider in Washington.
Even though it's clear these cases are not going forward, he still wants to make sure that none of this is going to come up. He doesn't want it to come up. And of course, once he's in office, he really doesn't want it to come up. So he's trying to push back on this now.
Bloomberg's Jody Schneider in Washington. Jack Smith's office says the report could be submitted to the Attorney General as soon as this afternoon. And if Garland decides to release it, that wouldn't happen before Friday. Today, the focus in Washington turns to another former president, Jimmy Carter. The remains of the 39th president will leave the Carter Center in Atlanta this morning, arriving later today at Joint Base Andrews outside Washington on Special Air Mission 39. Carter's casket will lie in state this evening and tomorrow at the U.S. Capitol, ahead of the state funeral Thursday at Washington National Cathedral. President Biden will deliver the eulogy in honor of the nation's oldest ex-president. Carter died a week ago Sunday at the age of 100. We continue to follow a natural disaster in Tibet. Chinese state media now say the death toll is up to 126 from a magnitude 6.8 earthquake that struck far western Tibet this morning. That matches the toll from China's last major quake in late 2023 in northern Gansu province. Back in this country, snow, and a lot of it, is coming to a part of the U.S. that isn't exactly used to it. Around 4 to 6 inches of snow and ice are expected in Texas and southern Oklahoma. Temperatures won't match the February 2021 freeze that crippled Texas's power grid, but this comes as the Dallas-Fort Worth area gets ready for the Cotton Bowl Classic between Texas and Ohio State. At this point, they say it is still on this Friday. Back to the markets, we got a fresh look at the trade deficit before the opening bell. It jumped 6.2% in November to $78.2 billion. Imports had their biggest increase since March of 2022, ahead of a possible dock workers strike next week. This morning, we also get a read on November job openings. Tesla shares at the open are down nearly 1%. Bank of America cut its rating on the stock from buy to neutral, and the electric vehicle maker is also facing a new federal probe of its driver assistance feature, Actually Smart Summon. The government says it's had at least one complaint that it caused a crash. Meta Platforms is ending its third-party fact-checking program and switching to a community notes model similar to the one on Elon Musk's X. Meta CEO Mark Zuckerberg made the announcement in a video blog post.
After Trump first got elected in 2016, the legacy media wrote nonstop about how misinformation was a threat to democracy. We tried in good faith to address those concerns without becoming the arbiters of truth. But the fact-checkers have just been too politically biased and have destroyed more trust than they've created, especially in the U.S.
Mark Zuckerberg says Meta will lift a number of restrictions on topics like immigration and gender security and will not write community notes or decide which ones show up. Meta shares at the open are lower by nearly 1%. And that's news when you want it with Bloomberg News Now. I'm Nathan Hager, and this is Bloomberg.
रमेश जी शॉर्ट किया हुआ फ्यूचर और 305 का पुट ऑप्शन भी कैरी किया है। नहीं वो ठीक है, वो मैंने देख लिया क्वांटिटी जो आपने लिखी हुई है। व्यू किस हिसाब से लिया है मुझे ये पूछना था। ये जो आपने ट्रेड यहाँ पर इनिशिएट किया हुआ है ना, ये फ्यूचर जो आपने शॉर्ट किया हुआ है और पुट भी लिया हुआ है, ये लाइक सिर्फ इंट्राडे के पर्पज से लिया था या फिर थोड़ा लॉन्ग होल्ड करना चाह रहे हो स्विंग की तरफ, 1 हफ्ता 15 दिन 1 महीना या 3-4 महीने, ऐसा कुछ व्यू है? देख लेते हैं फिर भी एक बार, थोड़ा सा क्लियर कर दो। लेट मी क्लियर दिस यू नो विच व्यू क्या रहा था आपका जब आपने ट्रेड लिया था, क्योंकि हो सकता है आप कोई स्विंग या पोजिशनल ट्रेड के लिए प्लान करके बैठे हो, मैं इंट्राडे बता दूं, गलत हो जाएगा, राइट? एनालिसिस ही गलत हो जाएगा, कोई फायदा नहीं उसका। मैं एज अ स्विंग देख रहा हूँ, ठीक है, बाकी आप देख लो, मुझे बता दो अगर इंट्राडे के लिए लिया था, क्योंकि इंट्राडे के लिए लिया है तो फिर मेरे को 15 मिनट में देखना पड़ेगा। मैं फिलहाल के लिए स्विंग या फिर पोजिशनल बेसिस पे अगर लिया है तो उसके अकॉर्डिंग चेक कर रहा हूँ। ये क्रूड ऑयल को ना थोड़ा सा अपर लेवल से सेल करना, ठीक है, लाइक ये इस एरिया से जितना ऊपर से सेल करोगे उतना बेटर, क्योंकि एसएल थोड़ा सा बड़ा ही बन रहा है, 30 पॉइंट छोटे नहीं होते जैसे नेचुरल गैस में था। मोहित जी आपका देख लेते हैं, पोजिशनल व्यू है आपका टाटा स्टील का, ठीक है, ये फ्यूचर है क्या? आई थिंक आपने ऑप्शन लिया हुआ है ना, 130 का पुट ऑप्शन लिया हुआ है, वन पे करंटली 2.2 चल रहा है। तो देखो, जो नॉर्मली आपका ऑप्शन का प्रीमियम होता है ना, वो फ्यूचर के चार्ट के अकॉर्डिंग ज़्यादा अलाइन होता है, मतलब फ्यूचर के चार्ट के अकॉर्डिंग ज़्यादा अच्छा मूव करता है रैदर देन इक्विटी के चार्ट। देखने के लिए मैं इक्विटी का चार्ट भी देख सकता हूँ, लेकिन प्रीमियम उस हिसाब से कम या ज़्यादा नहीं होते हैं, फ्यूचर के अकॉर्डिंग ज़्यादा होते हैं। तो मैं थोड़ा फ्यूचर के चार्ट के अकॉर्डिंग बता रहा हूँ, कंफ्यूज मत करना। दिस इज टाटा स्टील फ्यूचर चार्ट, शॉर्ट किया हुआ है आपने 130 का पुट ऑप्शन, ऑप्शन बाई किया है, आई होप सो। 130 का पुट ऑप्शन बाई किया है, वन पे 2.2 चल रहा है। व्यू मतलब आपका नेगेटिव ही है फॉर पोजिशनल ट्रेड। डेली और वीकली देख लेते हैं, एक बार वीकली कैंडल भी देख लेने दो। अरे वाह, कैंडल ही ओपन इक्वल टू हाई बनी है इस वीक में। तो लुक एट द कैंडल, इस वीक की कैंडल देखो, 2 दिन बचे हुए हैं बट ओपन इक्वल टू हाई है, ऑलरेडी 3.5% डाउन है ओपनिंग से। कुछ तो नहीं थी इसमें इस वीक, इतना क्या गिर गया? पिछले 4 वीक से कंटिन्यूसली गिर रहा है, सपोर्ट है कुछ कहीं? मार्केट के पास इसमें ना नीचे ही एक रीटेस्ट है, ये रेजिस्टेंस एरिया हुआ करता था, मार्केट ने काफ़ी बार यहाँ पर रेजिस्टेंस लिया हुआ है 2022 2023 में, फिर 2023 अगस्त में भी लिया था, एक ब्रेकआउट किया था, फिर एक रीटेस्ट करके ऊपर गया था। तो वही एक रीटेस्ट ही एक सपोर्ट है जहाँ पर प्राइस रुक सकता है। तो 126 तक तो लग रहा है, 126, अब एग्जैक्टली 126 तो नहीं जाएगा ऑब्वियसली है, क्योंकि ये कोई सिंगल पॉइंट आपका सपोर्ट रेजिस्टेंस नहीं होता, बट या अराउंड अप्रोक्सीमेटली एक्सपेक्ट कर सकते हो इस रेंज पे। ठीक है, अराउंड 126 के अराउंड प्राइस, 126 127, यही एक लेवल दिख रहा है जहाँ पर प्राइस हिट करने के लिए प्राइस का ट्राई कर सकता है। अभी डायरेक्टली जाएगा या फिर थोड़ा एक बार रेजिस्टेंस भी देख लेते हैं, रेजिस्टेंस कहाँ तक मिल सकता है, या फिर क्या पुल बैक आ सकता है, या फिर ऑलरेडी रेजिस्टेंस से ही सेलिंग करके प्राइस नीचे आया है। ऊपर देखो 153 का रेजिस्टेंस है, वहीं से रेजिस्टेंस लेके आया है, तो बीच में और कोई लेवल तो नहीं है। एक अगर हल्का सा पुल बैक आता है प्राइस में, तो प्राइस एक 140 के अराउंड एक छोटा सा रेजिस्टेंस ले सकता है, और फिर ऊपर एक एफईजी है, दिस वन, ये बहुत छोटा सा दिख रहा होगा वीकली टाइम फ्रेम पे। तो व्यू देखो वेरी सी है, जब तक 146 के ऊपर वीकली टाइम फ्रेम पे कैंडल क्लोज नहीं होती, दो पॉसिबिलिटी है, या तो डायरेक्टली गिरना चाहिए या फिर एक पुल बैक आना चाहिए टिल इस रेंज तक। ये थोड़ा सा इसको चाहो तो ये कर सकते हो और बेटर रहेगा। ठीक है, थोड़ा पुल बैक आ जाए वीकली टाइम फ्रेम पे तो और बेटर है, लाइक इस तरीके से, और फिर गिरे, या फिर अगर डायरेक्टली गिरता है तो और बढ़िया। 126 तक तो नेगेटिविटी लग रही है, पुट लिया हुआ है तो थोड़ा संभल के, ऑप्शन बाई किया हुआ है तो अगर डायरेक्टली नीचे आ गया तो अच्छा प्रॉफिट हो जाएगा, अगर पुल बैक करके आया तो फिर कुछ बचेगा नहीं तब तक, क्योंकि ये पुल बैक कब तक होगा, फिर कब तक नीचे आएगा, कह नहीं सकते। थोड़ा सा अगर इसको हैच करना चाहो ना, फ्यूचर से हैच कर लो, या फिर ऑप्शन सेल करना चाहो तो ऑप्शन सेल कर सकते हो, 145 और 126 के अराउंड कॉल पुट शॉर्ट करके बैठ जाओ, ये भी प्रीमियम आपके थोड़ा सा डीके होते रहेंगे, तो थोड़ा सा अगर ऑप्शन बाइंग में डीके लॉस भी होता है तो ऑप्शन सेलिंग कवर कर लेगी। बाकी भी देखो व्यू तो नेगेटिव ही दिख रहा है। गोल्ड सिल्वर बता दिया अभी, जस्ट रेजिस्टेंस पे था गोल्ड, वहीं से सेलिंग आ गई। सिल्वर में भी वही है, सपोर्ट से बाइंग आई है, देख लेते हैं कितनी अकर करी है ऊपर। वेयर इज द सिल्वर एंड गोल्ड। ठीक है, ये रेजिस्टेंस पे था, वहां पर थोड़ी बहुत सेलिंग आई मार्केट में, फिर न्यूज ही आ गई, वो भी न्यूज नेगेटिव ही थी। सपोर्ट था नीचे $30, वहां से थोड़ा बहुत रिकवरी की तो है, उसी लेवल पे रुका हुआ है। देखो अब ये 2 बार सपोर्ट ले चुका है, हायर हाई बना नहीं है, थर्ड टाइम आ रहा है। ब्रेकडाउन हुआ तो बड़ा अच्छा गिर जाएगा, लास्ट सपोर्ट मान के चलो। इसके नीचे ब्रेकडाउन रीटेस्ट हुआ तो फिर नीचे कुछ मेरे अकॉर्डिंग तो सपोर्ट दिख नहीं रहे मुझे, नीचे ही है फिर एक 29.47। बीच में कोई अगर रीटेस्ट होगा तो देखना पड़ेगा, नहीं तो सपोर्ट तो नहीं है। व्यू थोड़ा सा नेगेटिव चल रहा है न्यूज़ की वजह से, जो डेटा आया था। गोल्ड का भी वही हाल है, रेजिस्टेंस पे था, ब्रेकआउट की कोशिश करी बट न्यूज़ नेगेटिव आ गई तो वापस डाउन चला गया। ऊपर रेजिस्टेंस का ब्रेकआउट हो चुका है 2 बार, तो अब उसको कंसिडर मत करना एज अ रेजिस्टेंस। डे हाई इज द ओनली रेजिस्टेंस, वो अब कंसिडर नहीं किया जाएगा। Venkat Ramesh ji, I didn't answer your question because I want to know, what's your view? You take this position, you sorted future and carrying 305 put option in uh, power grid. What's your view? You took this trade for intraday purpose only, or for swing, or for positional trade like this? After that only, I can do the analysis. Can you please let me know what's your view for this trade? What's the reason for taking this trade? What's the reason behind, taking this trade actually? Because I can give you the analysis as per the 15 minute, but maybe you will took this trade as per the swing trade, so in that case that analysis is not worthy, right? So if you let me know why, what is the purpose of taking this trade, like for swing, for positional, only for intraday like this. 50 लाइक्स हो चुके हैं, 100 लाइक्स का टारगेट भी है। वी विल ट्राई, ठीक है, ट्राई करेंगे कल से, थोड़ा सा कल या परसों से कंटिन्यूसली लाइव कर ले, हेल्थ थोड़ा सही हो जाए तो। If for swing trade you took this for swing, okay, let me check. ओके लेट मी चेक। ओके, क्रूड ऑयल में थोड़ा ध्यान रखना, ये रेजिस्टेंस से सेल प्लान कर सकते हो, अच्छा है। थोड़ा सा ध्यान रखना, ये रेजिस्टेंस एसएल थोड़ा बड़ा बन रहा है, तो जितना ऊपर मिले उतना बेटर। लोअर लेवल पे क्वांटिटी कम ही रखियो, क्योंकि जितने नीचे लोगे उतना बड़ा एसएल बन जाएगा। Power grid, this is future chart, okay, because you trade only in future and option, right? So your premium also moving as per the future chart. For swing trade we have to go for weekly and daily analysis. This candle is also open equal to high, almost open equal to high. इस वीक ऑलमोस्ट सारे ही स्टॉक्स में कुछ प्रॉफिट बुकिंग ज़्यादा ही आ रही है। ओके, कितने पे शॉर्ट किया आपने? Can you please let me know your what is the price, future price, at which you sorted this power grid future chart? कितने पे शॉर्ट किया आपने फ्यूचर को? You took this 305 put option. You are looking for 298 target. 298. 298. 298. You can consider this 298 to 289. This is the range for your target. Okay. Yes, it is expecting, you can expect कि price इस level तक जा सकता है, 289 to 298. Now let's see the resistance as well. 305 you sorted today. Okay. Weekly. See, as per the weekly time frame, 298 to 289 is a support range. Yeah, you can expect this. ठीक है, प्राइस यहाँ तक आने की कोशिश कर सकता है, बट आपने कुछ ज़्यादा ही नीचे शॉर्ट कर दिया, आज ही शॉर्ट कर दिया आपने। देखो, अगर पुल बैक आ गया ना तो थोड़ी सी प्रॉब्लम हो सकती है, बिकॉज वीकली टाइम फ्रेम पे मार्केट के पास एक एफईजी भी है। अगर मार्केट उसको टेस्ट कर गया तो फिर प्रॉब्लम हो सकती है। थोड़ा ट्रेलिंग एसएल का ध्यान रखना। ऊपर प्राइस गया तो ये जो एफईजी है, दिस इज द एफईजी ओवर हियर, ये दिस इज आई थिंक पुल बैक आता है तो फिर यहाँ तक एक पुल बैक दे सकता है 320 टू 325। स्पेस है, बिल्कुल नीचे स्पेस है। मार्केट ट्राई करना चाहिए एक बार 289 टू 289 टू 298 इस लेवल को हिट करने के लिए। बट दो चीज़ें हो सकती हैं अगेन इसमें, या तो प्राइस डायरेक्टली फॉल करे या फिर एक पुल बैक दे। पुल बैक देता है तो ये एफईजी एज अ रेजिस्टेंस की तरह काम करेगा। और कोई लेवल इसमें डेली देख लेते हैं एक बार, कुछ डेली में है क्या। हाँ, वो देखो डेली में भी सेम ही बना हुआ है, सेम सिनेरियो डेली में भी बना हुआ है। ठीक है, वीकली टाइम फ्रेम पे एक्सपेक्टिंग है वो टारगेट। वही 298 टू 289, both target are expecting as per the daily and weekly chart. बट एज आई सेड अगर पुल बैक आया है तो थोड़ा सा प्राइस अपने प्रीवियस एफईजी तक जाने की कोशिश कर सकता है। वीकली टाइम फ्रेम पे मैंने बता दिया, बट डेली में बता देता हूँ सो दैट थोड़ा सा आपका एसएल छोटा हो जाएगा। 320, 320, that is the only level we have. और कोई लेवल तो है ही नहीं। ओके, 320 टू 321 अगर पुल बैक आता है, वीकली और डेली टाइम फ्रेम दोनों सेम ही बन रहे हैं। वहाँ पर वीकली में एफईजी है और डेली टाइम फ्रेम पे सपोर्ट का ब्रेकडाउन बना रखा है। तो या एक्सपेक्टिंग है, बिल्कुल है, बट पुल बैक आया तो थोड़ा सा ध्यान रख लेना, क्योंकि पुल बैक आया तो फिर उसमें थोड़ा सा आपको अपना एसएल ट्रेल करना पड़ेगा, बिकॉज यू सॉर्टेड वेरी रिसेंटली। आई थिंक 305, राइट? 305 तो बिल्कुल आज ही का प्राइस है, यहाँ पर है 305। तो अब देखो, दो पॉसिबिलिटी रहेंगी, या तो सीधा नीचे आ जाएगा या पुल बैक जरूर जाएगा, दोनों में से जो बेटर हो। डायरेक्टली आ जाए तो बेटर ही है। बाकी अगर देखो डायरेक्टली आ गया ना नीचे, तो एक बाइंग का प्लान भी कर सकते हो इसमें। 289 टू 290 के 289 टू 290 के अराउंड इस रेंज में बाइंग भी प्लान कर सकते हो अगर डायरेक्टली नीचे आता है तो। अच्छा सपोर्ट दिख रहा है वीकली में। तो नेचुरल गैस अगर एफईजी के ऊपर निकल गया ब्रेकआउट रीटेस्ट करते हुए, तो यहाँ पर भी एक बाइंग का प्लान कर सकते हैं। बाकी अगर एफईजी के ऊपर नहीं निकल पाता है तो फिर इसमें मान के चलना ये 298 के आसपास ही नीचे इस लेवल को टच करने जरूर आएगा। बाकी क्रूड ऑयल मैंने बता ही दिया आपको, ये रेजिस्टेंस जोन है, सेलिंग का प्लान करना। थोड़ा क्वांटिटी लोअर एंड पे कम रखना, हायर एंड पे थोड़ा बढ़ा सकते हो। बीच में और कोई सपोर्ट है नहीं इसमें, सो दैट इज़ द ओनली टारगेट वी हैव। बाकी कल एक साथ क्रूड ऑयल और नेचुरल गैस की इन्वेंट्री रहेगी तो उसका भी ध्यान रखियो। लाइक भी करते रहो गाइस, 50 लाइक्स हो चुके हैं, 100 लाइक्स टारगेट है। JP Morgan planning to bring staff back to the office 5 days a week.
News when you want it with Bloomberg News Now. I'm Nathan Hager. President-elect Donald Trump is set to hold a news conference at Mar-a-Lago at 11 a.m. Wall Street time. This will be his second encounter with reporters since his win in November. It comes as Republicans in Washington map out their strategy for enacting Trump's agenda. The president-elect has said he wants to pass his priorities in one big budget reconciliation bill this spring so it wouldn't require Democratic support. House Financial Services Chair French Hill says he's in favor of that.
That's the easiest way to get the votes for the president's priorities in the House, which include, as you said, energy permitting reform, securing the border, and of course, debating and completing an extension of the Trump tax cuts from 2017.
House Financial Services Chair French Hill was a guest on Bloomberg Surveillance. One influential economist is warning of bond market turmoil if Trump's policies pile onto the debt. Torsten Slok is chief economist at Apollo Global Management.
If you do have a bigger risk of a higher headline number, that also raises at least modestly the probability that we'll get some at least potential Liz Truss moment where we could see a fairly significant number coming out.
Apollo's Torsten Slok referred there to former UK Prime Minister Liz Truss, who stepped down after just 50 days when investors rebelled against her spending plans. Right now, the 10-year Treasury yield is at 4.67%, trading at its highest level since October of 2023. Those yields are moving higher on new signs of U.S. economic strength. November job openings came in higher than expected at nearly 8.1 million, and the services economy grew to its highest level since early 2023 last month. That's according to the Institute for Supply Management. Goldman Sachs chief economist John Hatzius says he's positive on the American economy.
Inflation can come down and can continue to come down. While the jobs number this morning is a little stronger, we've clearly seen a rebalancing in the labor market, and utilization is now a bit lower than it was back in 2018 or 2019. So that's a pretty constructive environment, both on growth and on inflation, in my view.
Goldman Sachs chief economist John Hatzius. And after that data, traders are no longer pricing in a rate cut from the Federal Reserve before July, and stocks are falling, led by tech shares. The NASDAQ composite right now is down 0.9%. The S&P 500 is 0.4% lower. The Dow Jones Industrial Average is little changed. Today, the focus in Washington will be on former President Jimmy Carter. The remains of the 39th president will leave the Carter Center in Atlanta this morning to arrive later today at Joint Base Andrews outside Washington. From there, the casket will lie in state at the U.S. Capitol this evening into tomorrow ahead of a state funeral at Washington National Cathedral Thursday, where President Biden will deliver the eulogy in honor of the nation's oldest ex-president, Jimmy Carter, who died a week ago Sunday at the age of 100. We continue to follow the disaster in Tibet, where the death toll is now up to 126, with nearly 200 more injured in a magnitude 6.8 earthquake that struck far western Tibet this morning. Back in this country, they're getting ready for snow. 4 to 6 inches of snow and ice expected in southern Oklahoma and Texas, raising concerns about the Lone Star State's power grid. Temperatures aren't expected to plunge as low as they did in February 2021 when they had days of blackouts. But the Dallas-Fort Worth area is also preparing for the Cotton Bowl this Friday between Texas and Ohio State. At this point, officials say kickoff is still on. Back to the market, we're watching shares of Nvidia now down 3%, giving back the gains after CEO Jensen Huang's big product unveil at CES in Las Vegas. As Bloomberg's Tom McKenzie reports, it included new chips, a new PC, and new partnerships.
They're going to be partnering with Toyota. Autonomous vehicles is going to be part of the push, and you can see a future where your interactions with your car are going to be much more seamless. They're going to be, for example, doing things like facial recognition, make sure you're not falling asleep at the wheel, giving you more updated data in terms of driving conditions, the road surface, all that kind of thing as part of that autonomous autonomous driving package.
Bloomberg's Tom McKenzie, in a partnership with Uber, still has those shares higher by 1.5%. Meta Platforms is getting rid of third-party fact-checking and switching to a community notes model, similar to Elon Musk's X. CEO Mark Zuckerberg made the announcement this morning.
We're going to simplify our content policies and get rid of a bunch of restrictions on topics like immigration and gender that are just out of touch with mainstream discourse.
Meta's Mark Zuckerberg says content moderation on Facebook, Instagram, and Threads had gone too far. Right now, Meta shares are lower by more than 2%. That's news when you want it with Bloomberg News Now. I'm Nathan Hager.
I think is probably
This
the
is
most
Bloomberg.
important for this is the 10-year Treasury. And if you look at that, we've been in a range of upper threes to upper fours for the last 2.5 years on that yield. So to the extent that we stay in that range, I think there's no change to that outlook. Now, if rates move materially higher, 5-6% on the 10-year Treasury, that could delay things. But in our view, the spike that we saw in yields, for instance, in just December, is a result of speculation around policies that might be inflationary, like tariffs, that aren't actually known yet. So as we sit today, and based on the conversations we have with people who are doing these transactions, as of yet, we don't think there's any change to that.
So 30 seconds, you don't see that as very likely for 2025, at least?
In terms of higher rates, I would say at this point, no, because the inflation, it's all speculation at this point. Your prior guest made a good point about that. We don't know what's going to happen. And if we look at the components of inflation, some of them, like shelter inflation, are actually pretty low on a real-time basis. We think real-time shelter inflation is growing about 1% year over year, and that's a third of the CPI index. So that should have a downward pressure. Other things might have upward pressure. At this point, though, we feel pretty comfortable with our call of an inflection in valuations.
All right, Gregory, thanks so much for taking the time to join us here today.
Thank you.
Keep it right here on Yahoo Finance. Coming up next, it's Wealth, dedicated to all of your personal finance needs. Brad Smith has you for the next hour. We'll see you tomorrow.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Wealth, everyone. I'm Brad Smith, and this is Yahoo Finance's guide to building your financial footprint. Our community of experts will give you the resources, tools, tips, and the tricks that you need to grow your money. And on today's show, your tech investments. A portfolio manager discusses the potential risk in your exposure to the Magnificent Seven stocks. And your medical debt will no longer hurt your credit, according to a new rule under the Consumer Financial Protection Bureau. We explain that. Plus, your New Year financial checkup. We'll put the stethoscope to 3 bills that you should review in order to get them lowered. But first, we should mention we are awaiting remarks from President-elect Donald Trump out of Mar-a-Lago. The former president will be inaugurated as the 47th president of the United States on January 20th. Lawmakers officially certifying Trump's election victory yesterday, just 4 years after the same proceedings were disrupted when Trump supporters stormed the Capitol in protest of his 2020 election loss. Let's turn now, in the meantime, to the economy. Job openings during the month of November came in higher than expected in a sign of labor market resilience. My next guest says that the incoming Trump administration 2.0 should lead to better 2025 employment gains. Joining me now, we've got Stephen Risciuto, who is the Mizuho Financial Group U.S. Chief Economist here. All right, so break this down for us, Stephen, as you always do. And what is the comparison that we're running some of those 2025 gains that you're anticipating up against?
Well, I think the answer is very, very simple. When you look at the concerns that corporate America had going into the 2024 period with regard to the potential for the Trump tax cuts to be allowed to expire. Therefore, there was greater pressure on companies to decide that they needed to, hold back on costs in order to grow their earnings. Remember, in 2023, we had an environment where earnings were up only 1.5%, but the equity market was up over 20%. Last year, we're up about 10% in earnings, but we were again up over 20% in the S&P 500. So where there was this desire to really move earnings back into double-digit territory. And now as we're going forward with the prospects of a more pro-business oriented administration with potentially a greater likelihood of additional tax cuts, it takes some of the pressure off companies to control their costs, and therefore it allows them to potentially go back to expanding their businesses and expanding their employment base. And this is what we think will happen in early 2025.
In this morning's job openings and labor turnover survey, we saw job openings a little changed, 8.1 million. And then additionally, we saw the overall number of hires and total separations, little changed as well, 5.3 million, 5.1 million, respectively. I wonder what picture this further paints around the overall employment situation and labor market from your perspective.
Well, the fact that job openings are starting to climb again, reverse a trend that we have been seeing for several months, and the fact that it's going back up, I think, is an indication of the fact that the transition from, a desire to cut costs to an environment now of trying to go for top-line revenue growth is starting to unfold in the economy. And I think that's important because going for top-line revenue growth really allows for a lot more M&A related activity, also allows for a lot more investment expenditures to come down the pipeline, and allows for an economy to probably put in a 5th year of above-trend economic growth in 2025. And that's a very, very powerful statement. That's the longest period in the post-war environment that we have seen the economy run above trend GDP.
And so all of this in mind, it comes as a precursor to this week's jobs report. Of course, there's a little bit more lag on the JOLTS report versus the employment situation. But what are your expectations going into the monthly print?
Well, we think they're going to be a very, very healthy payroll number. We're in the 170,000 category. We also expect the unemployment rate to stay unchanged at around 4.2%, but we're also looking for 0.4% in hourly earnings. So I think the point here to take away is these are solid labor market environment. The economy is showing that it's keeping a tight labor market environment. We're still below the natural rate of unemployment, which is 4.5%. And therefore, I think it's showing you that the probabilities of additional Fed rate cuts coming down the pipeline is probably being reduced as we go forward into 2025.
So what does that mean for the 2% inflation goal?
The Fed hasn't been able to achieve it. They've opted not to force it to occur. They're more likely to be willing to accept 3%. And I think when they complete their review of the monetary policy goals and guidelines in 2025, they will probably opt for a average inflation target of 2 to 3% rather than a specific 2% inflation target, which means there's still some upside potential in bond yields as the market takes on potentially higher inflation as we go forward in 2025.
All right, Stephen, thanks so much for taking the time here with us. Appreciate it.
Pleasure.
Stocks under pressure today from higher Treasury yields. Joining me now, we've got Brian Cronkite, who is the Allspring Global Investments Senior Portfolio Manager. Great to have you here with us, Brian. So you say the Magnificent Seven's weight in the S&P 500 creates risks for investors. So explain those risks and then where you see opportunity ahead.
Yeah, it's a risk of being complacent. The returns of the S&P 500 and the Mag 7 specifically have been tremendous. And we've all been happy looking at our statements over the last 24 months saying how much appreciation we've seen in those 7 stocks. But that's a risk because the market is broadening out right now. Earnings growth rates for these small cap and mid cap companies are accelerating above the rate of the Mag 7 growth rates in 2025, which should put pressure on the spread between the multiples. We don't want to pay as much of a multiple for companies that are growing slower, which is the Mag 7, compared to the broader market, which is the Russell 2000 and the Russell mid-cap stocks. And so complacency with your large cap and your Mag 7 could be a risk. That doesn't mean sell it. Doesn't mean leave. Just be careful about about staying too long, rotate down.
Okay, that's exactly what I was about to ask. As we're thinking about the earnings growth rates as well, earnings growth rates between the Mag 7 and the rest of the market, what do you believe that spells out for larger relative performance here?
I think the opportunity here is to understand what's happening with the broader economy. Investors want to be positive on the America First policy that's coming into place. They want to believe that the lower regulatory backdrop and burden will be positive for companies. And typically when that's happening, you want to move your equity down cap. You want to move into small caps, which benefit more broadly from a stronger economy. And you want to move to where valuations are cheaper, which are the value stocks today. But we're not seeing that. And the reason we're not seeing that is because we're fighting against now an unfriendly Fed. Look at the 2-year yields. As that has moved higher in Q4, that's putting pressure, downward pressure, on the market's belief that equities down cap will rally. So right now it's the battle between policy and Fed, fiscal policy and Fed, and we have to figure out which one's going to win. But if and when the market believes fully that the Fed and the fiscal policy work together, the amount of outperformance of small caps could be meaningful given the discounted valuations versus large cap.
You know, even as you were mentioning that investors want to believe that there is more promise in kind of the America First agenda that is set to really be prioritized among the incoming Trump administration and Trump 2.0 here, there are some major companies that have larger outsized risks. Some of the largest companies in an Apple that get talked about, a Tesla even in their own growth strategy have largely leaned on Gigafactory Shanghai to build out some of what the investors expect to come forward to in the broadening of their own revenue diversification as well. I wonder how you're evaluating that in tandem with some of those very names being Mag 7 names.
It's a great point. It's one more risk for the large cap companies. They haven't had to face it in a long time. The America First focus is going to, by de facto, just put pressure on some of the global supply chains and the global customer bases that these larger companies have. Not all companies have this condition, but as you move down cap, you're more likely to see companies that have a higher percentage of revenue coming from the U.S. client base. And so it's a positive there for small caps as well. So global companies have to be very careful about the likelihood of their supply chains being disrupted and the opportunity for their customers to have to face different tariff structures or just higher prices in general.
Where are some of the sector opportunities that you believe are set to prevail or outperform in 2025?
Well, I'm a little cautious on banks. To start where I'm not excited, because the market's very excited about banks right now. I'm very concerned about the market's optimism around small cap and regional banks in particular. The large cap banks have material competitive advantages that are not going to go away. In fact, they're going to get stronger as CCAR potentially is removed and the regulatory backdrop changes. So I think the optimism around banks, down cap, is a bit nerve-wracking for me right now. Conversely, where I like to go right now is I want to push that capital into materials, where we've seen some of the packaging names, some of the chemical names go under extreme pressure over the last 12 to 24 months. And I'm also seeing opportunity in healthcare. Healthcare has gone through a tremendously negative rhetoric as we've gone through the election cycle, and valuations there look really attractive to me. And these businesses have stable cash flows that are no near as volatile as what the market's reflecting through stock prices today.
And what about individual names? Who are you tracking? What's at the top of your list in terms of the companies that you're piling into to start the year?
Well, two names I like, sticking with the sectors we just talked about. Graphic Packaging in the material space is a packaging company going through a multi-year transition. They're on the very tail end of that right now. That transition is going to see an improvement in the stability of cash flow because they sold off their more commodity-like assets. You're going to see a growth in the margin structure as they focus on value-based pricing. And you're going to see expansion of their capacity as they complete their big CapEx program in Waco, Texas. And so Graphic Packaging to me is a company going through a transition the market hasn't fully appreciated yet. On the healthcare side, Charles River Labs is a business that we like and believe that the clinical research organization companies in general are underpriced today. CROs are companies that help pharmaceuticals and biotechs get through the clinical testing phase. And we've seen a pullback on money spent on R&D and testing as pharma companies have merged and as interest rates have moved higher, putting pressure on available capital. That is not sustainable in the long term. These companies need to invest to develop drugs, and that will continue to happen again. Charles River has been investing through this trough in their cycle, which we think positions them well to have a much bigger market share and ultimately bigger cash flow streams as we get to the other side of this downturn.
Bryant Van Cronkite, thanks so much for taking the time here with us today. Appreciate it.
Pleasure.
Now time for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. Joining me now, we've got my morning brief co-host Shauna Smith back here live in living color in studio. First up, we got to talk a little Aurora here. That one has been lighting up the trending ticker page on Yahoo Finance. Aurora Innovation rallying on partnerships with Continental and Nvidia to deploy driverless trucks at scale here. Shares, my goodness, Shauna, moving up by about 37.5% right now.
Yeah, it's crazy to look at this astronomical climb that we see from Aurora Innovation. But when you pair it with the excitement surrounding NVIDIA, maybe it's to no surprise that we are seeing the degree of reaction that we are here right now in early trading. Let's talk about what exactly this partnership entails. So this is with Aurora, NVIDIA, and then also there's a third company here involved in this, Continental. They're a tire and car parts supplier, and they're all teaming up for driverless trucks. And this is the future here. Lots of excitement surrounding what exactly this means here. NVIDIA's Drive Thor platform and Driver OS is going to be incorporated into this driverless system. Now, it will take some time here in order to get this up and running, but the CEO of Aurora, Chris Umson, was very, very encouraged and optimistic about this partnership, saying that, quote, delivering one driverless truck will be monumental. Deploying thousands will change the way we live. And I think it's that last line, changing the way we live, really speaks to some of the excitement, some of the technological advances that we're getting out of CES and explains the massive jump that we're seeing in a name like Aurora today.
All right, let's go to the stretchy pants industry, why don't we? Lululemon upgrade to outperform from market perform at Bernstein. Analysts citing a stronger 2025 with an inflection point in growth in the Americas business pegged to a stronger, higher income consumer and easier comps as well here. Shares of Lulu, ticker symbol LU, very fittingly. That's up by about we'll call it 2% roughly on the day.
Yeah, the product pipeline, I mean, you listed off the big factors here within this upgrade and why Anisha Sherman, the analyst at Bernstein, is a little bit more optimistic or much more optimistic when it comes to Lululemon. A lot of this has to do with the bottoming maybe of the Americas business. She does see a catalyst here ahead. A lot of that coming from the product pipeline, saying that a better 2025 spring assortment is going to help reignite some of those sales that have been lagging just a bit. But it's not just about the trends that we're seeing here in the U.S. She was actually very encouraged and bullish on the trends overseas in China. And that, to me, is important to note, just given some of the concerns surrounding the Chinese consumer and some of the buying patterns that we have seen there. And within this report, I also want to point out that Sherman it's not only Lululemon that she's optimistic about within the sportswear spending space, it's also beyond that. She highlights that she is bullish here on the entire sportswear brand coverage. That includes top picks like Adidas, Nike, and On Holding. So she's seeing a return. She's confident here in the trajectory of consumer spending, where that's going, and Lululemon just one of the names that she sees benefiting from that cycle.
I just got a Lulu parka. I quite like it.
Did you? Well, then you're contributing to it.
I'm helping. I'm somewhere within those financial
results. They're
results.
Align leggings.
Yeah?
Yeah.
Okay.
My favorite purchaser.
All right. Interesting. We'll see if it continues to resonate in China as well. That was up 39% in the most recent quarter. Also here, finally, let's round this out with JP Morgan Chase. JP Morgan Chase is reportedly planning to bring all employees back to the office 5 days a week. This is according to a Bloomberg report. And we're taking a look at shares right now, up by about 1.5% here. I mean, digging deeper further into this also has been an employment attrition play that we have talked about too with companies.
Yeah, I don't think this is any surprise, just given the rhetoric and what we've heard from CEO Jamie Dimon in the past. He's made it very clear that he believes many of the best work is done when people are collaborative and people are in one location in the office here. So again, we are expecting this announcement to come in the coming weeks, and this would replace the current 3-day mandate here for many workers. Remember back in April of 2023, so almost 2 years ago, that is when JP Morgan came out demanding that all MDs, managing directors, had to be back in the office 5 days a week. When you zoom out even further beyond that, about 60% of the bank's staff, and that includes traders, retail branch workers, the MDs I just mentioned, they're already operating under that 5-day-a-week requirement. So again, this would encompass the rest, the 40% here of the workforce that maybe is not mandated to be back in the office 5 days a week. I also want to point out that we have seen a divergence here just in terms of how these top Wall Street banks are approaching this. When you take a look at a name like Citi, a little bit more flexible under CEO Jane Fraser. We know that Goldman Sachs under CEO David Solomon, he's been very vocal and really has pushed staff to be back in the office now for quite some time, 5 days a week. So we will see how this all plays out at JP Morgan.
Well, the locations of these offices are changing too. I mean, JP Morgan had even announced last year at the midpoint, I believe, that they were going to expand their Miami office, knowing that there were so many of the employees that were like, all right, cool, if we don't have to be in the office 5 days a week, I might just move to Florida or find somewhere else that might be, well, at least at the time, a little bit cheaper, maybe have some better tax benefits. And that's certainly something that the banks have perhaps been in a little bit more constant communication with their employees about, especially as they were saying that they're looking to double the size in that Miami office.
Yeah, well, and they also invested a heck of a lot of money in their new headquarters here in New York City as well. And that project was underway before the pandemic started, and so it continues today. So I don't think a big surprise there.
Yeah, somebody's got to be there to have the free snacks. Why not? Shauna, thanks so much. Appreciate it. Coming up, everyone, your medical debt will no longer be a consideration in your credit report. We'll explain. Plus, examining some of the biggest consumer spending themes for 2025. More on wealth after the break.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
The Consumer Financial Protection Bureau, or CFPB as you know them in your hood, announcing today a new finalized rule banning unpaid medical bills from being included on Americans' credit reports. Here with the details, we've got Yahoo Finance senior reporter Jordan Weissman. Jordan, what do we know?
Yeah, this is a high priority for the CFPB under Director Rohit Chopra. They've been working on this rule since the summer, and they've been kind of dealing with this issue of medical debt for a while now. This particular regulation was something they put together kind of in partnership with Vice President Kamala Harris, who was very interested in medical debt. And what it would do in theory, if it's ever implemented, is it would ban credit reporting agencies from including your unpaid medical bills, your unpaid hospital and doctor's bills that have gone to collections on your credit report. And this is sort of the continuation of what's been a gradual process. The credit reporting agencies like Experian, TransUnion have already agreed in recent years to limit their use of medical debt in credit reporting. For instance, they already agreed to not include medical bills that were less than a year old. They agreed to not to include medical bills that were under $500. Oftentimes because patients would get a bill and then contest it, dispute it, and it was sort of unfair or in a lot of people's view, for people to have that then kind of tarnish their credit. So this could be a big deal that this is now a blanket national ban that would be in place that would say no medical bills, no medical debt would impact your credit.
Jordan, thanks so much for breaking this down. Next time, perhaps we could do this over some sick baselines. Appreciate it.
This sounds good. Thanks.
Thanks. MasterCard Economics Institute is out with its outlook for 2025, and it has some key insights about consumer spending. This includes spending on big-ticket items, travel, mass market versus high-end apparel, and the she-economy. Here to dig into some of them, we've got Michelle Meyer, who is the chief economist at the MasterCard Economics Institute. Great to have you here in studio with us, Michelle.
Fun to be here.
We got to dive into some of these expectations, and we'll start with the big-ticket items in 2025. What are the anticipations there?
Yeah, so when we think about overall trends in 2025, we're looking for the global economy to expand 3.2%, which is a little bit above the trend that it saw in 2024. General continued outperformance in the U.S. here with this exceptionalism story continuing. We saw the momentum from 2024 with the holiday shopping season coming in strong. And we continue to see an environment where consumers are going to be actively participating and engaged in the economy. India is another story, another economy that is still shining bright given some of the structural changes that have been very favorable. And the GCC, when you think about some of the dynamics in the Gulf, where there's, again, a narrative of not just growth in the short term, but potentially continuing into the longer term.
One item that I really liked within this report, and it's reminded me to schedule my days off, I really liked the travel wins here.
Yeah.
All right, or travel twins, I should say. Travel twins, what exactly does this entail?
Sure. So there's a lot of focus on the travel economy, as there should be, right? Coming out of the pandemic, all of that pent up demand to get back out, to have experiences, to travel, to see the world again after not being able to. But, you know, when you think about how consumers are choosing where they're going and why they're going, affordability matters, and convenience and the ability to get to certain locations matter as well. So we looked at some of the big areas that people travel, and then we matched to their quote unquote twins. Those locations that are not as actively visited, maybe more affordable, more reachable. And it's fascinating to see these trends where the twins last year in 2024 saw faster growth in hotel spending. And we think that that should continue into 25 as consumers are really mindful of how they're spending and again, why they're spending and how they get the best value.
Okay, so just to pause for a second and spend a beat on the spending on the experience economy and spending on services versus the goods spending and those big ticket items that we were talking about. Are we anticipating that people will spend more on big ticket items this year, even knowing where travel has been valued as well?
Yeah, so we do think that there'll be more of a balanced budget as we look at balanced basket, I should say, as we look at into 2025. And we saw some evidence of that in 24 in the holiday shopping season, where categories like jewelry showed a lot of strength, electronics, electronics, certain technology items, where the combination of promotions and frankly the replacement cycle likely mattered for those categories. But I do think it's the experiences that were so important to the consumer the last few years. It's still the case that that's something that's valued. It's just that consumers are being a little bit more mindful around how they're spending and engaging, because we know that price levels have increased. It's expensive to go out and travel. You still want to do it, but you want to do it where you get the most amount of value.
Right.
So overall, yes, a bit more balanced basket than maybe we saw early 24 and certainly in 23, but one where consumers are still engaging with that mind of how they get the best value.
So one of the other things that you identified is mass market versus high-end apparel here.
Yeah.
And this perhaps ties back into the kind of balling on a budget that you were just mentioning a moment ago. What are you seeing there, and how is the consumer mindset shaping up?
This was a really fun analysis. I'm glad you brought this one up as well, because given the nature of our data and the fact that we're able to have such granularity in terms of spending across different categories and across different countries, we looked at 26 countries, and we're able to categorize spending on mass market versus these really uber luxury names, like, so think really luxury. And in 85% of the countries, we saw faster growth in mass market than we did in the luxury names. The exceptions being Mexico and Japan, where luxury spending outperformed. In a place like Japan, that can make a lot of sense given the amount of tourism that moved in with the strong dollar relative to the weaker yen. A lot of international visitors that were out there spending and embracing the luxury market there.
Interesting. Okay. While we have you here, we got to talk about the she-economy. I mean,
yeah.
You think a couple summers ago, and it was Taylor Swift, it was Beyonce driving the she-economy and the experience economy then. Are we looking for a resurgence, a reboot, if you will, in the she-economy?
Yeah, I don't think the story has gone away. I just think it continues to transform the she-economy and how you think about it. So, of course, you have these phenomenon, as you mentioned, T-Swift, that are taking over in terms of how people are spending and engaging and creating a lot of life into the economy. But I would also argue that the other dynamic that's fascinating that we explore in the piece is the engagement of female workers in the labor market. So across, again, the global economy, a very clear theme was that the participation rate for women aged under 54, so kind of that cyclical dynamic of the workforce, we had a much faster increase in participation amongst the women of that age than men. And that was across many different economies.
Michelle, we got to leave the conversation there. We have some breaking news coming in. We go now live to President-elect Donald Trump speaking at Mar-a-Lago. Let's listen in.
Thank you, gentlemen. And I'm thrilled to announce today that DMAC will be investing at least $20 billion over a very short period of time into the United States, and they may go double or even somewhat more than double that amount of money. It's a great thing, and I believe he will say that he's doing it because of the fact that he was very inspired by the election. They wouldn't do it without that election, I can tell you. A lot of people wouldn't. You saw last week where we have somebody who's going to go from $100 to $200 billion. And we have many other people, and we'll be bringing some of them out. Some of them like to do it somewhat more quietly, and some don't. And they feel so strongly about the country that they want to let people know about it. But it's an honor to have such a great investor investing in our country. The investment will support massive new data centers across the Midwest, the Sun Belt area, and also to keep America on the cutting edge of technology and artificial intelligence. He's very big into the data centers, and that's going to be a very hot item in the coming years, as you know, with AI. In particular, the first phase of the project will be in Texas, Arizona, Oklahoma, Louisiana, Ohio, Illinois, Michigan, and Indiana, those places. And Hussein, I'd love you to come up and say a few words. Thank you very much. Thank you. Thank you.
Thank you, Mr. President. It's been amazing news for me and my family when he was elected in November.
All right, that is President-elect Donald Trump addressing the nation from West Palm Beach, Florida, ahead of his inauguration, less than 2 weeks away. We'll continue to monitor the remarks here and bring you any updates, especially as it does move any markets here. We'll continue to discuss that on the other side. We'll be right back with more wealth on the other side of the short break.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
We go now back to President-elect Donald Trump, who was speaking at Mar-a-Lago just under 2 weeks before the inauguration. Let's listen in.
Looking like a bunch of fools with 13 dead and many, many badly, horrifically injured. Nobody ever talks about them. No arms, no legs. Nobody ever talks about them. The way they got out was outrageous, leaving billions of dollars of brand new military equipment that I bought in the hands of the Afghans and specifically the Taliban. It's the group. And we were doing very well. We would have been out. We would have been respected. I think it's one of the reasons it was so badly handled, that withdrawal, where people are jumping onto airplanes, falling off the sides of airplanes when they're 3,000 feet in the air. And nobody's ever seen anything like that, the worst. And because of that, I think Russia went and attacked Ukraine. When they saw that, they said, these guys are incompetent. They don't know what they're doing. But we know what we're doing now, and that's going to all end. And we have a great military. I defeated ISIS, as you know. We're in no wars. I just finished a couple. And we got also our soldiers guarding Syria and Turkey. We're in the middle. We had 5,000 soldiers. They would have been gobbled up with two armies.
Okay, that is President-elect Trump addressing the nation from Mar-a-Lago ahead of his inauguration, which is less than 2 weeks away. We'll continue to monitor the remarks. Turning now to one of the biggest tech conferences in the world. Our next guest joins us from CES, where she says that the defining theme of this year is AI, everywhere and in everything. And it's getting better at anticipating your needs and making your life easier. Wendy Sheehan-Donnell, who is the PC Mag editor-in-chief, joins me now. Wendy, great to have you on the program with us. With the backdrop of CES there, why do you think that this is the definitive thesis statement for CES this year? Wendy, we're going to try and get your... Oh, there we are.
Hi, there I am. I'm so sorry. I'm so happy to be here. Thanks for having me. Yes, I have CES behind me, and it's so exciting because, yes, AI is everywhere and in everything, which was sort of the theme of CES last year, but it's a lot bigger and better this year.
So you've also highlighted 3 key ways that artificial intelligence will more often than not, and most certainly is expected to influence some of the major products that consumers are going to be buying into over these next several years here and might actually be put into consumers' homes here. So what are you anticipating there?
Absolutely. So we're going to see a lot of AI in your home. Samsung, for example, I saw yesterday showing an oven that basically has cameras and AI and uses it to see what's in the oven, helps you create recipes. A camera in the oven lets you see how your food is cooking, create a time-lapse video of what you're cooking so you can post it on social media. Hisense revealed a smart refrigerator that basically has a camera inside. And I don't know if your refrigerator is anything like mine, but it's very messy in there. But the camera uses AI to determine what's in there to create a shopping list for you and menus. Really exciting. One of the more fun things we saw yesterday was a robot vacuum from Roborock, which robot vacuums are very smart with AI now already. But this one has an arm that will, if it sees a sock or a small toy in front of it, the arm will pop up and pick it up, and you can program it to put it away for you, and then it continues cleaning your house the way that it would have. So smart home all over the house.
Sounds like our refrigerators have a lot in common, Wendy, and we're looking for a lot of these smart products for sure here. As you're thinking about some of these smart products, the price point, does it seem like we're getting any clear indication about how much this is going to cost consumers for these innovations?
Yeah, I mean, at CES, almost nothing comes with a price at CES, right? Because it's really early on. Some of these things will come out this year, and we'll be reviewing them on PCMag.com, and we'll have pricing, and we'll evaluate that in our reviews. But a lot of stuff is just here to show you how cool and exciting it is, and not to tell you how much it costs. But I will say, as AI, chips and AI gets more prevalent and chips get cheaper, things get less expensive. I'm not going to say that fridge or oven are going to be that cheap, though, honestly.
With all of this in mind, beauty and health tech has really taken more of the kind of viral moment or the virality at some of the years past CES. Have there been any of those key moments that you've seen really be talked about either on the exhibition floor or among some of the executives there?
Yeah, like the show's floor is not even open yet. It opens today at 10, but we've had a lot of press briefings and saw a really cool fitness mirror from a company called Withings. So you stand in front of the mirror, it's got sensors, it sort of sees what's going on in your body and tells you about your lung health, your heart health, how you're eating, how your general fitness is. And then it uses AI to sort of talk to you and give you plans, health plans. And also they see it as like, your doctor could eventually hook into this and help you, assess your health without having to go to the doctor. That was pretty cool. And another cool thing I saw yesterday from L'Oreal, which is, a middle-aged woman like me, kind of an interesting thing. It basically, it's a system that takes a swab, takes cells from your cheek skin, your skin on your cheeks, and tells you the sort of health of your skin and the products that you could use to make your skin less aged.
Interesting. Okay. All right. I might be a buyer of some of these things. Wendy, appreciate the early preview here. And of course, we're going to be checking back in with some of the updates from our own reporter out there at CES as well. Wendy, thanks for taking the time.
Thank you.
Certainly. Well, it may be cold in the Northeast, but that's exactly where the housing market is heating up, according to Zillow's predictions for the top 5 hottest markets in 2025. Zillow puts Buffalo, New York at the top of the list for the second year in a row, followed by Indianapolis, Indiana, Providence, Rhode Island, Hartford, Connecticut, and Philadelphia, Pennsylvania. Zillow's outlook takes into consideration several factors such as home value growth, the speed homes are selling, and job growth per new home permitted, and expected growth in owner-occupied households. Now, there was some potentially good news for buyers. Home value appreciation is set to slow down in 2025 compared to 2021 and 2022. But according to a new survey from Redfin, a third of current homeowners say they have no plans to ever sell their home. And over a quarter say they won't consider selling for at least 10 years. That, paired with high mortgage rates, mean potential buyers will still be facing a challenging market in 2025. Coming up, 3 bills you should review as part of your New Year's financial checkup. Plus, we've got some tips on lowering your household spending in 2025, one coupon at a time.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
A programming note. In this week's episode of Decoding Retirement, host Bob Powell speaks with Fritz Gilbert, who's the author of the Retirement Manifesto blog, about how to find purpose in retirement.
If you're in retirement, you've made it, you're successful, you've achieved it. It's a really good time in life to start looking at people that maybe haven't made it yet, people that are struggling, and finding a way to use your time to benefit those in need. That's a really rich area to look at, and that's what our charity focuses on. I would argue some of my writing focuses on that. It's people that haven't yet retired. It's a way to help people that are still trying to figure it out. That's others focused, right? So the more things you can find that are focused on others, that's generally a really a good path to look if you're trying to figure out what you want to do in retirement.
You can catch Decoding Retirement Tuesdays at 12 p.m. Eastern Time on Yahoo Finance or wherever you get your podcasts. A new year means a new budget, and our next guest recommends reviewing all of your monthly payments and seeing where you can trim. Joining me now, we've got Winnie Sun. She is the managing director at Sun Group Wealth Partners. Winnie, great to have you back on the program with us. You say that lay out these three bills that people could see some relief in, and streaming services, your Wi-Fi bill, and your cell phone bill. That's what you lay out here. Let's start with streaming. How can people cut back on their bills there?
Yes, Brad, thanks so much for having me. Streaming service. Yes, I say you want to embrace the toggle. And why I say this is so many of us have more than one streaming service. But as we know, life is really busy. We don't really have time to watch everything on one streaming service. So instead, I would suggest canceling one streaming service before signing up for a new one. And then instead repeat this every 6 months or at least quarterly. And you can just put this into your calendar 15 days prior to the monthly renewal date. And this will help you rotate your streaming platforms. You can actually decrease your streaming costs now by like 50% or more, depending on which ones you subscribe to.
And so how can you lower your internet bill? This is another key area that you focus in on.
Yes, absolutely. So often, internet prices will change depending what providers you have in your neighborhood. And a lot of internet and cable bills often include a lot of extra things that you don't really need. So first things first, you can research online to see what options are available to you in your neighborhood. You can also go to the company's online chat. This is one of my favorite things to do. Just jump in. You can be in your pajamas. Jump into chat and just say, tell me about any specials you have or anything that's available to me. And it doesn't hurt to ask. It might take you 5 minutes and that may give you a discount even for a few months. And that's great. And also think about downgrading to a cheaper plan if you're not really using your entire internet usage. So maybe your usage is lower and you've been busier at work or whatnot. You can always increase later if you find that it's not enough, but at least it'll save you some money in the meantime.
What about lowering your cell phone bill?
So this is a big one. Cell phone bills, we know, are often actually one of the culprits of being very, very bloated with unnecessary services. And so there's a lot of great discount plans available to you. There's budget-friendly options such as Mint Mobile. You've probably heard of the ads on that. But also prepaid plans is a sort of a sweet spot. A lot of times when people spend money on prepaid plans, they can save as much as $50 to $150 a month, depending on how much they use. And you should also take a look at this. If you just can't manage a prepaid plan, you can look at joining or creating a household plan. While many of these are considered family or household plans, most cell phone companies we have found are marketed as being for people living in the same house, but most carriers aren't really strict in terms of enforcing this rule, which means that you could actually join a plan with people who don't share the same residence as long as they're being considered part of your household. You just want to make sure that everybody is responsible and will pay their full share, but that's something you might want to consider if you have roommates, close friends, even extended family members.
All right. While we have you, Winnie, broad budget tips for the new year, what are they?
Okay, budget tips for New Year, probably the biggest one is go to your email account and unsubscribe to all those retailer emails. You don't need it, right? You don't need those sudden sales or coupon codes. If you need it, you can look for it in the future. You can be proactive on that. Really focus on needs versus wants. And most importantly, find a money buddy that you can talk money savings and lifestyle with, and that will really help you throughout the year.
All right, I'm going to get to a lot of those we hate to see you go response emails when I unsubscribe from all the retailers that I get the discounts from. Winnie, thanks so much. Appreciate it.
Thank you so much for having me. Take care.
You too. The number of digital coupon users is steadily growing in the U.S., according to data from Statista. The majority of Americans find their coupons either through email subscriptions or online searches. And our next guest is an online coupon hunter with more than 3.5 million TikTok followers. Kirsty Torak joins us now with her tips on couponing. Kirsty, great to have you here on the program with us. So where do you find your coupons? Let's start there.
So thank you for having me, first of all. Where you find them is pretty much on any store apps. You can pick your favorite store retailer, go into their app, and 9 times out of 10, there will be a digital coupon section. You'll be able to search the coupons for the things that you normally shop for or new deals that have popped up throughout the week. But every single platform, most of the time, 99% of the time, will have a digital coupon section for you to just clip coupons and save money at the register.
Okay, I'm learning a lot of new terms this holiday shopping and post-holiday shopping season. And I learned bracketing already, and that means essentially buying 3 of the same item maybe and then sending back 2 items that don't fit. But now I'm learning about stacking. What is coupon stacking?
Okay, so coupon stacking is just basically a term that we say to get the most bang for your buck by stacking multiple offers into one purchase. So what you're going to do is you're going to take a store sale, a coupon, a store reward, and then ideally a rebate, and stack all of those savings into one item to get that item for the cheapest price possible. It's possible at many Target, CVS, Walgreens. Because they offer store rewards on top of digital coupons, you're able to stack their sales with all of those offers to get things for oftentimes free or pennies on the dollar.
Okay, like free. So what are some of the most common items that you can kind of coupon shop for?
I mean, basic any household essentials. You're talking laundry detergent, paper products, toothpaste is always free, body wash, deodorant, all of the basic like household essentials and beauty items are going to be possible to coupon for a minimum of 50% off every week. The harder things to coupon for are going to be grocery items because those fluctuate in price. But I mean, anything that's not a food item is always, always, always going to be couponable every single week.
What are the best stores that you find kind of roll out the most consistent coupons that can be redeemed?
Yeah, so Target, always, every single week. CVS and Walgreens, really big into couponing. Dollar General, another great store, every single Saturday has a deal because they run their 5 off 25 coupon. All of those stores are constantly cycling new deals and new cycles for you to save with.
You know, while we have you here, and you may have heard our last guest say that it's time for me to unsubscribe to a lot of those retailers who send me the discounts and the deals that hit my inbox on far too frequent cadence, and that's for them to work on their email marketing strategy for. But me on the other side, I'm sitting here like maybe some of these will come in handy. I imagine that you might have a rebuttal to unsubscribing from all of those.
All of them, yes. I definitely think that the frivolous spending, 100% unsubscribe from the frivolous spending. But if you're talking about groceries and household essentials, those are things you're going to buy anyways. So why wouldn't you want to save on the things that you have to buy? Don't unsubscribe from places like Target, CVS, Walgreens, Dollar General. They're going to give you their weekly ads and their coupon deals every single week right to your inbox, so you don't have to go searching for them. But I 100% agree. Please do not go unsubscribe from the things that you should unsubscribe from. But, you know, necessities are necessities.
Certainly. Just lastly, while we have you here, if someone was to set a goal for how much couponing could or should save them in 2025 and hopefully stick to that goal, what percentage is a good kind of just, you know, marker to put out there for their own way of thinking and perhaps applying to their smart spending?
I would tell you can cut your budget in half every month if you just start couponing. My mom always told me life by the inch is a cinch, life by the yard is hard. So if you start small and you kind of snowball it throughout the year, you're going to see bigger savings as you go. But if you're just looking for a coupon, take 5 minutes before you get to the register and scan your items in your cart, see if any deals and offers are available. You're going to save money 99% of the time, and it took you 5 minutes to do it.
All right, ask your mother if we can borrow that quote. We will have to fire up the Yahoo Finance t-shirt maker. Kirsty, thanks so much for taking the time.
Thank you for having me. I really appreciate it.
Likewise. President-elect Donald Trump is speaking live at Mar-a-Lago. He is just about 2 weeks before the inauguration, and he announced Dubai-based property development company DAMAC is investing about $20 billion in the U.S., and the money will go to building new data centers across the country. Trump explained the first phase of the plan will take place in Texas, Arizona, Oklahoma, Louisiana, Ohio, Illinois, Michigan, and Indiana. The president-elect also commenting on the state of the economy. Take a listen.
Inflation is continuing to rage, and interest rates are far too high.
Yahoo Finance will be doing special coverage of the inauguration on January 20th, so stay tuned for that. Let's do a final check of the markets with the time that we have left here. We're taking a look at the major averages on your screen. Don't worry, we'll get them loaded back up. Fractional declines for the Dow and the S&P 500. And the NASDAQ, you're seeing that down by about 1.5% as of right now. Of course, we're continuing to keep close tabs on any comments that are coming out of the Consumer Electronics Show in Las Vegas. That's where Jensen Huang, the CEO, took the stage last night, certainly got a lot of juices fired up and flowing, and that is playing out in Nvidia shares here on the day here as we've been tracking shares of NVDA. As of right now, I'm taking a look at the stock actually down by about 5%, even though we did see a new all-time high here to begin today's trading session. We have moved off of that. That's it for Wealth, everyone. I'm Brad Smith. Thank you for watching. Stay tuned for Market Domination. That comes up 3 p.m. Eastern Time.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Decoding Retirement. Hi, I'm your host, Bob Powell, and today we're going to go behind the scenes with Fritz Gilbert. He is the author of Keys to a Successful Retirement and publisher of the Retirement Manifesto blog. Fritz, welcome.
Thank you, Bob. I'm honored to be on with you.
Oh, it's a pleasure to have you here. I want to start here. I often say to people that they need to retire to something rather than from something. So let's do a deep dive into this topic of what makes for a successful transition to retirement. Is it really having something to retire to as opposed to being something to retire from?
Yeah, that's, it's an often used phrase, and I'm 6 years into retirement now, and I've certainly found things that I've retired to. I don't know that it's necessary to have those things identified before you retire, but one of the things I did, which I think is relevant, I was really interested as I started writing about why do some people have a good transition and other people struggle? And the number one thing that I discovered in my research is the highest single correlation to that success is how much time you spend preparing prior to retirement, not only on the financial elements, which is kind of obvious and everybody does it, but not as obvious is the non-financial side. And the more time you spend planning for both of those, not necessarily getting the answers, but recognizing the need to think about it, the higher the chances are that you'll find those things in retirement that will bring you the sense of fulfillment that you're hoping to have in retirement.
Yeah, I think one of the things that you've mentioned in the past, at least to me and perhaps others and as well as in the blog, is that thinking retirement is a financial decision. And I recall you and I talking at one point where you said something like, before retirement, you used to think about money 90% of the time, and now that you're retired, you think about it only maybe 10% of the time. Talk more about that.
Yeah, that's right. And yeah, I call it the 90-10 rule. And I had heard that before I retired, and I was a real money nerd. I had all the spreadsheets. I'd been tracking this stuff for years. I was really focused on the numbers. And I thought to myself, Bob, there's no way that's going to happen to me, right? I'm a numbers guy. I'm a spreadsheet guy. But it did. And it's really surprising. I think as you get into retirement, and there's a transition, it takes, let's say, a couple of years until you're finally settled in and you're used to having your paycheck system set up. I use a bucket strategy, but whatever system you set up, you start learning to live with it. You've got what you've had a couple of years of market returns. You've maybe dealt with a bear market. You start realizing, we're going to be okay. And you get used to it. And as that transition happens, you find yourself thinking less about the money because you've kind of worked through the kinks and you know what you have to spend, and you start thinking about, what am I going to do with my life? What's going to get me that fulfillment and that excitement every day? And it's not the money, right? The money is a means to an end. But as you get into the retirement, you start looking for the end in itself and not just the means. And it's a mental shift that I was not expecting. It was one of my bigger surprises. But it's not just me. I've talked to a lot of people that have gone through the same transition. So I think it's a pretty common reality that you do worry about it a lot less after you settle in.
Yeah. So before retirement, many people, their identity is all about their work. Their work is their purpose. But in retirement, they have to replace that with other non-financial benefits. So how can they replace what you've described as the big five, their sense of identity, the structure, purpose, sense of accomplishment, and relationships?
Exactly. And what I encourage people to do is think about, when you're leaving work, you think obviously about the paycheck. What is not as intuitive, but I would argue is equally important, is all of those things you just mentioned. You're getting those from work. And the minute you walk out that door, all of those things disappear. And a lot of people, there's 4 phases of retirement that's going around, and phase 2 is where you kind of struggle. And that's when you're starting to recognize that I've lost these things that I had at work, and I haven't even structure. You think about, your day is set up, your schedule is set up. You get up at a certain time, you go to work. Suddenly you have no structure in your life. You think about your sense of purpose. You had deliverables that you were working on. You had that sense of accomplishment. You get the little pat on the back when you did a good job at work. Those are all gone. And this goes to that planning that I talked about earlier, thinking about how you're going to replace all of those things beyond the paycheck and start developing. And in my case, I started writing my blog 3 years before I retired. Why? It was just something that I was interested in. I was looking for things that could potentially develop into things that give me fulfillment in retirement. So I pursued it. I took the first step. I explored it. And what is that giving me now? It's giving me a sense of identity. I'm a writer, right? It's given me a sense of purpose. I see the feedback from people that I'm helping as they're trying to figure out their journeys. It's given me some structure to my day. You know, I write for a certain amount of time. It's fulfilling. It's mental stimulation. So think about all those different things that you get from work. And if there's something that kind of intrigues you a little bit, it's learning to listen to that curiosity. You know, pursuing our curiosity is not a skill set that we've exercised for a long time. So it's rebuilding that muscle and learning to explore and just have fun with it and recognize you're going to try a lot of things that aren't going to work, but look at relationships. What are you going to do to replace your work relationship? You're going to be, if you're married, you're going to be with your spouse a lot more. Okay, that's, you know, we could talk hours about that. But it's also, how are you going to start building relationships in your last couple of years of work outside of your workplace so you'll have those relationships in place, right? You can go through each one of those 5 and kind of go through that mental process and then just start exploring and start pursuing things that interest you is the best way. It's a serendipitous process. It's not a spreadsheet, but you get better with it in time.
Yeah. Fritz, you mentioned something that I think may be lost on some people, which is this notion of you began 3 years before retirement, this process of trying to find another purpose, another identity. Most people I talk to, sometimes they get to retirement and then start thinking about what to do, not necessarily 3 years in advance. So in a way, you sort of test drove retirement. Is that sort of the key to success here too? Is that you think about it long in advance, far in advance?
It certainly helps, Bob. You know, it's been demonstrated that the more you do in advance in terms of this planning, the smoother that transition will be. Now, you're right. Most people don't recognize this, right? Most people recognize the financial need. Some don't even recognize that, let's face it. But most people recognize the financial need, but very few recognize these non-financial elements. So it's okay to wait until you retire. It's just going to you're going to go through those periods of, let's say 6 to 12 months. And I hear from leaders all the time that are in this phase where they're a little bit disjointed. They just don't quite feel right and they're not sure why. That's kind of the type of symptom that you'll typically see. You can get into depression, right? The odds of depression post-retirement are like 40% higher than when you're working. So people go through an adjustment period, and that's okay. If you haven't thought about it, you can still work your way through it. Most people get through it. It's fine. But it definitely helps if you can think about these as you're doing your retirement planning instead of waiting until after you've retired.
Yeah, and you probably have spoken to the same type of person who maybe they've retired, they haven't thought about it, and then after they've retired and they get, for whatever reason, they haven't figured out what to do. And then they go back to work doing the very same thing that they left because they couldn't find a sense of purpose or fulfillment in retirement because they didn't spend the time thinking about what to do.
Exactly. And in my mind, there's nothing wrong with that, because if you go back to work, you will find those, let's just say 5 and make it simple. You'll find those 5 things that you don't realize you're looking for, and it solves it. The sad part to me, Bob, is you don't have to go back to work to meet those. I'm a perfect example, right? I've said I'm not the person I used to be, but I love the person I've become, right? My sense of identity is totally different, but I'm getting that same fulfillment I got through work, but I'm getting it through means that are 100% flexible. There's things that I know I love doing. I'm not under an obligation because it's all, freedom of time, freedom of choice type of activities. So it's okay to go back to work. But I really encourage people, don't make that the default. Try for 6 months to a year to explore some other avenues before you I'm just going to go back to work. That's okay if you can't find them any other way, but don't make that your default.
Yeah. So we've talked about the non-financial aspects of a successful transition. The financial part of retirement is knowing that you have enough to fund your desired standard of living for perhaps as long as you and your spouse will live in retirement. Just talk for a moment a little bit about how do you know you have enough, Fritz?
Yeah. Well, I tell you one thing, Bob, that people don't do as often as they should. We never tracked our spending. We saved aggressively. We knew we could spend the rest. So we if it was in the checking account, we could spend it because we knew we were saving off the top. And that's just the way we lived, and it worked fine for us because we were saving first. You can't go into retirement without having a good baseline of spending. That's, it's a math problem ultimately. And the more variables that you can eliminate, the better your plan will be. So we tracked everything we spent. We tried to do it for a year. We made it through 11 months. Literally every receipt, I'd stick them in my pocket. I'd put it in a spreadsheet. And we had a really solid foundation on our actual spending while I was still working. And then we set up a column and said, okay, now how's this going to change when we retire, right? We're going to downsize. We're going to sell the big house. We're going to move to the cabin. Okay, we'll get rid of the mortgage. Our taxes will go down, but we want to travel more. So we're going to have to buy the RV. We're going to, we literally went through line item by line item and talked about how it was going to change. So getting to know your spending as close as you can is a very fundamental first part. And then, if you think about the 4% safe withdrawal rate, you basically say, okay, do the inverse of that. It's 25x. So you know what your spending is going to be. You can look at your known sources. Maybe you're going to be pulling Social Security. Maybe you have a pension. You can look at the gap that you need to fund from your portfolio and just multiply your portfolio that's liquid. You don't want to include your house equity or your cars, but your spendable assets. Multiply those times 4%. See how it compares to that estimated spending number. And if it's as a rule of thumb, if it's close, okay, I'm going to be able to make it. If it's nowhere near, you've got to work a couple more years or reduce your spending. So it's basically using the 4% rule as a guideline.
And this is something obviously you can do on your own with a retirement calculator, or you can do it with the help of an advisor. You did it on your own, if I'm not mistaken, right? You were a do-it-yourselfer.
I am, and I'm okay with that because I'm very comfortable. I've been doing personal finance my entire career as a hobby. If it's not something that you're comfortable with, this is an important enough area. I totally support the financial advising community in this area in particular because it's such an important decision. You don't want to make a mistake. So you can pay for a one-time checkup if you want to. If you're still kind of DIY, but you want to make sure there's no blind spots, pay to have somebody do a retirement readiness review. Get a second opinion because this is an area, it's really not a good place to make a mistake.
Right. All right, Fritz, we have to take a short break. And when we come back, we're going to talk more about what you've learned since you've retired. But first, we're going to take a reader's question in a segment that we call Ask Bob. And the reader's question goes like this. Is it possible to use a QCD with retirement accounts such as a 401k, a 403b, or a 457 plan? And the answer is it's not possible to use a qualified charitable distribution or QCD directly from retirement accounts such as a 401k, 403b, or 457 plan. QCDs are only available for traditional IRAs. Welcome back to Decoding Retirement. I'm talking with Fritz Gilbert. He's the author of The Keys to Retirement Success and the publisher of the Retirement Manifesto blog. Fritz, I want to switch gears. Since you launched your blog, which we've talked about a little bit, you've written 400 articles, and in that time, I'm going to just laundry list the things that you've learned, and then you can talk more about them in more detail. Retirement is complex. Retirement can be difficult. There are proven ways to make it easier. Retirement changes with time. Retirement can be the best phase of your life, and adaptability is critical and can be learned. So
that's it in a nutshell. Yeah, I had fun writing this article, Bob, because it really gave me time to pause and reflect and go back. And I started 3 years before I retired. So the way I put it in the article is 3 years we're preparing for retirement, 3 years we're making the transition, and 3 years were, hey, I've kind of figured this out and it's getting good, right? So it's kind of nice how it's split up into thirds. But those were really the things I took away from it in terms of the key learnings. And I think the one that we talked about it earlier, but I'll reiterate, is that there are proven methods to make it easier. I hear from retirees all the time that are struggling, and don't take the time to learn from people that have gone before, right? That's I'm getting a purpose from this blog now because I'm helping people that are trying to figure this out. We're all on this journey together, and looking at people that have had a successful transition, which is what I did, right? I studied them before I got there. Now I'm writing about it so people can study what I've written. Learn from people that have had a successful transition and apply those methodologies in your own retirement planning is probably the biggest thing I've learned. It's a repeatable process that's demonstrated to have a success. So that's probably the biggest one. Is there are ways to do this, and if you're struggling, find people that have done it before you and replicate some of the things that they're doing is probably the biggest learning I've had.
Yeah. So that's comforting and reassuring. But you also said at the beginning that it's complex. And one of the things that I've said when I've given speeches, I sort of start my speeches by saying retirement, it's complicated, it's filled with contradictions, and it's changing all the time. And I highlight, for instance, the new laws that come into play, the new regulations that come into play, the new products, the new research. And in order to be successful at retirement, you have to sort of take all this complication and maybe simplify it. But talk for a bit about how complex it can be and how difficult it can be.
Yeah, and I think most people, when they think about that, as I did, you think about the financial difficulties, right? How am I going to do Roth conversions? How am I going to start paying estimated quarterly taxes, right? There are so many financial complexities, and you're right that those change all the time. You've got to pay attention to it. If the tax rate changes, what does that do to your Roth conversion capability? If you're planning on having subsidized ACA healthcare because you're not yet 65, how does a Roth conversion affect your eligibility for subsidies, right? There's a lot of stuff there. But I would challenge people that the real complexities are on the non-financial side, which aren't intuitive. And that's those things we talked about earlier, replacing those 5 other things you got from work and finding your way through that. I've written 400 articles and I still have 400 articles in my head, right? There's so much content here because it's a challenging change. Change is hard to begin with. And retirement is one of the biggest changes you'll face in your life. So I think don't just say, oh, I'm just going to retire and it's not a big deal. It is a big deal. And it's a big deal financially, so get help if you need it. But it's also big on the non-financial elements. So don't just assume it's going to be fine. I'm just going to take vacation and play a lot of golf and lay on the beach. You'll be bored in 6 months and you'll be like, this isn't what I expected it would be.
Yeah. As you think about what you've learned, talk a bit about retirement is a household decision. It's not just you, it's you and your spouse. And for others who may be in a similar situation, there are couples that we're talking to today. And how does that change the picture?
Yeah, and I wrote a chapter in my book about this, and this gets into the relationship side as well. It's really important. People think it's the biggest changes for if you got a non-working spouse, which I did, my wife was a caregiver for her mom, she had Alzheimer's, etc. It's as big a change for them as it is for you. And I've had a lot of reader emails back and forth on this as well. What I really encourage people to do is spend some time with your spouse. In our case, we took kind of a mini test retirement. We took 10 days over a holiday. We came up to the mountains, which is where we've retired, which is where I'm at now. And we were still living in the city, but we came to the mountains for 10 days and we said, look, I'm going to try, it was over a holiday. I'm going to try not to do many emails and let's just spend this time not pretending we're living in retirement. It's not like, oh, it's Tuesday, so let's go kayaking. It's Wednesday, let's go hike. It wasn't tactical. It was more philosophical. Hey, what do you want out of retirement? I talk about he time, she time, and we time. Talk about how much time do you want to be able to go play golf with your buddies without, feeling guilty about it or without her getting upset? How much time do you want her to be able to go out and have lunch with her friends or go do something that she enjoys that you don't really care for? That's fine. You should both have the freedom to do that. But there's a lot less conflict if you've talked about it beforehand. So you both kind of know, hey, do you want to travel or do you want to be more homebound? What kind of travel do you want to do? Should we get an RV or do we want to do one big international trip every year? Getting the input from both sides is really important, because then when you get into it, you've got enough other adjustments you're going to be making already to at least have had time to talk about it beforehand and understand the expectations of both people going in. It really does help with the transition, and then have ongoing regular conversations. Carve out time to go have a nice dinner date and just talk about, hey, how's it going? Are you happy? Or my wife discovered this charity work, and that was kind of that was one of those cases where she had been a caregiver for her mom. Her mom passed away, and neither one of us really appreciated how big of a change that was going to be in terms of her having a purpose and these things we talked about, the non-financial elements. She was getting a lot of those by giving care to her mom.
So in the blog that you wrote where you sort of recapped the 400 articles, you also mentioned some of the biggest surprises. Retirement is nothing like I thought it would be. I'm not who I used to be. Spending money is hard. Mindset matters. Focusing on others is more rewarding than focusing on self. Talk more about that in the time that we have left.
Yeah. Boy, I could talk for hours about this stuff, Bob, as you know, but I think nothing like I thought it would be. I think that's an interesting one. I thought a lot about retirement, and I wrote an article 3 months before I retired called The 10 Commandments of Retirement. And it was my mindset going in, have an attitude of gratitude, find a way to give back to others. It was kind of more mental. What's my approach going to be? I want to make these the best years of my life. So what's my mindset going to be going into it? And those have all been spot on. That's I wrote an article, Retirement is nothing like I thought it would be. The byline was, retirement is exactly like I thought it would be. And the part that was exactly like I thought it would be was the mindset stuff. I'm going to pursue my curiosity and explore stuff. I've done that. But the places it's led, this building that I'm in now, this is my writing studio, and I've got a woodworking shop on the other side of the wall. I never would have had that on a list of things I would have done in retirement, right? To have a woodworking shop. I wasn't into woodworking, but that came as a result of the charity. So the places that mindset has led me is where those biggest surprises were, but it's also where most of the excitement's been, right? So that's one of them. I think the other one that's good to talk about is spending money is hard. This is a real problem. There's just a study that came out from Alliance, and they found that 48% of Americans are concerned that they're not spending as much as they could, and they're being too frugal because they're afraid of running out of money. It's a real problem, and people don't think about it, but it's hard to think about that nest egg that you've got is going to last. That's what you've got for the rest of your life. So it's a very common tendency to continue to be conservative, underspend. You can determine how much you can safely spend. And in my case, we've set up this bucket system where that amount flows every month into our checking account. And if there's money in our checking account that starts to grow, my wife and I have said, look, if there's money in there by the end of the year, we're giving it away. We're forcing ourselves to spend because it's hard to make that shift, especially if you've been frugal through your career. So don't be surprised if you find it hard to shift from a life of, being pretty conservative and frugal to knowing you can spend this money, but still struggling to spend it. That was a surprise for me, but it's a common surprise. So I think that one's relevant. And then the last one I'll say, if you're really struggling with trying to find your purpose and you're in this stage 2 kind of confusion, you're not really sure what you're going to do, I really encourage people, your whole working career, by definition, you've kind of had to be focused on self, right? You're trying to get this promotion, you're trying to do good at work. Well, if you're in retirement, you've made it, you're successful, you've achieved it. It's a really good time in life to start looking at people that maybe haven't made it yet, people that are struggling, and finding a way to use your time to benefit those in need. That's a really rich area to look at, and that's what our charity focuses on. I would argue some of my writing focuses on that. It's people that haven't yet retired. It's a way to help people that are still trying to figure it out. that's others focused, right? So the more things you can find that are focused on others, that's generally a really a good path to look if you're trying to figure out what you want to do in retirement.
Fritz, this won't be the last time that we have you on as a guest on Decoding Retirement, because there's more wisdom for you to share. And but in the meanwhile, I want to thank you for joining us today and sharing that knowledge and that wisdom with our viewers today. It's so greatly appreciated. And I do want to sincerely say it's wisdom that you're sharing. And I think that's just a higher level of discussion that we've been able to help people sort of have your wisdom put on display.
Well, Bob, that's a sincere honor to have you say that, and I really do appreciate it. I respect your work as well, and I really appreciate the honor of being on your show. Thank you so much.
Thank you, Fritz. If you've got questions about personal finance and retirement, I'm here to help. You can email me at askbob@yahooinc.com, and we'll do our best to answer your question in a future episode. So that's it for this week's episode of Decoding Retirement. We hope we provided you with some actionable advice to help you better plan for or live in retirement. And don't forget, for the latest retirement news and expert analysis, visit yahoofinance.com.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.
Let's get you the 3 things that you need to know today.
Good morning, everyone. First up, Nvidia shares power higher today after its CES announcements here. CEO Jensen Huang took to the stage in Las Vegas to unveil a new slew of products and partnerships. The biggest takeaways include the reveal of a new AI superchip, gaming graphics cards, and a new Cosmos platform for developing physical AI systems like robots and self-driving vehicles. Micron, Uber, Toyota, and Aurora are just some of the companies that stand to benefit from last night's announcements. Shares of those companies pushing higher today.
Plus, the U.S. has blacklisted gaming company Tencent and Tesla battery supplier CATL for alleged links to China's military. Shares of both companies slumping following the news and the decision threatening to escalate tensions between the world's 2 largest economies. Both companies protested their inclusion as a mistake, saying that they have no ties to the Chinese military. Tencent stock slid more than 7% in Hong Kong. That was the biggest drop that we've seen since October.
And Bitcoin retakes 100,000 for the first time in 2 weeks. The digital token powering higher after the certification of Trump's presidential win, with investors expecting regulatory reforms that should benefit the digital asset industry under the new administration. Bitcoin's record-breaking run in 2024 ran out of steam in late December, though, as investors looked to book profits amid a rally that took the token to $108,000 amid post-election optimism.